Good morning, everyone. I'm Alexis Christoforous.
And I'm Brian Zazi, and this is the first trade for Friday, January 3rd.
Futures plunging this morning after a U.S. airstrike kills a key Iranian general in Iraq. The U.S. says it was necessary to protect American troops, but Iran is now threatening what it calls a crushing response.
And the airstrike is sending shockwaves through the markets and through world capitals as investors try to make sense of what comes next. That's even as Secretary of State Mike Pompeo says the U.S. remains committed to de-escalation.
That airstrike is sending markets reeling today, and that is our big story.
Iran is warning it will avenge the killing of one of its top generals after a U.S. airstrike killed a leader of the Revolutionary Guard. And the markets are reeling from this major ratcheting up in already tense relationships with Iran. Futures are rebounding off their lows, but they are low nonetheless. Oil is spiking now amid growing worries this could escalate into all-out war, with the president tweeting a short time ago, quote, Iran never won a war, but never lost a negotiation. Senior columnist Rick Newman is with us, and Jared Blickery is at the Wi-Fi Interactive Board. Good morning to you both. Rick, what's the ultimate risk here from an event like this?
Probably prolonged conflict in the Middle East, which we're going to have at a higher level now than we probably would have had otherwise. I do not think it's likely we're going to see a conventional shooting war between the United States and Iran. Iran cannot match the United States missile for missile, tank for tank, and they know that. So a lot of people are talking about what if Iran tries to close the Strait of Hormuz, where so much oil flows out of that region. I think Iran is very unlikely to do that because it can do that for a while, but the U.S. Navy and allied navies would be able to reopen the strait. I just don't think they're going to pursue some kind of traditional approach like that. What they will do is conduct what the Pentagon would call asymmetric warfare. That's surprise attacks, stealth attacks, things you don't see coming.
Cyber attacks? Cyber attacks,
things that cannot necessarily be traced directly to Iran. They could be anything, and one reason this puts a pit in my stomach is this could be terrorism against airplanes or things like that we've seen in the past. They could definitely target civilian sites, and they could do that well outside the Middle East. So that suggests that this is not necessarily all going to play out in the next couple of weeks. This is not going to be clean and tidy. It's going to be messy, and it could go on for a long time.
And you mentioned airlines. The airline stocks are actually much lower today as well. We're seeing oil rally, though. No big surprise there. Jared, what are you keeping your eye on today? How are the markets reacting?
Well, we're looking at crude oil. It's up 3.5%, really big spike, and we can see this in the overnight price action. There was the initial reports of the attack, and here is the follow-through, hitting $64 a barrel. Haven't seen that in a long time. In fact, you'd have to go to April of last year. So this is a higher price than it was when we had the Saudi Aramco drone and missile strike, and that was in September of this year. It spiked up to about 62 briefly. But as you recall, the next day, oil settled back down, and as became apparent that the facilities would be cleaned up and put back into production, oil actually dropped quite low in price after that, all the way to about $52 a barrel. We can also take a look at what stock futures are doing, and we'll take a look at our map of the world here and see just exactly how equity prices have been hit. We can see Asia down, except for the KOSPI, that's up just nominally, but in Europe we have the DAX down about 1.33%, CAC 40 down in Paris, London, the FTSE is down just nominally, but the real damage is done here in the U.S. We can look at S&P 500 futures. They're down almost 1% from yesterday's close, which was a record, by the way.
Rick, this could really dent the investment thesis on this bull market where everything is okay, global growth reaccelerates this year, and we're off to the races.
It could, but we've been through many periods of hostilities in the Middle East, whether it was the first Iraq war, the second Iraq war, things that have happened intermittently since. And the global economy remains pretty well insulated from this. Oil is not the same as it was, let's say, 10 or 15 years ago because of fracking here in the United States. There's a lot of additional supply on the markets, which is why we have not seen oil. If this happened 10 years ago, we would see oil over $100 a barrel for sure. So now it's maybe headed towards 70. You have to ask yourself, what is in Iran's interest? And they benefit to some extent from higher oil prices. but they also need to be able to sell their oil to places that are buying it. So I think we're going to be okay here. I mean, this could escalate further, and I don't think it's going to be a takedown of the global economy. It's just this is going to be very unpredictable, and it's not going to go the way that, you know, sort of the armchair analysts are plotting it out with their on their little map of the Middle East. It's going to be very unpredictable, and think about soft targets. I mean, that's what Iran is likely to go after, which is more civilian-type targets than military.
Does this now take precedence for investors over impeachment, over the trade war, over growth globally?
Investors have to factor in all of these things, obviously. It's a multivariable equation. If there's any good news, impeachment has not really been a factor for the market. We've talked about that a lot, and we've seen that. Trade remains a factor for the market, and this is another factor. And when you talk about what you know, we've been talking for a while now, what could cause the next recession, and it may not be one single giant thing like a housing bust we had the last time around. It could be a confluence of a few lesser things that you add them up, and they just depress confidence, they just depress growth enough to maybe tip it over. I don't think that's necessarily going to happen here, but this is a warning. This is going to weigh on markets and the global economy for months.
Jared, back to you. Oil stocks, some of the hottest trending tickers on our site right now.
As you could imagine here, we have Exxon up about 0.5% in the pre-market, along with some of the other majors. Chevron is up about 0.8%. And then some of the smaller guys, here's Occidental Petroleum, they're up 2.25%. And just a lot of movement to the upside in these stocks. We saw the same thing happen with that Saudi Aramco strike in September, but those gains were only short-lived. As the price of oil recovered, well, actually fell because of the spike to the upside wasn't sustainable. We saw those stocks fall as well. And we can also take a look at some of the airline stocks in the NASDAQ 100. We can see American Airlines down about 0.5% here. Just overall, a lot of stocks off. The green coloring you see is based on the close yesterday, but you'll see even Amazon is down over 1%, Apple's down nearly 1%, Microsoft as well, and Alphabet. So kind of a risk-off mood here to begin the morning.
Yeah, broad-based selling for sure. With the heightened risk now in the Middle East, Rick, is this going to be, are we going to see calls for a heightened budget defense? Are we, a defense budget? Are we going to see Democrats sort of hone in on that during an election year?
I don't think so. I mean, we just had a big boost in defense spending, and defense spending is up quite a lot under Trump. And besides, I'm sure the Pentagon has all the tools it needs to deal with whatever develops in the Middle East. We're not talking about hundreds of thousands of ground troops, unless you're in a ground war with Iran, which frankly would be a complete disaster. And I don't think anybody thinks the U.S. is going to stumble into that. There is a real question about how did the Democratic presidential candidates play this. So the storyline we've heard out of Joe Biden, for example, Joe Biden knows a lot about this, is, look, Soleimani, the guy that this strike hit and killed, he was a bad guy, but this was a fairly rash way to go about it. And has Trump thought through the consequences? Possibly not. He said Trump has thrown a stick of dynamite into a tinderbox in the Middle East, and he might not be wrong about that.
Well, Trump is saying he had to make these moves, though, because our armed forces were going to be hurt there.
If that's the case, then you certainly have to do something. But whether you do a high-profile assassination of somebody who's essentially the number 2 or 3 official in Iran, I mean, that's equivalent to the U.S. Defense Secretary or the U.S. CIA chief. I mean, this is a super high-profile thing to do. It puts Iran in a position where it must retaliate, or it loses face in the Middle East.
All right, Rick, thanks a lot. Straight ahead, we're going to have more on what the U.S. airstrike in Iran means for investors. Stay with us. We'll be right back. Let's talk more now about today's big news. Futures sliding today after a U.S. airstrike killed a top Iranian general in Iraq. Anthony Chan is the former chief economist at J.P. Morgan Chase. Good morning. Good to have you with us.
Good morning, Liz.
Is this a game changer for the markets early here in the new year?
I think it's a little too early to say it's a game changer, but certainly is something that shocks the market because we know markets don't like uncertainty, and this introduces a whole new array of uncertainty. For example, if Iran decides to hit some soft targets, then of course consumer sentiment can drop. And right now, who's the star performer in the U.S. economy? It's consumer spending. And historically, when consumer confidence goes down, it may not have a one-to-one mapping, but it certainly doesn't help consumer spending. It could actually weaken it a little bit.
Still in the early stages, Anthony, but doesn't this dent the thesis that out there on Wall Street that the U.S. economy is going to reaccelerate in the first half of this year?
Well, I think that if this sort of comes to fruition, right now it's too early to say whether or not we sort of have this event and then we move on, or is this going to be escalating to something else? If we get a diffusion of these tensions over the next couple of weeks, then it'll be fine. The acceleration of growth continues, but if we see an escalation, that certainly puts that theory into some sort of question.
If we do see an escalation, will the Fed have no choice but to ease even more, especially if the credit markets start to seize up?
Well, I think the Fed has made it clear what their playbook is. If there's anything out there that threatens the economy, and because inflation is not zero, but it's not above their threshold, of course they will
and
act
how would
accordingly.
this affect the economy in the way that because oil is surging so much? Would that be the correlation?
Well, remember that oil has less of an impact today than it did 20 or 30 years ago because we produce some of it, but that doesn't mean that it has no impact. Higher oil prices will in fact cause consumers to cut back on other purchases of other products. So it will have an impact, but it doesn't have as much of the same negative impact that it used to have because we benefit, the U.S. economy does benefit from higher oil prices.
What's the ultimate risk to global growth? Let's say if this does reach war level. One note I saw out this morning looks like a maybe 0.5% impact to global GDP.
Well, I think it does because it depresses business sentiment, to some extent consumer spending all over the world. So it will have it's not a positive impact on global economic growth, the same way it's not a positive impact on the U.S. economy. So yes, it will dent economic growth, but only if you see an escalation. Right now, when you look at the equity market and you have forward price earnings ratios in the 18th level, 18-ish numbers, of course, these stocks are vulnerable because price earnings ratio is so high. We know that they're high because of interest rates being so low and the Federal Reserve being friendly. But if all of a sudden you introduce some uncertainty, you may see a recalibration of those price earnings ratios.
I don't want to discount how the market opened the year yesterday. That was a strong, powerful move. And I would have thought after the news we got overnight with regards to this attack, we would have seen futures decline even more. What do you make out of the reaction to the start to the year for trading?
There's so much momentum, positive momentum, that the economy is going to do well, that even this sort of uncertainty is not being met with a roaring decline relative to what happened yesterday. So far, the futures markets are not even declining as much as they increased yesterday. So to some extent, we're seeing a muted response, but that's because the markets really don't know whether this is going to be escalated or not.
So given the fact that we don't know, what is an investor to do? Does this investor leave their portfolio as is? Do they start making changes? Do they go more defensive? What do they do?
Well, again, when you look at the market and see the huge run up, it's never a mistake to take a little bit off the table. Doesn't mean that 10 years from now the equity market is not going to be higher. Of course it's going to be higher. But even if this didn't happen, we know that at some point you're going to have some sort of a correction. In a typical year, you see a correction of somewhere in the 14% range, even if nothing bad happens. So when you have a catalyst for a correction, that's another factor that should make consumers a bit more cautious. Mm-hmm. But remember, as economic expansions lengthen over time, research that I've done finds that the volatility of growth actually goes down, which, by the way, is a positive for investors right now because they have less uncertainty with regard to economic growth.
We'll have to leave it there for now. Anthony, stick around. We'll talk to you very soon. We'll go down to Wall Street and get some thoughts from traders on the U.S. airstrike in Iraq. That's up next. Welcome back to the First Trade. So, Alexis, it's pretty interesting to see, we were just talking to Anthony Chen, to see the futures not decline as much as you would think. And for me, at least, really indicates a strong bid remains in this market.
Yeah, it looks as though we've given back, though, nearly all of yesterday's gains, about all of yesterday's gains when we opened the new year at a record high. And this really could be, investors who have been complacent. Something like this geopolitical event causes a sell-off like we're seeing, possibly a knee-jerk reaction. Is it more than that? Let's check in with Inez Ferre, who's down at the New York Stock Exchange. She has got trader Tim Anderson with her for a little more insight on how the market is viewing all of this. Good morning, Inez.
Good morning, Alexis. Tim, we're seeing that futures are off their low, but nevertheless still in the red right now. Is this a potential curveball? Is this a monkey wrench in the markets if this escalates into a confrontation?
Well, if this would escalate into a protracted confrontation between the U.S. and Iran, clearly that may affect some investors' viewpoint for how the whole year might play out. I think that's a very unlikely scenario. We still may see some one-offs back and forth a little bit, but I think that investors are just more likely to brush off the spike in oil that we're seeing today. When the Iranians hit the Saudi oil facility a few months ago, oil spiked 5% for one day, and a few days later it was lower than where it began. And also we've got some very important economic data coming out over the next few days, the next week, and the earnings season that's going to start in about a week and a half will get a tremendous amount of focus from investors as to what guidance companies give, given that a lot of the trade tensions we've been dealing with for the last 18 months seem to be lessening.
Just sticking with oil prices for a second, I was just talking to one of your oil experts over there. He was saying that one of the big fears is that if Iran retaliates, the U.S. then could target their oil facilities, or Iran could also cut off the Strait of Hormuz, but that would annoy China. So do you see those scenarios happening?
Well, China is Iran's biggest customer for oil right now. Almost all the oil that goes through the Strait of Hormuz goes from Iran to China. So they would probably do that maybe as a last resort, because it really just hurts their relationship with China. In terms of us hitting one of their oil facilities, I have no idea. Of course, the administration is always going to say that nothing is off the table, but I would think that that would be well down the list of likely scenarios.
Thanks so much, Tim. Alexis, Brian?
All right, Inez and Tim, thank you so much. Stay with us. Your news bites are coming up next. Let's take a look at today's News Bites. A jet company based in Turkey has filed a criminal complaint saying Carlos Ghosn illegally used its jets to escape Japan. Ghosn's private plane stopped in Istanbul on its way to Beirut as he fled house arrest in Tokyo. The jet company says an employee falsified documents on Ghosn's behalf. Meantime, Japanese media says surveillance video shows Ghosn walked out of his Tokyo home and was not smuggled out in an instrument case, as was previously reported. The U.S. has begun turning away those seeking asylum in Arizona and sending them to Mexico to await U.S. court hearings. It's an expansion of the controversial Remain in Mexico program, which began a year ago when the number of migrants at the southern border increased. Human rights groups have criticized the policy for the dangerous conditions of many Mexican border cities. And over 200 Republican members of Congress have asked the Supreme Court to consider overturning Roe v. Wade. The ruling from 1973 gives women the right to an abortion. The lawmakers are asking the justices to uphold a law in Louisiana that restricts access to abortion procedures. The opening bell is just minutes away here on The First Trade. But first, a look at the action in overseas markets. Stocks a bit depressed there as well after that airstrike by the U.S. overnight. We'll be right back. Welcome back to The First Trade. We're about 6 minutes away from the opening bell. Stock futures have been under pressure all morning long. Dow futures off nearly 1%. The S&P and NASDAQ each down more than 1% to start the day. Let's go around the bell now with Anthony Chan, former chief economist at J.P. Morgan Chase, and Nick Giacomakis, president of the New England Investment Retirement Group, along with Yahoo Finance's Jared Blickery at the Wi-Fi Interactive Board. Good morning to you all. Nick, I'd like to start with you. With now these heightened tensions in the Middle East, what does this mean for the markets here in the early year?
I think we're going to have some volatility over the next couple of days, just like we saw last September when there was the attacks on the oil fields. With the environment that we're in today for energy, had this been 10 or 15 years ago, the situation would have been a lot worse. So I think, over the short term, it's going to be a little bit of volatility, not too much. That we'll continue to see the spike in gold and, a little bit of a spike in oil prices as we've seen, 3.5%, 4.5%. But really what's going to determine what happens, going into the new year will be how Iran retaliates to what's happened recently.
Anthony, is this news correction worthy?
Well, I think that when the market has run up this much, almost anything is correction worthy, even if we wouldn't have gotten this shock. So this is a good excuse to get a small correction. When I say a small, something in the neighborhood of maybe 4 to 6%, not a real technical correction of 10%, and certainly not a bear market. This is not bear market stuff because we still don't know about escalation.
What about the rest of the world, Jared? How are things looking this morning?
Lots of red here. Notably, green is Tadawul. That is the exchange that Saudi Aramco trades on in Saudi Arabia, in Riyadh. But the rest of the world, mainly red here. We can see Tokyo down about 0.75%. In Germany, the DAX down over 1.25%. London down about 17 basis points. In the S&P 500 futures, we have those down nearly 1%. If we look at that two-day price action, we can see the drop in futures here. And we can also take a look at what stocks are and what some of the other markets are doing. Gold futures are up almost to $1,550. We haven't seen that price in quite a while. And if we take a look at the Dow futures here, we can see that they are off by 265 points. We really haven't had a 1% drop in the markets, at least in stocks, for about a month now.
Jared, is this news good or bad for Aramco?
It's a great question. The short-term price action probably going to be to the upside because Aramco is directly correlated with higher prices. So we can see it's up just marginally, about 14 basis points today. Not a big amount there, but that's I believe that's right around the price where it IPO'd. So not a lot of change right here. Longer term, it could be a problem for Aramco because we remember those Saudi strikes on Aramco done by the drones and the airstrikes. While that might have been good for the price of oil, it introduced a new risk, and it makes people a little skeptical, a little bit hesitant maybe to plow their money in a region where we have these kinds of conflicts that can just bubble to the surface here. We haven't seen the retaliation yet, and that's going to be key.
That is going to be key. And Nick, if we see a sustained rise in oil prices, is that going to be enough to dent consumer confidence and perhaps start to be a drag on this economy?
Actually, it would have to be, really considerable. I mean, if we saw a rise into the, $80, $90 barrel price range, then maybe it would. I think really what the situation is that for the past couple of months, we've enjoyed a relatively low period of uncertainty. And now what this does, depending on how Iran retaliates, will really add another degree of uncertainty that comes to the table that we haven't had until this event from last night. So I think really what it boils down to is, again, how Iran retaliates and how much uncertainty that's going to put into the markets over the next couple of months going forward.
Nick, why do you think the U.S. economy has good momentum right now?
Well, I mean, overall, if we look at all the fundamentals over the past couple of months, the consumer's been relatively strong. Housing is held up. We have, again, low inflation. Earnings numbers, I think, coming out are going to be good. The street expects anywhere from 8 to 10% earnings growth coming into 2020, which is certainly an improvement over what we saw last year. And if you look at earnings, from last quarter, I think the street got way too pessimistic because the street was expecting flat to slightly negative S&P earnings growth. And as we saw, that was not the case. Earnings numbers came out, quite strong for the last quarter.
Speaking of earnings, Anthony, a lot of folks are saying that expectations for the first quarter are too high. What do you think?
They always are too high as we enter the year, so they'll probably have to trim those down. And I think that the consensus numbers for 2020 are also too high. I don't think you'll get 8 to 10%, but I don't think 5% is bad. So if we get 5 or 6%, you get dividends, you still get a very good year after the monumental year that you got last year. But clearly the markets are, in fact, adjusting to this level of uncertainty. You see that in gold prices. You see that even in Bitcoin. You've seen the Treasury yield for the 10-year coming down. So all those things out there, you see the Japanese yen actually accelerating versus the dollar. All those things are telling you that the market is not ignoring what just happened overnight.
And here we have a new trading day on Wall Street. The Dow starting the day off, down 360 points, a loss there of 1.25%. Nick, do you think that this changes the equation for the Federal Reserve in 2020? Are we going to see a rate cut sooner than we may have thought?
I don't believe so. And, I think that the Fed stands ready to act to make sure that they keep the economy running smoothly and they keep this expansion in play. But I don't think at this point, again, depending on what happens, barring any extreme situations with retaliation, then, of course, the Fed, I think, would stand ready to step in. But I don't believe this is going to change the Fed's positioning right now.
I think one important thing to mention about the Fed is that right now they're working really hard to supply as much liquidity to keep that repo rate close to the Fed funds rate. So already they have their plate full. I don't think that at this juncture they have to even think about lowering rates. All they have to do is just continue to add all that liquidity, and that's going to be very supportive for equity markets.
Yeah, there we see the markets down about almost 293 points right now. But Anthony, do you think we have some Fed members speaking today at a conference. Do you think it's something where they signal they could cut rates, at least try to jaw bond the market a little bit?
I think it's too early for that, but they're going to tell you that they're looking at everything that's going on and they're not going to ignore any factor out there that can hurt the market. But for them to actually go out there and signal a cut, it's just too early given what we saw overnight.
What about sectors now, Nick? What are you looking at? What were you looking at perhaps yesterday morning that's changed overnight because of what we've seen in the Middle East?
The sectors we still like technology, especially technology that's related to 5G rollouts, and the chips and the electronic contract manufacturers. We've liked defense and some of the industrials for quite some time. So I think that energy, again, will be a good trade because it's been just so completely beaten up over the past number of years. But I don't think over the long haul that's a sector that we'd want to be in because the fundamentals have changed so much. But again, for a shorter term trade, that makes a lot of sense.
And
also healthcare too.
Nick, doesn't rising geopolitical risk put that industrial stock trade at risk?
It does. Again, this is based upon what we were looking at coming into the first of the year. Obviously, the news over the past day or so put some pressure on that. So I think it'd be more energy. Defensive sectors will continue to rally like gold and utilities. We have exposure to those still. So, right now we're back onto the risk-off trade until this settles down and we get a little bit better clarity on where it's going to be going.
Jared, tough morning for investors, especially the NASDAQ. What's going on there?
Yeah, we're looking at the NASDAQ 100 heat map right here. Amazon down over 1.25% here. Alphabet off nearly 1% along with Microsoft. Apple, the least bad, had been down over 1% in the pre-market. Interestingly, Tesla here is one of the few green spots. It's up about 3%. And some of the worst performing stocks in the NASDAQ right now are the airlines, as you might expect. American Airlines, UAL, both down about 3% right now. Not a lot of green. And if we can take a look at some of the sectors here, not popping up, but we would see some of the defensive sectors outperforming like staples and utilities and real estate. And energy, as of a few minutes ago, was the only sector that's green.
Yeah, Jared, go figure Tesla in this market environment. They did have some looks to be some favorable delivery numbers for the fourth quarter out this morning. But Tesla, yeah, in the green. Go figure that one.
So the drop we're seeing in airline stocks, is that because investors feel they're vulnerable now that for a counterattack from Iran?
Well, there's no question that this level of uncertainty does not signal lower energy prices, signals higher energy price. The question is how much higher, and that's why the airlines are going to take it in the chin right when you get the first adjustment. But certainly in this environment, to go back to the Fed, when they're not even going to think about raising rates, one area that obviously equity market investors should be focusing on is any interest-sensitive sectors, whether that be housing, even autos to some extent, because interest rates will stay well-centered at very low levels. So unlike in the past when the Fed was raising rates, right now the Fed is going to sort of stay pat and provide as much liquidity out there. Those interest-sensitive sectors should benefit in 2020.
Nick, we're seeing the airline stocks really get hit this morning. Are you inclined to go in there and buy names like this?
No, I wouldn't, because again, we don't know where this is going to roll out to over the next few weeks. And much to Anthony's point, the biggest expense an airline has is fuel, and then the second biggest threat, of course, is reduced travel because of fear and uncertainty. So I would be staying clear of that sector right now.
And Nick, what about defense stocks right now? Might we see a ratcheting up of the defense budget if this were to escalate with Iran? And would that be a good place for investors to be?
I believe it would be, and I believe it's been a good place all along. If you look at the XAR, the ITA, some of the big defense ETFs, they had a great year last year in 2019, and we saw continued momentum of that coming into 2020. Regardless of this new recent news that just came out.
Anthony, your notes got me thinking. What What ends this economic expansion?
Well, I think you need some sort of a shock. And so far, we don't have enough imbalances. We don't have inflationary pressures. We don't have too much inventory. We don't have an excess in the housing market. So we need some sort of a catalyst. Now, obviously, it could be a shock that actually hits both business and consumer confidence, and that will take us out. But right now, we don't have them. And that's why the markets, yes, they're dropping a little bit because obviously you got some uncertainty. But the markets are not anticipating that this is going to be a death knell for the economy or a hit.
Do you suspect recession talk on Wall Street will pick back up?
I think it's too early to say that. If you look historically, as an economic expansion matures, guess what you get? You get slower and slower growth. 2 years ago, you got 2.9% real GDP. Last year, you got about 2.3. And this year, you're probably going to get 2%. That's normal. Some people would panic. I'm not panicking. That's just a normal life cycle. And you go through these things during our lifestyle. We had a couple of health scares for this expansion when we saw negative economic growth. But then we eventually sort of came out of it. And even the taxpayers, the tax cuts gave it a boost. But that still didn't stop the downward trajectory that you normally see as economic expansions age. But that doesn't mean they have to end.
Yeah.
Jared, you're taking a deeper dive into aerospace this morning. Looks like a mixed bag at the moment.
Yeah, we're seeing companies like Lockheed Martin up over 3%, Northrop Grumman up nearly 5%. Those are some of the companies that are going to benefit from defense spending. But then a notable standout is Boeing, which is just about flat, a little bit to the downside. GE's down over 1%. We can also take at the airlines, look at the airlines which are getting hit right now. American Airlines down over 5%. It's been one of the worst performers over the last year. We can see it's down about 8% over the last year, but definitely trending down. And some other airlines, Save, ValueJet down over 5%, Spirit about 5% as well. So lots of red here in the early going, transportation being affected. If we look at some of the leaders here, energy stocks, as you might imagine, outperforming, although Chevron only up about 9 basis points. Chevron up about 0.4%, and then BP and ConocoPhillips each up over 1%.
Yeah, tough day for the airline so far. Let's leave it there, guys. Jared Blickery, thank you. Anthony Chan and Nick Giacomakis, good to see you all.
Thank you very much.
Stay with us. We'll have much more on this airstrike and the impact on the markets after this quick break.
That closed 15% up, although from a much lower level. So this price, in fact, we haven't seen since about April of last year. We can see a one-year crude oil chart just up at those April highs right before the escalation of the trade war. What's going to affect the price of oil from here on out? Probably retaliation and how great a threat that is. And so this does place a lot of event risk for crude oil as well as many other commodities as well.
Jared, and you're also still watching gold.
Yeah, gold futures are up here, as you can imagine, defensive play here. And we've seen gold futures shoot up just before the new year here. And so this is a continuation of that trend. They're up to about 1550. That is a resistance level from about August of last year. We'll have to see if we can break through. But a lot of analysts have targets of $1,600, even $1,650 for the precious metal complex, for gold futures and specifically. And we can also see silver futures are spiking higher as well. They're up about 0.5%, not quite to those August highs that we saw last year. But silver has been outperforming gold recently. We can also take a look at copper futures. Now, copper, kind of a gauge, they call it Dr. Copper because it is a bellwether for the global economy, and it had been spiking up in relation to, actually in response to the resolution of phase 1, but now we're seeing it under pressure here. It's off about 1%, although for the last year it's still up about 5 or 6%.
All right, thanks a lot, Jared. Trump's decision to allow the airstrike is causing people to second guess his motives and his foreign policy. Our editor-in-chief, Andy Serwer, is here now. And Andy, I know you've been busy talking to people both domestically and internationally. What are you hearing?
Well, let's just start here with the United States, Alexis. And I think there's basically a reaction along partisan lines that while Democrats, for instance, don't call this general a good guy by any means, they are not pleased with the way the president took this action without congressional approval, and also suggested it escalates tensions in the Middle East rather than probably calming things down. On the other hand, Republicans are supportive, and I'll just start with a tweet from former NSA advisor John Bolton, who says, "Congratulations to all involved in eliminating Qasem Soleimani. Long in the making, this is a decisive blow against Iran's malign Quds forces worldwide. Hope this is the first step to regime change in Tehran." On the other hand, I spoke to Susan Rice, another NSA advisor, not long ago, and she actually was suggesting that the president's course of action against Iran did not make a lot of sense, and here's what she had to say.
I think the Trump administration has a perception, whether they're dealing with Iran or China or any of these ancient cultures that have a history and a pride and a philosophy of their position in the world, which may not accord to our view of their position in the world, but that they're not going to just back down because we say boo. Too often we see the president backing down after escalating and raising expectations.
And I think everyone would agree, you guys, on both sides of the aisle. Where do we go from here? I mean, Iran is probably going to retaliate somehow. And we don't know how, we don't know where, we don't know when, and it actually makes the world a less stable place. Now, I guess the president and his people would argue, well, ultimately, that taking this general out will alleviate those tensions because he was such a hardliner and was so critical to supporting Iranian actions throughout not only the region but the world that were dangerous to our well-being.
Andy, this is the first market hurdle of 2020. Is it something that investors could shrug off quickly?
You know, this is such an unknown, and you're seeing what's going on in the markets today with what Jared's been telling us this morning, and obviously there's a tremendous amount of uncertainty, and you know what that means. The markets don't like that. It's actually positive for the oil business, and that was the worst performing sector in 2019, so we're seeing some strength there, although, boy, I don't think people would like to see strength for this reason, of course. Mm-hmm. And how it continues and plays out is anyone's guess, and it sort of takes the bogey and the looking off of China right now. So it's really just something that we're not very clear on.
That much is for sure. Andy Serwer, thank you.
Thank you.
Coming up here on The First Trade, Johnson & Johnson faces another substantial lawsuit. Your companies to watch are next.
And taking another quick check of the markets, Dow Industrials off their worst levels of the day. We're off more than 300 points, now down 173. The NASDAQ down about 60 points. And we've got the S&P 500 off 19. So all major indexes lower, but off their session lows. We'll be right back. Now for a look at some of the companies and stocks the Yahoo Finance team is watching for you today. A lot of attention on GE this morning after yesterday's big rally. The stock spiked more than 5% on optimism over CEO Larry Culp's company-wide turnaround. The stock is seeing its best yearly performance since 1982. It rallied 38% in the last 3 months alone. And cosmetics maker Avon has announced its CEO has stepped down. The company is working on closing its sale to the Brazilian personal care cosmetics company Natura. Natura & Company's executive chairman will take over as CEO at Avon. And Washington State is suing Johnson & Johnson over its opioids. The suit claims the drug company was misleading in its marketing of the opioids, saying the drugs were effective for treating pain and not likely to cause addiction. The lawsuit seeks civil penalties and damages from Johnson & Johnson. And Tesla has slashed the starting price for its China-built Model 3 sedans before delivery. The company cut the price for the electric vehicles by 16% after collecting subsidies for the cars. That's according to its China website. The price cut, it's part of a number of changes that Tesla has made to its sales policy in China, including adjusting prices for car accessories and home charging setups. And a group of Amazon employees have pushed the company to combat climate change, and they're saying they might be fired over it. According to a spokesperson for the workers, multiple employees have been told they are in violation of several policies. Several others say they've been threatened with termination. Amazon reps have said they encourage employees to voice their issues internally, but it has policies against talking to the press or posting on social media. A lot happened in this holiday shortened week. We're going to look at the market action and what you can expect on Monday. Our Flashback Friday is up next.
More now on that airstrike that killed a top Iranian general in Iraq. Let's bring in Wisconsin Republican Congressman Mike Gallagher. He's in Green Bay this morning. Congressman, good to see you. Do you think this was the right move by the Trump administration?
Absolutely, this was the right call by President Trump to take not only Qasem Soleimani, but Abu Mahdi al-Muhandis off the battlefield. These were terrorists that recently killed an American and also were plotting further attacks against American soldiers and our diplomats in the region. And remember, Soleimani is responsible for a long history of terrorism, chaos, and malfeasance throughout the Middle East. He has the blood of over 600 American troops on his hands in Iraq. That's about 1 out of every 6 combat casualties in the country. He is also responsible for exporting the sort of Hezbollah model throughout the region, taking advantage of the financial windfall provided to the Iranian regime by the JCPOA to export chaos in places like Syria, in places like Yemen, and in Lebanon. And so this is a good day for America and our allies. Obviously, we need to be prepared for what comes next, but 100% the right call.
You were in the Marine Corps, Congressman. You were deployed to Iraq twice while on active duty. Do you think that what do we need to look out for now? What might come next from Iran in terms of retaliation?
Well, certainly Iran has been systematically escalating for the better part of the last year, and we've had a very measured response. In some cases, we've done nothing. And so the hope is that this will restore our deterrent posture. This will dissuade Iran from escalating any further, knowing that we are prepared to do what's necessary to protect our people, to prevent further loss of life going forward. And to bolster our position, I would recommend that we need to continue to maintain maximum economic pressure on the Iranian regime. We need to put ourselves diplomatically and rhetorically on the side of the protesters, not only in Iran, protesting their own government, but the anti-Iranian protesters in Iraq and the anti-Iranian protesters in Lebanon. And so hopefully we can avoid further escalation. And that's what deterrence is all about. It's about the avoidance of war and the maintaining of stability. And our weakness and our inaction for the better part of the last decade when it comes to Iran was actually the most provocative course of action.
Congressman, we have a lot of investors out there today trying to make sense of this situation. What type of response do you expect from Iran?
Well, I certainly would expect them to do what they normally do, which is to retaliate through proxies. They maintain aggressive proxies in the form of Hezbollah in Lebanon. They have proxies in Yemen. So they may not necessarily attack in Iraq itself, but I would expect them to consider a retaliation in that form. But again, the message we've sent is a simple one. It's a strong one. It's that if you kill Americans, if you threaten us, we are prepared to respond, and we are potentially prepared to respond lethally. And that's a strong message. That's a message that resonates throughout a region like the Middle East.
Congressman, President Trump proclaimed much of last year that he is an isolationist, but this is an election year. Do you think that President Trump would be willing to go to an all-out war with Iran and put American lives at risk?
Well, I don't remember Trump ever describing himself as an isolationist. He has, however, expressed a desire to reduce our troop presence in places like Syria, in places like Afghanistan. I think these recent events are a reminder of how important it is for America to stay forward engaged, and that with a modest and small investment of resources, they can really, with a light footprint, have a high impact. And we've actually done that model successfully in decimating ISIS in Syria and Iraq. And I don't want to see us squander all the gains that we've seen against ISIS and other terrorist groups in recent years by precipitously pulling out of the region for political purposes. And indeed, I know we have to reposition our focus on Asia. I am incredibly in favor of that, and Trump deserves enormous credit for highlighting the threat posed by China. But we can do that while simultaneously guarding our interests in the Middle East without a massive deployment of 150,000 troops, which was our force posture when I was deployed to Iraq decades ago.
Congressman, what do you think is a bigger risk to the U.S. economy this year? Is it these rising tensions with Iran or the China trade war? We have signed phase one or about to sign phase one of the trade deal, but that could escalate in any moment.
Well, I would take a longer term focus. Quite honestly, I don't know over the next year what would be the most short-term impact, but the biggest economic threat we face undoubtedly is from China. And particularly, I'm concerned about the Chinese Communist Party's ability to dominate the future of the internet, which is basically the future of the economy. If they make further inroads when it comes to 5G, convincing some of our allies to go with Chinese architecture for their 5G, we are going to be in a very dangerous position a few years from now. We simply can't allow that to happen. We know we have incontrovertible evidence that Chinese companies like Huawei and ZTE are effectively appendages to the Chinese Communist Party. And so I think that is the biggest economic threat we should be worried about in both the short term and in the long term over the next decade.
Congressman, some of your colleagues in Congress are criticizing the president. I think they can agree that Soleimani had to be dealt with, but they are questioning the way in which the president has done this. He didn't go to Congress for approval. What are your thoughts on that?
Well, the president retains authority under Article 2 to take defensive action to protect our people, to protect our troops. Furthermore, we are in Iraq at the invitation of the Iraqi government and pursuant to a congressional authorization that Congress hasn't found time to repeal. This was indeed the considered legal opinion of the Obama administration. So the same people that acquiesced to Obama's unlawful actions in Libya and said nothing when he redeployed troops to Iraq are now criticizing Trump for taking defensive action to protect our people. I don't really think that sustains or withstands any scrutiny. Furthermore, these were terrorists. Mohandas was a designated terrorist, and Soleimani was the head of a designated terrorist group.
All right, Congressman Mike Gallagher, we appreciate your time this morning. Thank you.
Thank you so much.
And that's going to do it for the first trade for this morning. I'm Alexis Christoforous.
I'm Brian Sozzi. Watch those stock futures on Sunday evening. Now let's get one more check of the markets with Inez Ferre down at the New York Stock Exchange. Inez?
Brian, Alexis, we're looking at the Dow that's down 210 points. The S&P's down 22 points. The NASDAQ is also lower. Just looking at oil prices right now, WTI is up more than 3%. That means around $2.30 a barrel higher. And the spike in oil prices, of course, is affecting the airlines. So we're taking a look at some of the airlines this morning. United and American are some of the worst performers on the NASDAQ today. United down around 3%. American is down about 5%. And if we take a look at Delta, that's down almost 3%. Also, Southwest is down more than 2%. And JetBlue is down more than 3%. One of the best performers on the NASDAQ today, though, is Tesla. Tesla is up more than 4% after Tesla topped its Wall Street estimates for deliveries for the fourth quarter, with vehicle deliveries coming in at 112,000 for the fourth quarter. Stay with us. Wi-Fi AM starts right after the break. The U.S. airstrike, what that means for the markets. Stick around.
Good morning. Welcome to Wi-Fi AM at Yahoo Finance. I'm Dan Roberts. We've got Melody Hom and Miles Udland here on the couches. Miles, a little sick this morning. But we're going to see if he can get better by the end of the show.
Yeah, right. Yeah.
Now, we know the big news of the day, and it is affecting markets. Right now, the Dow is down more than 230 points, although you might have thought it would be down more, and in fact, we have already seen lower numbers. We are off the lows we've seen so far this morning. All three major indices for the moment are in the red. And we have to start with the huge geopolitical news overnight that is affecting markets. A U.S. airstrike in Baghdad killed a top Iranian general, and Iran is now pledging a, quote, crushing response, and markets have been in the red off of that news. General Qasem Soleimani was leader of the Quds Force inside Iran's Revolutionary Guard, and in a statement, the Pentagon accused Soleimani of actively developing plans to attack American diplomats and service members in Iraq and throughout the region. But Secretary of State Mike Pompeo this morning said the U.S. remains committed to de-escalation, even as the U.S. is urging American citizens to leave Iraq and not go to the U.S. embassy there as Iran prepares to retaliate. We have a full roundtable this morning to go over every business impact of this news. Rick Newman joins us here on the couches for the political aspect. We have Heidi Chung on markets and Jared Blickery on oil over there at the Wi-Fi Interactive board. Thanks, everyone, for being here. Rick, let's start with you. A lot of people interpreting this as a little bit of a Trump re-election move, because now he can say, well, we're in the midst of this conflict and you need me to be at the helm. But others saying, hey, look, this was a very bad person, and some people celebrating that this assassination happened.
Yeah, I'm not buying the wag the dog theory at this point. It's just way too early. I mean, the election is still 11 months away, or 10, I guess. And this is going to develop for months and months and months. So this is the kind of thing you do if to be really cynical about it. If you were doing this just for re-election purposes, a little bit of thest jumping, go America, you might do it 1 week before the election. 10 months before the election leaves a lot of time for whatever the Iranian retaliation is going to be, and for Trump perhaps to get sucked more deeply into the Middle East when he said as a candidate he wanted to get out of the Middle East.
Although in terms of political timing, today is pretty monumental because the Senate did reconvene, and on Monday I think they're actually back to work. So this is now, people are getting briefed, they're getting back to their offices, all of their aides are kind of scrambling, trying to figure out where do we stand. And Andy Serwer, editor-in-chief, was mentioning earlier in our programming that it seems to be very partisan right now, that when you hear reactions from either side, they seem to either be siding with the president wholeheartedly or saying, hey, this is too much of an aggressive move right now.
Who can think of an impeachment vote at a time like this?
I guess. But remember, we're not in the middle of the impeachment trial.
Right.
And there are factors on the ground in Iraq where this is all taking place that do sort of explain the why now question. The why now being that there's been this series of strikes and retaliatory strikes involving an American contractor who was killed by an Iranian-backed militia, the U.S. attack on that militia, then the protests at the U.S. Embassy, and now the strike against Soleimani. One thing there is bipartisan agreement on, however, is that Soleimani was a problem. I mean, he's a major orchestrator of terrorist activities throughout the Middle East. He organizes the militias, not in Iran for Iranian protection, but in other countries in the Middle East just to stir up trouble. In Iraq, he probably has the blood of dozens or hundreds of American service members on his hands because he helped form the weapons and distribute the weapons that were used as improvised explosive devices, IEDs, the roadside bombs that killed so many U.S. troops. That's probably on him. He's been involved in Syria. He's been involved with attacks against Israel and Israelis. So he wasn't a good guy, and in general, it's probably better for us that he's off the scene. However, a high-profile assassination of somebody who's essentially a top Iranian official is problematic for us.
Well, I mean, you say it's better for us, but I mean, it's not like Trump's first administration who had a chance to kill Soleimani, right? We've had the last two certainly had their chance. So I guess the question is then why? Like, why did we choose this moment? Why was Trump the one to do it 2.5 years into his term?
I don't think we know. So Soleimani is not somebody. He's not like a spy who was always hidden underground.
Right,
I mean,
exactly.
He's a public figure, and so apparently it's been not that difficult to track where he is. And the United States, the Pentagon, and Central Command have had him in the crosshairs before and decided not to do it because of what we're going to see happening now, which is Iran has no choice but to retaliate because it's so public. I mean, the United States killed the guy and said we killed the guy. I mean, it's quite different from if there was a mysterious explosion and no one really quite knows what happened.
Mm-hmm.
So because this is obviously the responsibility of the United States, Iran has to do something.
Yep.
And we are going to find out over coming months whether it is worth the risk of what that is likely to entail or not.
Let's go over to Heidi and Jared. Heidi, what are we seeing with markets right now? And I know we're already off the lows of the day, so maybe there won't be an all-day lasting negative impact from this.
Now, Dan, the markets have been open for about 30 minutes right now. And as you just said, the markets have come off the lows of the earlier of the session. The market was down more than 350 points at the lows right now. We have come back a bit. We're down about 259 points on the Dow here. The S&P down 0.8%. The NASDAQ down 0.9% here, but hanging above that 9,000 level. As Jared is going to break down in a little bit, we are seeing the impact here on oil as well as safe haven assets such as gold. Now, the main question here is we have seen tensions ratcheting up in the Middle East between the U.S. and Iran for quite some time now, but analysts are speculating here just how destabilizing this will be and how long this will last. I think that is the main question here. So right now, the markets, we're seeing a bit of a knee-jerk reaction, but how long this will last, that I think is going to be the main question going forward for markets.
And Heidi, I know we're so laser focused on the news about Iran and how that's affecting everything. Interestingly, a few names are up big, including Tesla today, a big story.
Yeah, Tesla actually doing quite well. I think it's up about 5% or so here in early trade. That is because deliveries coming in much better than expected. So we will be also keeping an eye on some individual stock names such as Tesla.
All right, and we have Jared there right next to you, helpfully pulling up Tesla. Jared, talk to us about oil prices. Obviously, we're seeing a spike, and we're already hearing some people kind of forecast the next few days. How high could they get as a result of this tension?
Right, we're seeing oil up almost 4%. Haven't seen a big spike like this since those September attacks on the Saudi Aramco facility. At the time, that was a 15% spike from a much lower level. So these prices are actually higher. We can take a look at a few charts here. Here's the overnight price action. We can see just kind of a gap and go situation. Over the last year, we'll see that we're testing a level we haven't seen since last April, exceeding the spike that we saw in those Saudi Aramco drone attacks. So the question is, are we going to see just that one-day spike that's subsequently reversed to the downside quickly? This is a little bit different character. We don't know the retaliation yet. In fact, it could be that the retaliation is another attack of a facility, and that's why we're seeing a premium built into oil prices right now, as well as the entire energy complex.
Yeah, but I think it's interesting, though, is if you look at oil over the last month, right, we've had this rally to back above $60 a barrel. I mean, today's reaction, I think, in many ways might surprise folks who had missed that move in oil that we had seen during the month of December. And, you just look at that chart right there. We'd already broken above kind of a high we'd tested twice earlier in 2019. And so how much here is going to be a geopolitical side of it, and then how much is the technical side of oil about to take over as we head into next week?
Now, you raise a very good point here. Oil has been behaving bullishly as of late to all kinds of news events. And so when it's behaving that way, we would expect it to kind of maintain the gains that it's built in here. So we're having a risk premium built into the market right now. It looks like of about 3 or 4%. We'll have to see if that dissipates. And in fact, it could actually grow as tensions escalate here. Again, the big wild card is going to be what is the retribution, but it's more likely that these oil prices will stay elevated because of the bullish behavior of crude over the last month.
And of course, we can't talk about oil without mentioning the airlines, of course. Heidi, we looked at United, American, Delta. A lot of these stocks are severely under pressure this morning with the anticipation that higher oil prices will be affecting their trajectories in the future. If you think about potential guidance, I know this happened last night. It's hard to say how much these CEOs and executives can forecast in the future. I imagine this would be a major concern for them as they are planning for 2020.
Yeah, Melody, that's something that we're definitely paying attention to here. We are seeing some pressure build right now, but as you said, we don't know how long this is going to last and how long oil is going to be reactive to this news. But one thing I do want to mention is that a lot of these airlines used to hedge against this rise in fuel prices, but they don't do that so much anymore. So it'll be interesting to see if we sustain these levels in crude, how that will in fact impact the airlines here in the U.S. and abroad as well.
Yeah, Jared, I'm wondering if people are getting ahead of themselves by already talking about it trickling down to consumers. I mean, I'm already seeing headlines about people concerned at the pump. Is it a little too soon to think about that effect?
We are seeing elevated gasoline futures prices that'll translate into the pump if it lasts more than a few days. But, 20, 30 cents probably not going to dent consumer behavior too much. If this continues to be a dragged out situation that kind of weighs on the consciousness, consumers can retrench pretty quickly. So they will respond to higher gas prices if they remain elevated. And also simply the threat of war kind of permeates the conscious, and instinctively sometimes people will retrench because of that as well. So we're looking at the airline stocks here today. We can see they're down as well. As you would imagine, the energy complex, mostly in the green here, except for ExxonMobil. Somebody like Occidental Petroleum, also up 2%. The smaller players tending to benefit from that more, especially the Permian plays here. Right. But the overall market is in the red today. I just remind people, we haven't had a 1% down day in the S&P 500 since October 8th. That's nearly 3 months ago. This has been a levitating market that just kind of climbs the wall of worry and really just looking for an excuse for any kind of sell-off. I don't think this is going to be protracted in equities. I think it's going to be more protracted in the commodity space.
I'll take a swag at this question about the Iranian retribution. I don't think this is going to look like any kind of traditional military activity. So you have to think about the possibility that Iran could try to close the Strait of Hormuz. That's about 20% of the world's oil flows through there on a daily basis. But this has been war-gamed extensively. The Pentagon has been planning for this, literally for decades. And Iran cannot keep the Strait of Hormuz closed. They might be able to close it for a few weeks or a month. They certainly could attack U.S. naval vessels in the Persian Gulf. They could do some damage, but they cannot win a traditional war against the United States. They can't do it. We know they could damage oil facilities and oil infrastructure in the Middle East. We've seen that before. It gets patched up and repaired, and then that's another excuse to retaliate back against Iran. We also know that Iran often takes another approach, which you might call an asymmetrical approach. That is terrorism. That is targeting airplanes, targeting soft targets. Soleimani was believed to be responsible for that attack against the Israeli embassy in Argentina many years ago. So this is not necessarily going to play out in a in fact, I bet this will not be predictable. It's going to be something we're not going to foresee.
Well, and Rick, to that point, the U.S. military did issue a warning saying that anyone in Iraq who is a U.S. citizen or who is of American descent should be leaving the country immediately as soon as possible. So are there any threats there, right? Like people are trying to book their first flights out.
The threats are to soft targets.
Yeah.
And that tends to be anything that is civilian, anything that is not a hardened military facility. So we have the State Department saying civilians get out at the same time they're sending troops in. Yep. So the hardened targets, the military targets, are the hardest ones to damage, and that's not probably what they're going to go after. They're going to go after soft targets, and we know there's a lot of history on this. The soft target, they're everywhere, and they're going to look for the ones that no one's thinking about.
Yep. All right, we have to leave the roundtable there, but we will keep discussing this all show. Thank you, Rick. Thank you, Heidi and Jared, over at the touchscreen. Coming up on the show, even more on the oil market impact of the Iran news. Welcome back to Wi-Fi AM at Yahoo Finance, where we've been looking closely at the market impact of this news out of Iran. Let's go right down to the floor of the New York Stock Exchange, where Ines Ferre can tell us more. Hi, Ines.
Hi, Dan. I know we've been looking at oil and also the impact that it's having on the airlines. I'll get to that in just a second, but I did want to mention the ISM Manufacturing Index number, which came out for the month of December, coming in worse than expected, coming in at 47.2, and economists had been expecting a reading of 49. Now, anything below 50 is contraction, but that number came in below November. November's reading came in at 48.1. Again, December's reading coming in at 47.2. Oil this morning, we're seeing it spike up around 3.5%. Of course, that's having an impact on the airlines. And if we take a look at United and American, those are some of the worst performers on the NASDAQ this morning, with United down around 3%, American down around 5%. Also taking a look at Delta, that's down almost 3%. Southwest is under pressure, down more than 2%. And also JetBlue is down more than 3% as well. So, of course, airlines this morning taking it on the chin as oil is spiking. Dan?
Thank you, Inez. We were just wondering about the impact on airline stocks. Appreciate it. We'll check back in with you later in the show.
See you soon.
Well, for more on the Iran strike news and its impact on oil markets, let's bring on Rob Thummel of Tortoise Capital Advisors. He's joining us from Kansas. Rob, thanks for coming on.
Thank you.
So let's start with oil prices. Obviously, we're seeing a spike right now, but we were talking just a moment ago with one of our colleagues who covers this closely. The idea that people now concerned about higher oil prices in the next few days, next few weeks, might be getting a little ahead of themselves. Everything depends, of course, on what Iran does next. What are you seeing and expecting?
Yeah, I think we would share a lot of the same sentiment that your colleagues have. You know, we saw an attack on one of the largest oil infrastructure facilities and one of the most critical infrastructure facilities in the world in September, and then you saw oil prices actually spike initially, but 14, 15 days later, oil prices are actually at levels below where they were before the strike. So obviously oil prices are up today. We'll see where we go from here. But at Tortoise, you know, our perspective is we still think oil prices will remain range-bound, $55 to $65. It won't really cause any major impacts, at least right now, on a global economic expansion that we're seeing across the world.
And Rob, to that point, I know Tortoise actually focuses on energy infrastructure. When you think about your own investments, you're actually investing in pipeline companies. You're trying to really develop that. A lot of this talk about energy independence in the United States feels a little bit overblown, but in light of this sort of incident, how much do you think that the U.S. can really kind of stay immutable or sanctioned in from all of this geopolitical activity?
Yeah. No, and that's a really important point. So there's a couple things there. So if you think about it, at Tortoise, you know, we've talked about how the energy sector has been underappreciated. It was the worst performing sector basically in the last decade. And we think that is unjustified. And events like this really highlight the critical nature of energy and energy assets and energy infrastructure assets, if you think about it. So today, as we sit here today, it's way different than 10 years ago. And what I mean by that, a couple big things. The U.S. actually is now a net exporter of oil, right? So that's really important, because if the world needs more oil, the U.S. actually can supply the globe with more oil if necessary. But more importantly, the U.S. relies significantly less on oil from the Middle East. So we are importing oil that is at levels that is 30, 40% lower than we've been historically. And actually, oil imports from OPEC and the Middle East are actually at the lowest levels they've been in 30 years. That's a really important component. And all of that's happening because of the fantastic things that have happened in the U.S. energy sector, both on the oil and gas producer side, but also energy infrastructure side as well.
And Rob, you know, as you look at your projection for oil in 2020, you're looking at 55 to 65 as that range for oil, but that's, you know, kind of $7 to $10 a barrel higher of a range than we were looking at, you know, through 2018 and 2019. So what is kind of, in your view, fuel this move higher in the price of oil, just in terms of the range that you expect it to sit in? Because during December, we did see oil move back towards that $60 a barrel level. We're up a little bit today, but I think if you hadn't been paying attention, you wouldn't have known the kind of move that we'd seen in just the last couple of weeks.
Yeah, I think that's a very good point. I think what has happened in oil prices, obviously today and going forward for a little while, there will be an increase in geopolitical risk, and that premium that will be in oil prices will be there for a little while. We'll see how long. But more importantly, fundamentally, what's happening is global demand for energy is actually rising. And I think as we move throughout 2019, there was a question of what would global oil demand be. As we moved into 2020, investors have become more comfortable that global oil demand actually is going to rise, and it's going to rise pretty substantially in 2020 and beyond. In addition to that, though, the supply side, right? Global supply is coming down. In other words, we just had an OPEC event where OPEC agreed to reduce production even more. We've got U.S. producers that are moving to become more disciplined, and what that means is they're going to spend less capital next year. If they spend less capital, their production will be lower. So U.S. supply growth will be less than what it's been historically. And so you've got a much better fundamental picture, a much more balanced oil market with rising demand, a little lower supply, and that sits pretty well for oil prices where they are in that $55 to $65 range.
All right, Rob Thummel at Tortoise, thanks so much. Really good stuff.
Thank you.
And coming up here on Wi-Fi AM, we will tell you what stocks are trending right now on yahoofinance.com.
All right, time now for today's trending tickers. First ticker we're looking at, Tesla. The company has cut the price of its Model 3 sedan in China, with post-incentive costs of that car now down to around $43,000, with the stock up about 4% this morning after the company reported that its 2019 global sales rose 50%, topping the low end of its estimates for the full year. In the fourth quarter, the company delivered a record 112,000 cars. For the full year, 367,500 vehicles were delivered. The company had guided to 360 to 400,000 as its full year target. Now, 112, we can do the math there. It's annualized rate closer to 450,000 cars at this point. Tesla has made a lot of noise about 500,000 cars, 1 million cars in a year. Here we go. Everything is perfect.
Well, I also think Tesla is one of the companies that has the leakiest staff. So even all of this news, we sort of knew ahead of time, whether it's because of the, subsidy that the Chinese government
the staff
gave.
is the CEO tweeting.
Correct. Well, the CEO tweeting,
It's a sieve, that place.
or Reuters finding that one source, that constantly is talking. But all that to say, cutting the price of the Model 3 because the Shanghai plant has actually broken ground in much speedier time than anticipated. And I think a lot of folks were very surprised that, okay, this flashy announcement when he first was there a couple years ago, and the fact that they were actually able to start production at the end of this year is remarkable.
Yeah, look, we talked a lot at the end of the year about, wow, look how much changed for Apple from January 2019 to the end of 2019. But also look how much Tesla had a reversal of fortunes over the year. I mean, at one point, the stock really troughed. Musk was in a court case for calling someone a pedo. I mean, it was like my favorite joke about, is anything all right over here? I mean, the delivery number hadn't met 100,000 when he had internally sent a memo telling everyone, we're really close to 100,000, and they didn't hit 100,000. And people said, oh, hey, Tesla. And by the end of the year, stock way up. Now it's above that infamous 420 mark. He's tweeting, lol, the stock is so high. Things are pretty good.
Well, and just to contrast it to the Apple thing, Apple shares doubled, but I don't really think anything did change with that story fundamentally. Apple's just kind of still Apple.
I just mean in January they issued a warning.
But Tesla had a lot of news, a lot of different news throughout the year, and I would suspect Tesla as a stock we'll talk about in the year ahead.
And just checking us too, we are fair weather fans, right? We are fair weather friends.
See, I think we'll give it up when it's due. We'll give full credit.
But I think it's
we are FUD. Tesla FUD.
We're a little bit
according to the Tesla.
In the moment.
Down.
We're not
Tesla
Bitcoin
subreddit
FUDs,
thinks we're
but
FUD.
Right. Hey, that was one hot Musk minute.
There you go. That's right. Remember that? We should have done that.
Remember that?
All right. Another trending ticker today. We got L Brands shares of the Victoria's Secret parent company higher after getting an upgrade from analysts over at Bank America and analysts at Wells Fargo, adding the stock as a top pick for 2020. Looking at shares up 6% here. Now, in 2019, the stock was down 30%. That during a year that the market was up 30%.
Yeah.
So sad for L Brands there. Now,
Here.
Wells Fargo coming out and saying that they think this could finally be the year that the company splits up Victoria's Secret and Bath & Body Works. We have talked about that a number of different times as the obvious strategy for L Brands here. But who really wants to get, I think it's tough for an activist or someone with looking for a new position to look at L Brands and say, with the Les Wexner ownership structure and the problem that this company has had with Victoria's Secret for so many years, is it going to be as straightforward if I go and buy 10% of the company and get what I want?
Though there are things the company could do to try to turn around Victoria's Secret that it just hasn't tried to do. Like it is, when I look at Victoria's Secret, it doesn't seem to me it's an example of can that really be saved? It's like, yes, there are lots of things that could be tried, but L Brands has refused to try them. We've talked about how everyone every quarter says the brand needs to change, and it just doesn't. The image doesn't change. It hasn't adapted to, size inclusive and all body types and body positive. You look at Aerie
and actually getting bras that fit.
Sure,
and having stylists who understand. Hence why all these DTC brands have been so successful. It's not because the quality is any better. It's because it actually fits. And you guys are not.
No, I'm well aware of this.
I constantly share my anecdote of walking in Midtown, and you pass the big Victoria's Secret store there, and right around the holidays, they had a giant one of a model lying down with the lacy, and I just thought, this is exactly what they had in their windows 15 years ago.
Yeah. Yes. And to your point, the original read that you were talking about, Bed Bath, what is it? Bath & Body Works. That's third grade Melody Christmas gifts. The fact that is the thriving piece of the business, that says says a lot. And to your point, that shows that it's cyclical, that things can come back around and you could figure out a way. The same way Old Navy is being split off, right?
I was just going to say,
Banana Republic, Banana Republic used to be the gem. Now Old Navy is the gem.
But most recently, Old Navy is not even the gem any longer. Old Navy also struggling.
Yep.
So for a long time, they could say,
the gem.
yes, Gap is down, but we have Old Navy, but not anymore. So what happens when Bath & Body Works also starts underperforming?
Right. Well, but they have candles and scents and lotions. I think millennials are into that kind of stuff.
Sure. All right, we're going to go to another break, but when we come back, lawmakers take a look at big tech. We'll check in with our friend Jessica Smith. Welcome back to Wi-Fi AM at Yahoo Finance. President Trump's decision to approve that airstrike in Iran is now causing some to second-guess his foreign policy decisions and motives. Our editor-in-chief, Andy Serwer, joins us now. And Andy, I know that recently you spoke to former National Security Advisor Susan Rice, so good timing to have just recently talked to her. What did she say about these issues in general, and what else are you hearing today?
Well, first of all, I think the reaction that we're seeing in Washington, D.C. specifically is along partisan lines, which is probably not surprising. And while Democrats, for instance, are not saying that this general was a good guy or the Iranians are doing good things in the Middle East or elsewhere in the world, they're saying that the president's actions was rash and will actually cause the situation to escalate. And I did, as you said, talk to Susan Rice a number of weeks ago, and she talked about the president's policies when it comes to countries like Iran. Here's what she had to say.
I think the Trump administration has a perception, whether they're dealing with Iran or China or any of these ancient cultures that have a history and a pride and a philosophy of their position in the world, which may not accord to our view of their position in the world, but that they're not going to just back down because we say boo. And, you know, too often we see the president backing down after escalating and raising expectations.
Susan Rice, former National Security Advisor, former Ambassador to the United Nations, and interestingly, and not surprisingly, John Bolton, also a former U.S. Ambassador to the United Nations, also a former NSA head, had just the opposite reaction, saying, good job. And they also said it's kind of interesting that the strike was in the planning, in the works for a long time, i.e. when I was sitting in that chair, I was a part of it as well, if you see Twitter this morning.
Well, we've seen Democratic presidential candidates come out and condemn it, kind of echoing what Bolton was saying. Ultimately, we know Trump's base is probably looking at this very favorably because it's action-oriented, right? Yeah. Iran is our enemy. We were not happy with the nuclear deal in the first place. Off. Kind of another check and an unraveling of a lot of Obama's kind of strategy going into it. How do you anticipate this will color the conversation kind of leading into the rest of this year?
Well, I think, Melody, what's going to happen is there's going to be a response to, in the United States, to the Iranian response, because the Iranians are going to respond. And here, what we did here is sort of cut off the head of what is kind of a combination of the CIA and the special forces. That's what the Quds forces are. That doesn't mean they're going away. Will this make them less effective or make them shy or scared? I don't think so. I think the retaliation is going to come at some point, not today, not this week, but sometime down the road. And will they strike against American military or against U.S. civilians in some horrible way? And, you know, then how will we respond to that?
Well, and it's not mutually exclusive for those who say, good that this person person is gone, but also that the decision was made rashly. Maybe. I mean, we're going to wait.
Yeah, and it's just how do you? But then how do you de-escalate this?
Right.
Ultimately, is going to be the question. And I mean, yes, we can talk about what it means for investors, but there's sort of bigger issues at play here. Yes. What does it mean for the world and for our society and peace? And so there's a lot of uncertainty right now. And again, bringing it back to our sort of purview, and the markets are reflecting that uncertainty, which obviously they don't like.
Right. Okay. Thanks, Andy.
Thank you.
Good stuff. Good interview. Well, politicians spent much of 2019, as you all remember, calling out big tech companies and publicly shaming some of the executives on Capitol Hill and on the campaign trail. But after a year of that rhetoric, Washington has not really taken any major, meaningful action to crack down on big tech. Lawmakers are saying that will change in 2020. Jess Smith is in Washington with more. Hi, Jess.
Hey, Dan. A lot of people I talked to say 2019 was the year the conversation shifted, and now we'll see if they actually take action in 2020. One of the first things they could do is a federal data privacy law. We're also waiting to hear from the DOJ and FTC. They are both looking into big tech companies. Almost every state attorney general in the nation is looking into Google and Facebook, so we'll be looking for their findings. And as you know, Senator Elizabeth Warren has called on big tech companies to be broken up. That is not going to happen in 2020, most likely. That would be a very long and messy battle, even if she were to win the nomination. I did speak to several big tech critics in Congress, Senator Mark Warner and Senator Josh Hawley, and they both say breaking up big tech is eventually on the table. Warner says he wants to see some reforms happen first. Here's what he had to say, followed by Hawley.
I think these pro-competition activities would be one way to, frankly, diminish the immediate move towards breakup. But let me be clear, if we don't find ways to bring these pro-competition efforts to the table, then we're going to have to consider other alternatives.
I think you can make a strong case that Facebook, that Google have gotten too big. I do not think, for instance, Google should be allowed to acquire Fitbit now while they're under an antitrust investigation. So all that to say, I think every remedy ought to be on the table when it comes to antitrust, and certainly spinning off companies is a remedy that I think we need to look at.
Hawley also says there needs to be reforms at the FTC and the DOJ, the agencies in charge of antitrust. He says they are not working well together when it comes to big tech. The House Judiciary Committee also has been investigating big tech on an antitrust basis, and we're expecting their findings on whether those laws need to be modernized going forward.
Jess, very interesting to see Josh Hawley mention that he doesn't think Google should be allowed to acquire Fitbit right now. Now, that doesn't seem to me, but who knows the potential and what kind of value they could wring out of Fitbit. But it doesn't seem to me that the Fitbit acquisition is on the scale of Instagram to Facebook. And yet, maybe this is a way to erase the mistakes made there, because we've seen many politicians say, in hindsight, we shouldn't have allowed Facebook to buy Instagram, but you can't really undo that now, years later. Maybe they'll try and block Google from getting Fitbit to try and make up for the mistake last time with Facebook and Instagram and WhatsApp.
Yeah, that's very possible. And actually, Hawley pressed Zuckerberg when he met him, when Zuckerberg was on the Hill, and he told him that he should spin off WhatsApp and Instagram. He pressed him to do it voluntarily. Clearly, Zuckerberg rejected that idea, but Hawley actually brought that up, saying that that's part of the reason why he thinks Facebook is too big, and he thinks Google should not be allowed to go forward with this acquisition.
All right, Jess. Well, as we all know, a lot going on in D.C. today, so you'll have an interesting day there, and thanks for coming on.
Yeah, definitely.
Coming up here on Wi-Fi AM, we'll give you another check of the market straight from the floor of the NYSE.
Welcome back. I'm Ines Ferre here with Pete Tuchman. Pete, we're looking at the Dow that's now down more than 200 points. The S&P's down about 20 points. The airstrike, the markets are obviously reacting to that airstrike. Is this a curveball for the markets? Was this a surprise, a shock? And if this escalates, what would this mean?
So I'd say yes to all of these things. Surely it was a curveball. I don't think anybody anticipated this. Obviously, it was a problem that needed to be handled, but that's out of my pay grade. The markets showed us, though, that markets tend to price in headlines and especially geopolitical stuff like this. So we opened down 360. That was just pre-market anxiety about really what the further implications of this are going to be, and I don't think we know that at all. We've bounced back about 130 points. Dow was down, the S&P was down 34 handles early this morning. The Dow opened down 340. We're down 225. What I'm noticing is that we're still at 28,650. So it is the beginning of the year, let's see how the day pans out.
As far as oil prices, we're looking at WTI that's up more than 3%. Would this be short-lived, though, this spike? Because when the Saudi Aramco facilities got struck, we saw the oil spike that day several months ago, and then but that was short-lived. Are you seeing that this could be short-lived?
I think this is a little more hair on it than that. There are so many unknowns, right? It's now we're just, we have. Look, this could escalate into a huge altercation between us and the Middle East and Iran, and that's going to affect the pipeline here for sure. So I'm not really, there's still plenty unknowns, whether this is a one-day off or not. I think we rebounded from the, we sort of regained confidence in the markets after the Aramco attack, but I think this is going to have a little longer effect.
Thanks so much, Pete Tuchman. Make sure to stay with us. Wi-Fi AM continues after the break.
Welcome back to Wi-Fi AM. Well, as we've been discussing all morning, oil prices are spiking in the wake of the U.S. airstrike that killed a top Iranian general in Baghdad. Now we want to bring on John Caruso, senior market strategist at RJO Futures from the CME floor in Chicago. John, thanks for coming on.
Hi, good to be with you.
Give us a sense of the temperature there this morning. What are people saying in terms of the risks here? Obviously, it all depends on what happens next from Iran, but in terms of oil prices, how high could we go?
Sure. So, this is something that we came on back in September following the Aramco attacks, that we felt that the market was severely discounting the possibility of an escalation of geopolitical events. If you remember, back over the summer, we did see the Iranian attacks on the oil tankers over in the Strait of Hormuz. Then, of course, we saw the Aramco facility bombing back in September. And this is something that the market's been discounting for a very, very long time. And we still think that Iran is certainly, they have not gone anywhere. And now you kind of wait and watch for the counter reaction from Iran.
And John, it's an interesting discussion we've been having, talking about a lot of those soft attacks that we should anticipate, which tend to be scarier, tend to be more unpredictable, because it's not necessarily militia that we're focusing on, perhaps civilians, perhaps those choke points and Navy ships. When you think about the potential repercussions,
you know what, my feed is cutting out on me here. I do think ultimately you're probably going to see a little bit of the risk premium come off here in the near term in the price of crude. We're certainly awaiting the EIA inventory numbers coming out at the top of the hour. If the market were to pull off closer to 60, maybe inside of 60 here in the near term, I certainly think that's going to present some buying opportunities for the market. Naturally, we have seen an initial uptick in inflation. And of course, you got to watch the strength of the U.S. dollar going forward. We may have just seen a major correction in the U.S. dollar, a major breakdown on the charts in the dollar going forward. And that's also going to fuel the price of crude oil higher here over the near term.
All right, John Caruso, thanks so much for joining us.
Thank you.
Well, for more on why investors should be concerned about what is happening right now with Iran and the U.S., Yahoo Finance's Brian Sozzi joins us. So, Saz, the market right now, obviously all three major indices down, but we're already off the lows we had seen so far this morning. So we're seeing a lot of people, there was a funny Jim Cramer tweet about this saying, well, wait a minute, no one wants this market to go down.
Your
My
former
goodness.
boss?
Nothing can keep
Flashbacks.
stocks down right now.
Well, yes, and I am surprised coming into this session you wouldn't see stocks decline more than what they are doing right now. But I just wrote a piece on Yahoo Finance calling this the hopium rally, because you've seen this market rally in 2019 to kick off the year on hope, on expectations. That's what the market does. But at the end of the day, you see this event come out and you really have to take a step back and say, you know what? Where's the earnings growth? We had the ISM manufacturing out this morning, not too hot. Where are the things? Are they getting better? And I don't think they are just yet.
Hope be changing.
Yeah, but we're hearing analysts and investor commentary from the likes of Greg Valliere, a friend of the program, who's saying now there's finally reason for markets to actually be taking a hit. Because I think for so long there was a lot of wishy-washy sentiment and perhaps a tweet from Trump and perhaps that China will retaliate and a lot of this ongoing tariff tension. Is this kind of a good enough reason for there to be this sort of pessimistic sentiment right now?
Exactly. I think, the market has been bid up and geopolitical risk, especially with Iran, has been completely disregarded. Miles and I, we always talk about this stuff on the final round. The Fed has juiced up the markets with its low rates, and I don't think the market has priced in, let's say, $80 a barrel oil. But now you have to at least think about it. Is it, what happens to the consumer if oil prices do hit $80 a barrel?
I mean, look, I think in a day when you still have Apple's a relative outperformer, Facebook is in the green, Amazon's the only one of the things that's underperforming right now, the market remains strong. And okay, it can go down 0.7% on one single day. As Jared noted earlier in the program, we haven't seen a 1% down day on the S&P since early October, right? Yeah. So we're talking about 3 months now where the market has had, forget about a 3 or 5% correction, which you would expect basically once a quarter, right, historically speaking. We haven't even seen a 1% down day. And so I don't know why this would change the market's view that the economy is steadily improving and the Fed is there to provide support, right? That's the thing that's driving this market higher. I mean, you see stocks like AMD yesterday go, absolutely nuts. It's like, this is not a weak market. And so I think to sit here and say things like, oh, well, now the market should be appreciating this, or, oh, now the market must go down because this thing will matter, is to just simply ignore the way the market has behaved.
But it does, I think the market does have to pay attention to oil prices now hovering around $70 a barrel. I just don't think that's priced into a lot of areas of the market.
Well, let's check tomorrow.
But the close is very important. The close today is very important.
Think about it. Like $66 a barrel was the high for 2019, right? So we're still $3 below that. Then we have 79 as the high from 2018. That's the highest we have seen since the pre-crash back in 2014. And so just on a technical basis, why are we going to be seeing $80 a barrel oil unless we start getting a weekly close above 65, unless we start seeing some follow through? Oil's already up 12% from its most recent low. So it's not like nothing's been happening in that market anyway.
And we've seen that move higher in oil prices without, I think, the full effect of the OPEC cuts trickling in. And with the Iran situation, it's been dormant for the most part in the lead up to this event. That's why you could see $80 a barrel. What does that mean? Let's say over $3 a gallon in gas prices.
We'll see. We'll see if that happens. All depends on what happens next, right? Thank you, Sozzi.
All right, thanks, y'all.
All right, coming up here on the show, we will talk to the only publicly traded esports team. Welcome back to Wi-Fi AM. Well, the esports industry has grown very rapidly with a lot of big-name consumer brands investing as sponsors of teams. And there have also been a few IPOs of esports companies, but there has only been one IPO of a pure-play esports team. That was Astralis Group, which went public last month. Jacob Lund Christensen is co-founder and CCO, and he joins us now. Hey, Jacob.
Hey.
All right, so Astralis, as I understand it, you guys have a couple different teams within the company. One of them is a Counter-Strike team. What are some of the other games that the teams play? And how does that work to have sort of a portfolio of teams? Is that uncommon, unusual for esports companies?
It's relatively unusual for esports companies, but it's actually something that's quite normal here in American sports as well. You see the groups like, HBSE owning an NHL team and an NBA team. It's somewhat similar to what we're doing. So we have a Counter-Strike team, we have a League of Legends team, and we have a team in FIFA.
Well, so then I guess that kind of answers the question I was going to ask, which is, do each of these games, kind of in your view, constitute a new league, right? Is esports like, so FIFA, I guess they'll be pro soccer, right? Is League of Legends like the NHL and NBA and so on? Do you see your portfolio kind of in that way?
Yes, absolutely. Different demographic and fans, different opportunities for sponsors. So yes, it's something that complements each other.
And then are any one of these, when you look at the portfolio of the leagues you're currently sponsoring, which one seems most advanced? Which one still has more of a nascent fan base, and kind of which game do you see as kind of the area that is most interesting to you right now?
We've absolutely seen most success in Counter-Strike. We have a team that has pretty much been #1 in the world for 2 years straight, which has never happened before. But actually, if you talk about an infrastructure and an environment that's being advanced, I would say League of Legends is the most advanced. It is built around a franchise system, as you know, from American sports, and it has grown to a tremendous size.
I do think it's an unfortunate acronym, League of Legends, LOL. But let me ask you, you mentioned FIFA.
Or the best.
You mentioned FIFA. That's a video game that I actually like and play, one of the few video games I'm good at. I've never been good at any of those shooter or action games. Halo, I couldn't play with friends. I was just so awful. But as I understand it, I mean, even, I guess Fortnite is a little bit of an exception since all the pro athletes love it. But as I understand it, for the most part, esports, the world of esports, does trend toward those shooter and action games and not as heavy on sports. Is that fair to say? I mean, you don't, or at least you don't often hear as much about FIFA or people playing the NBA games or people doing esports for Madden, even though I know that exists.
I think the really hardcore, dedicated fan bases are for the games that are something different than a normal sport. But I think what the sport games can do is they can kind of broaden out across it. So when we signed our FIFA players, our Counter-Strike players, our League of Legends players, they all wanted to play FIFA against the FIFA player because they've all played FIFA, whereas they haven't really played Counter-Strike and League of Legends at the same time. So it is something that brings something different, and it's an interesting profile.
It's like NFL receivers love playing pickup basketball. Right. I want to make sure I ask you, whenever we have esports guests, I want to ask you, there are those who think that the amount of money that has been flooded into esports in terms of the investment over the last couple of years is a little inflated, and you hear certain valuations of the size of the industry, especially sort of mid-2019, you started to see some whispers that actually maybe esports won't be as big as everyone was projecting. Do you think there's been a little bit of a bubble in esports investment?
I don't think so, no. I think esport is very, very big currently. I mean, we have 450 million people watching it worldwide. We're expecting to have 650 million people watching it in 2022. I think finding the right investments is the hard part. And because people are willing to spend, people are putting up valuations that are a little bit high sometimes.
Well, to that point, you went public on the Danish stock market last month, and if you think about the oversubscription that you did face, overall, it was a successful debut in some regard. How do you feel on the public markets now, the amount of scrutiny, kind of criticism perhaps that you were getting versus being private?
I think it's interesting. I'm coming from a world where I used to sleep under the tables and play tournaments for mouse pads, 15 years ago.
Like so, Elon Musk.
Exactly. So for me, this is absolutely crazy, but I think it's been an amazing experience. And I think this is, like everything else we've done, helped validate the sport.
And then I guess just quickly, if we assume that, the Premier League and the NBA and the NFL are all kind of mature professional sports, right? They've really found themselves the last 40 years. Where do you think esports is in that journey? Is this 1970s NBA where you still have the NBA and the ABA, or is this kind of in the 90s when we're really starting to figure out what these pro sports are?
I actually usually use that analogy. I would say it is right at when the NBA and NBA, where they're trying to find their footing. And I think comparable also to UFC before it really became the one thing. And I think at the end of the day, it's all about, UFC really succeeded when they started making it more about what happened outside the arena than what happened inside the arena. And I think that's what we're seeing with esports. Instead of just being, something that somebody does, it is super culturally relevant. I mean, Louis Vuitton is doing esport inspired clothing. MasterCard is sponsoring the opening ceremony of the League of Legends World Championship. So now it starts seeping into music, clothing, trends, and we see that. And I think that is where we're really going to see the tables turn, so to speak.
All right, next we have to take our field trip to MSG to watch an esports tournament,
right.
the three of us. Jacob, thanks so much.
Thank you so
Great
much.
guest, great chat. Appreciate it.
Thank you.
We'll be right back here at Wi-Fi AM after a quick break. Welcome back to Wi-Fi AM. We're going to have some fun now because Baby Yoda is old news. Sorry, now Netflix's The Witcher is the current most watched TV series in the world. This is according to a report yesterday, and it's stirring up some controversy considering that the show has had very harsh reviews from critics. But as Reed Hastings, the CEO of Netflix, has famously said in the past about certain movies that did well, there is a big divide between critical reaction and what audiences want. So, as an experiment last night, Melody, Ethan, Wolfman, and I, each of us watched the first episode of The Witcher. We wanted to see what it was all about.
Kids, this is homework these days.
Miles, of course, didn't watch. I don't think he would have anyway. Melody, what did you think? Let's start with you.
I dozed off. I watched it a little bit too late, but I love the feminist angle.
What feminist angle?
What do you mean?
Oh, the powerful
the little girl who's like,
okay.
oh, I can't be a witch because
Well,
I'm a girl.
but then at the end, they don't let her do much.
However, that's just the first episode.
Yep.
We don't know what's going to happen, but from the get-go, you can tell they recognize that it cannot just be a machismo, sexism sort of thing. So I appreciated that. This is not my genre.
No.
It just ain't.
There's a term in Hearts, called shooting the moon, where you get all of the cards you're not supposed to have and you win. And that's sort of, I think,
Thank
what
you for
Netflix
workshopping that before
is
coming on the show.
That's, I think, what Netflix is trying to do with shows like this. And you know what? That's fine.
Yeah.
You can have something that is just trash, but when it's fun and it just goes too far, it gets into this like cultish kind of environment.
And did you feel it was fun?
And I felt like it was fun. It's not there yet from the first episode,
right.
But you saw them going way past where anybody who really is trying to write a good story would ever go. I mean, I think having a giant situation when you have a war and conquest without any stakes being set beforehand doesn't really happen.
Right, there was suddenly
It
a
feels
battle
very
scene
arbitrary.
10 minutes into
Yeah,
the
like,
first episode.
this is Sparta, and you like have no idea what's happening.
I didn't know any of the characters.
But I think it's very clear that you could easily see somebody like Henry Cavill being very, he's not, it's hard to say whether he's good or not. He's sort of playing this in a way that is so kind of taciturn and straight. It almost seems like he's joking.
Right.
But that also that does make for something that's fun and kind of has this really easy to parody thing.
And Dan,
I heard it would be so fun. I didn't even think it was that fun.
Wow.
But I had a lot of friends who've watched the whole series already say to me, oh, just give it another episode. But what I always say is, in the days now where there's so much to watch, a show has to hook you with the first episode. I don't want to hear, oh, give it a couple more. I shouldn't have to. If it didn't hook me,
But will you?
No, I'm done.
Oh.
I didn't think it was awful, but like, it's just, there's too many other shows to watch.
Do you think, what if it's the next GOT?
It's not. You gonna keep watching?
No.
You gonna keep watching The Witcher?
Probably not. However, I do think that it could go somewhere, especially given the costumes and just the fact that it knows it's ridiculous. And
all right, we'll leave it there. Now that is it for Wi-Fi AM today and every day. We're signing off after doing Wi-Fi AM for almost 2 years. We want to thank all the producers on this show. We are changing our daily live lineup. Our show On the Move will now run starting Monday from 10 to 1 p.m. So make sure you catch that. Now the Wi-Fi AM show producers put together a little something to showcase some of our fun moments from this show. Take a look.
Lower than you. So it's sitting in a stool. You are higher than the baby.
Oh, sweetie. Miles barely chose to be in that.
That was great. So happy that happened.
Only in retrospect.
Ah, yeah.
A homie.
Yep, with the socks.
The socks.
Melody wore
He's the most famous person we ever had.
He was a good interview,
Yeah, by
I
far.
have to say, you know.
Good job with that
People
booking.
don't always have it.
I think that's when I said it tastes like Manischewitz.
These
We
bottles,
used to drink on this
those
show.
bottles of wine.
All right.
Extremely good.
Oh,
10 seconds,
yeah.
Now it's 5.
I would
now
never
we're
be
done.
able to
Thank
afford
you,
that.
thank you, thank
Yep.
you. That's the show. Stick around for On the Move right here at yahoofinance.com.
11 a.m. in New York City, 90 minutes into the trading day. Stocks are trading down as they have all morning. We're going to jump into that. That's after the rising tension in the Middle East. Last night, President Trump authorized a strike in Iraq against top Iranian military commander Qasem Soleimani, following an attack on the U.S. Embassy in Baghdad that took place earlier this week. News of that strike has oil prices right now surging. They're up more than 3%. Welcome to On the Move. I'm Adam Shapiro.
And I'm Julie Hyman. Thanks for joining us. Our top story today is, of course, Iranian commander Qasem Soleimani being killed in a drone strike at Baghdad International Airport last night. That strike authorized by President Trump. Iranian leaders are vowing, quote, forceful revenge against the United States. As Adam just mentioned, oil prices are surging on the news and stocks are sliding. We've got team coverage to bring you all of the details. Ines Ferre is on the floor of the New York Stock Exchange. Jessica Smith is in Washington. Jess, let's start with you. Thus far, I believe all we've heard from American commentary from the White House has been tweets from the president, right?
Right. We have seen statements, and Secretary Pompeo has been doing media interviews, but we have not had an official on-camera briefing with the White House at this point. We did hear from President Trump in a tweet. He said that General Qasem Soleimani has killed or badly wounded thousands of Americans over an extended period of time and was plotting to kill many more, but got caught. He was directly and indirectly responsible for the death of millions of people, including the recent large number of protesters killed in Iran itself. He went on to say he should have been taken out many years ago. Now, Secretary of State Mike Pompeo says that Soleimani was planning an imminent attack. He said that in an interview this morning, but he would not provide any details about that attack. On Fox News, Pompeo talked about the possible reactions and responses from Iran going forward.
I hope that the Iranian leadership will see that, they'll see American resolve, and that their decision will be to de-escalate, to take actions consistent with what normal nations do. And in the event that they do not, in the event they go the other direction, I know that President Trump and the entire United States government is prepared to respond appropriately.
Pompeo said that the U.S. is expecting a range of possible responses, and many in Congress are expressing concern about the consequences of this move. They are worried about Iran's retaliation. Iran has already promised revenge. Democratic presidential candidate and Senator Elizabeth Warren is one of those politicians who is very concerned here. She said in a tweet, Soleimani was a murderer responsible for the death of thousands, including hundreds of Americans, but this reckless move escalates the situation with Iran and increases the likelihood of more deaths and new Middle East conflict. Our priority must be to avoid another costly war. Now, President Trump is set to speak in Miami this evening at an event for evangelicals. That starts at 5 p.m. We'll keep you updated if we hear anything more from the White House throughout the day. Adam and Julie.
Jess, thank you. We are watching oil prices surge after the attack, and Inez Ferrer is on the floor of the New York Stock Exchange. She's got details on that and equities for us. Inez?
Adam, WTI right now is up more than 3%, or up more than $2 a barrel. Also, this is, of course, affecting some of the energy stocks this morning. We're watching Hess, Apache, Occidental Petroleum. All of those are up around 2% this morning. And, of course, also oil is affecting the airlines. Jet fuel often is the second largest cost for airlines behind labor costs. So looking at some of the airlines which are under pressure this morning, United and American, in fact, those are some of the worst performers on the NASDAQ this morning. United is down more than 3%. American is down more than 4%. Also looking at Delta, that's under pressure this morning as well, down more than 2%. Southwest under pressure, and also JetBlue is down more than 2% this morning on the heels of higher oil prices. Adam, Julie.
Inez, thank you. We want to bring in this hour's panel to discuss all of this. Yahoo Finance's Scott Gamm and Akiko Fujita. Also joining us on the phone, New York Congressman Peter King, Republican of New York. Congressman, thank you so much for joining us. I want to ask you a little bit about the sort of behind the scenes of this. Were members of Congress informed before this attack was happening? If not, afterwards, how did you find out? And what is now top of mind for you and your fellow members of Congress?
Yeah, first of all, there was no official briefing of Congress. I assume that the top people on the Intelligence Committee were probably notified. I'm no longer on that committee. And I know that Senator Lindsey Graham said that he'd been told about it earlier in the week. This is the type of thing which usually is a close hold. Like people who say that the president should have gone to Congress to get authorization. We can have that debate about a declaration of war, but something like this, every president has asserted this power, whether it was President Clinton, President Obama, President Bush, the right to take quick action when it's they believe it's in the best interest of the United States, and that quick action is required. In this case, Secretary Pompeo said not only was Soleimani known to be a bad guy and being responsible for the death of an American contractor last week, and also the attack on the American embassy, but that other attacks against American interests were imminent, and that it was important to take him out now. I think that it was the right thing to do. We'll have to wait till we get all the evidence in, but I think it's wrong to be, at this stage, criticizing the president. There'll be time enough for that later on. I think there should be a solidarity behind the president. After Congress is briefed, if people have objections, that's the time to do it. But I think it's important for the face of the world to show that that we are, again, united. Yes, sir.
Representative King, are you still on the Homeland Security Committee and the ranking member on the Subcommittee for Emergency Preparedness? And if you are, or from your experience with those committees, are we prepared for how Iran may retaliate? And if so, how are we prepared?
I believe we are prepared. The reason I say that is that Iran, unlike Al-Qaeda and ISIS, they really are, I hate to use the term, the major league when it comes to terrorism. They're trained state terrorists, and there have been, over the years, a number of Iranian operatives, many of them affiliated with Hezbollah, who are here in the United States. For the most part, they've been involved in fundraising. And I know the law enforcement tries to keep them under surveillance and monitor, but there is that potential threat. And that's why I understand, like, for instance, in New York City, Mayor de Blasio has asked the police to go on a higher level of alert, because we have to be ready for that type of attack. Well, I don't think we're going to see any type of military attack from Iran. What you're going to find is the attack against American, what they would consider soft targets, whether it's American embassies, whether it's American military personnel overseas in non-combat situations, or it could be locations here in the United States. So this is not going to be easy. I said I support the president's acting, but we have to realize this could be tough. It could be very brutal, and we have to be ready back here. But I can tell you that law enforcement, federal, state, and local, is on their guard right now against any action here in the United States.
Congressman, I want to get back to what you said earlier, which is that there was an imminent attack on Americans. This is something, as you point out, we've heard from the president, from the Secretary of State, from the Defense Secretary as well. Have you gotten any details on what specifically that was, or how imminent that actual attack was?
No, I assume we will get briefings on that next week. It'll have to be very close. The reason I say that is I don't know where the intelligence came from. It could have been from another government. It could have been a source we have within the Iranian government. It could have been, again, a source within another government that is affiliated with or associated with Iran. So we have to be very careful that when we do put out what the nature of the threat was, that we don't give any indication of how we got that information or any source that we had. So, again, I think the president does have an obligation to give Congress as much as they can without giving up, again, a high-level source that we may have gotten it from. And I've been on the Intelligence Committee. I am confident that the chairman and ranking member of the Intelligence Committees will be given a much more detailed briefing than the rest of the Congress will.
Congressman, the last time President Trump initiated one of these military strikes was back in April of 2017 with the Tomahawk missiles in Syria.
Right.
Would you liken this attack on a similar level as that one? And do you think this one will have more ripple effects than the one in April of 2017?
No, as I said, I support the attack, but this one potentially has more consequences. With Syria, I was never that concerned that Syria could retaliate against the United States. We had to be on our guard. But again, Syria was the target there, and Syria is not a major league player when it comes to international terrorism. Iran is. So we have to be, this has more consequences because Iran is more of a major power, and it does have terrorist links all across the world, for that matter, whether it's in South America, Europe, the United States, wherever. So no, this is, listen, I'm not kidding myself. This has potentially more dangerous consequences. I just think it was better to do it now. I think if we had taken action like this against Al-Qaeda back in the late 90s, we may not have had 9/11.
Congressman, you were talking about the potential now for Iran to hit soft targets like embassies. What about the threat of cybersecurity attacks here in the United States? And there, do you think we are prepared? And if not, what do we need to do?
Iran does have significant cyber capability. We have far more than they do, and that this could be a balance of terror. If Iran knows that any cyber attack that they launch, we can do far more damage to them. Now, all of this we have to be on our guard for. And I can tell you right now that the American intelligence community, its counterterrorism community, military, all are on their guard around the globe, around the world, and particularly here in the United States.
Congressman, thank you for your time. New York Congressman Peter King joining us there on the phone. Appreciate it.
We want to take another look at oil, and let's bring in Prosper Trading Academy CEO Scott Bauer. Scott, I believe you are joining us from the CME. We're watching the price of oil, but to put this in context, Back when the Iranians and their proxies attacked the Saudi facility, the Aramco facility in September, oil, at least West Texas Intermediate, shot up to around $60 a barrel, but it didn't stay there very long, then it came back. Do you expect us to pull back from where we are right now? We're at 63 bucks and some change.
You know, it's a little bit different right now, Adam. And as the senator was just talking about, this attack is different. And you know, the attack that we've seen earlier, we didn't expect maybe some pushback or some follow through. This one could last a little longer. So I wouldn't be surprised if we see oil remain up here. Though when you break it down, if you remove, the geopolitical risk out of the equation here, fundamentally, I still see some major headwinds in the oil space. So if I'm looking at it from two different sides here, as an investment, I would probably want to take the short side. As a trade, I'd want to stay long it.
And so now, I guess, what are you watching for now in the coming days to figure out which of those bets is correct?
Well, Julie, if you look at this and everyone's waiting for what's going to happen next. Everyone is waiting for the reprise from Iran. So I think that inherently is going to keep the price of oil at least stable. I don't think we get a spike from here unless, God forbid, there's another big attack somewhere. So, in the short run here, I'd probably, as a trade, I'd probably buy some upside calls here in the option market because you're completely defining your risk. But overall here, if we got, a little bit further pop in West Texas up towards 65, I'd have to short those futures there.
Hey, Scott, doesn't all this geopolitical stuff not matter as much for oil anymore just because we're not as reliant on oil as we once were? And of course, the U.S. is producing really more oil than any other country.
So you're absolutely right in terms of the fundamentals. And I think that's why we're not seeing as big of an overreaction as we would have, say, 18 months ago, 3 years ago, 5 years ago. If we would have seen an attack like this, we probably would have seen a 5% or greater spike. So, the market has gotten a little immune to it. The market, I don't want to say it's like the little boy that cried wolf. It's not at all. This is extremely important, extremely serious. But you're right. The oil flow is still going to be there. The question becomes, in terms really more so for Brent than West Texas, is the Strait of Hormuz going to get attacked? Is that going to get shut down? So I think there's probably a little bit more volatility in Brent than there might be in West Texas.
All right. Prosper Trading Academy CEO Scott Bauer, good to see you. Thank you for joining us.
You as well.
And to continue this conversation around Iran, we want to bring in Hussein Ibish. He is Arab Gulf States Institute Senior Resident Scholar. Hussein, obviously a lot to talk about here in the wake of this attack and this killing. What do you think happens next? What do you think will be Iran's reaction?
Well, okay, so Iran right now is going to be very badly torn between two impulses. There's a lot of anger and a lot of political and ideological pressure for a major retaliation, a major response to restore deterrence, to show Iran's power, to strike back. It's a combination of rational and irrational motivations. It's going to be very hard for them to resist that. On the other hand, they now know that this is not a one-way street. Since May of last year, they've been attacking and provoking and doing all these things, like even attacking the Saudi oil installations, and not really seeing much of a reprisal. Now they know, between the attack on Kata'ib Hezbollah, which killed 25 Iraqi militia members a few days ago, and then this killing of that group's leader plus Qasem Soleimani, the most important Iranian military commander, retaliation is real, deterrence is real. This is a two-way street now. So if they respond with a major escalation or a major attack, they will also be attacked, and they have to consider whether they really want a war with the United States.
Hussein, help us understand. The Iranians are Shia Muslim. The Iraqi government is a predominantly Shia government, yet the population is Sunni. How does this work? Because this plays in to what's going to happen in Iraq, doesn't it?
Well, Iraq is really a divided situation. I think one of the most interesting things that's happening in Iraq is the protests, where the Shiite constituency, especially the youth, had risen up in the streets and months of protests and hundreds of people killed by security forces and by militias, the protests became increasingly not just anti-corruption and anti-dysfunctional state, but anti-Iranian and anti-militia. And I think one of the downsides, the attacks on Kataib Hezbollah and then the killing now of these two gentlemen, is that it has allowed Iran and its allies in Iraq to shift the topic back to the United States. I think it's going to be very hard for the Iraqi government to resist pressure to expel U.S. forces from the country, and then that would mean all foreign forces. The U.S. might be able to stay in the Kurdish areas in the north. It's going to be very complicated, but the future of Iraq has been thrown into tremendous chaos by everything that's happened internally and now being caught in the crossfire of Iran and the U.S.
Hussein, let me pick up on that point that Adam raised about Iraq, because we've heard from the Iraqi Prime Minister condemning this attack, saying it's an act of aggression on Iraq and an act and a breach of its sovereignty. So you've already talked about how this could affect the relationship between the U.S. and Iraq. What about how it could destabilize the region as a whole?
Well, I mean, look, you have to understand that to some extent, there are many Iraqis who say that sincerely. There are also many Iraqi leaders, probably like the president, Barham Saleh, who's a Kurdish gentleman who's also made strong statements, who are say it's a political statement. They feel they have to say it. It would be unpatriotic not to say that this is a bad thing. So that you have to, consider each Iraqi who says this and take some of it with a grain of salt. On the other hand, the political pressure to get Americans out will be very strong on everybody, but then they'll have to get everybody out, and it's a big mess. Regionally, I think it's a real question of whether now there's a pause. Iran is going to have to seriously, for the first time since May last year, consider their next action in light of deterrence, in light of real retaliation, right? They're going to have to seriously consider their strategy. Again, for the first time since last May. That's a while, right? Now, if they decide to go ahead and keep in this process of provocation and tit for tat and retaliation, they'll be opening the door to potentially ending up in a war with a much more powerful and much more dangerous opponent, which even though Trump doesn't want a war, but still that's where they would be going, right? Or they can take this pause, they can figure out what they're going to do. And if the U.S. is serious, as Mike Pompeo keeps saying, that we want a de-escalation, which is very smart, and we move through regional actors like Oman and Kuwait, who have good relations with both sides, and send that message to Iran that, look, you've hit us and our friends, we've hit you and your friends, enough. Yeah, seriously. We don't have to have negotiations and a makeup session, but why would we want to take this any further? Let's both chill out for a bit. That's a message Iran would have to seriously consider.
And I think that's probably what a lot of people are hoping for. Hussein Ibish of the Arab Gulf States Institute, thank you so much for your time and perspective.
Thank you.
Appreciate it.
Anytime. Thank you very much.
Coming up, statewide slowdown. Which U.S. states are in danger of falling into recession? Plus, before we go to break, take a look at some of the top trending tickers right now on Yahoo Finance today. There you see ExxonMobil. It is actually trending down, at least it's trading down at this moment.
Welcome back to On the Move. I'm Jared Blickery, and we have stocks under pressure. Dow Jones off about 250 points, not even 1% though. Haven't had a 1% down day in about 1 month. In the S&P 500, down about 0.69%. Haven't had a 1% down day in almost 3 months. So just for some perspective here, NASDAQ is off a little bit more, as is Russell 2000, off about 0.75% here. We can see this is the intraday price action. We gap down, are holding the lows here, but really only off about 0.2%. And we're going to take a look at the VIX because that is a little bit elevated here. We started out close to 15, but we are trending down. That is a good sign here. And then 10-year T-note yield, that is down substantially. 7 basis points is a very big move. It's coming on the heels of yesterday's 3 or 4 basis point drop as well. We can also take a look at the US dollar index. Really not too much change. It's down about 0.02%. Not a big move, but we do want to keep an eye on that. Let's go straight to the Dow Jones heat map, and we can see a lot of red on the screen here. And Apple is down about 0.2%, along with Microsoft, JP Morgan off almost 1%. But I want to get to some of the sectors here getting hit. Airlines down substantially. You can see Americans down almost 4%, and JetBlue's down about 2%. In the energy sector, that is up, as you might imagine, along with crude oil. We can see Royal Dutch Shell up about 1%, along with Total. BP up nearly 2%, but the U.S. majors not really feeling it here. They're each down about 0.3%. We can also look at the aerospace sector. Some of the stocks benefiting: Northrop Grumman, that's up about 5%. Lockheed Martin up over 4%. And we also have a few stocks in the red here, but for the most part, the defense stocks doing well. Let's take a look at the sectors, and we can see leading today are defenses. We have real estate and utilities in the green, followed by staples and communication services. We're going to be right back.
Stocks are falling sharply in the wake of that U.S. airstrike in Baghdad, which killed an Iranian military leader, putting the brakes on this the past year's rally. This all coming as the Federal Reserve is set to release minutes of its December meeting, shedding light on its approach to raising or lowering interest rates. With us now to discuss is Jeff Soddy's Capital Wealth Planning Chief Market Strategist. Jeff, I know as we go into the new year, you are looking at potential risks. Well, today we got one, a risk materializing. So as we head through the next several months, what other risks are you looking out for, and how are you preparing for them?
Well, I think you have always geopolitical risk. I think you have the potential for policy risk with bad policy coming out of D.C. Crude oil's obviously a risk if it spikes higher here. And you've got the trade deal. I don't think there's going to be a trade deal, too, a second phase of it. I think that Chinese have pretty much done all they're going to do, and I think phase one is going to be it. So I think those are risks. I don't think today should be taken into much consideration. This is natural for hot money to sell in front of a weekend after an event like we saw yesterday afternoon. I'd be more inclined to step back and see what happens next week.
Jeff, it's Adam here. Good to have you here. And I'm holding your most recent note, Patience, Grasshopper. We're dating ourselves when we talk about the old Keith, was it Keith Carradine? Anyways, that TV show from the 70s. But you talk about going forward. One of the things you say is be patient, and you put a horizon on it of several years. You cite your friend, Mr. Russell, I think it was. But you talk about gold. You like what's happening with gold, it would appear, because we have a weaker dollar, and gold would be a better place for performance than, say, oil. Talk more to us about that and why we might want to consider that as we head towards $1,600 an ounce.
Well, I'm not a gold bug by any stretch of the imagination, but there's a time to be long gold and there's a time not to be long gold. And for the past, 7 or 8 years, it has not been a good place to invest. It looks to me like it's washed out. I do think inflation is going to pick up at the margin. I think the dollar has probably peaked, and I think all that kind of puts a tailwind behind precious metals.
Hey, Jeff, Scott Gamm here. I want to go back to your earlier point about the modest pullback that we're seeing in stocks today. I'm curious what a buying opportunity looks like in this current environment, in your view, given the rally we've had over the past 2 months.
Yeah, I would think around 3,200 is support. And you're going to start hearing the old stock market axiom, so goes the first week of January, so goes the month, so goes the year. One of my mentors, Lucian Hooper, back in the 70s, was the longest contributor to Forbes magazine. He also worked for Thompson McKinnon, which is where I met him. Used to say, the January barometer is okay, but you're much better off watching the December low indicator. And he explained to me that when the market takes out its December low in the first 3 months of the new year, watch out. So I would watch that December low, which I do not think we're going to take out. I said the same thing last year. So the December low indicator that a lot of people don't know about is worth consideration.
And Jeff, we're focused on the U.S. market right now, but I wonder if you see any opportunities outside, whether it's in a place like Europe. Obviously, we saw negative data come out yesterday from places like the U.K., certainly pointing to a slower trajectory on growth. But is that a time to maybe get into the market on potential opportunities?
Yeah, I think the international stocks, particularly Europe, is cheap. And my father used to tell me good things tend to happen to cheap stocks. I think the emerging market and frontier markets are worth consideration here. I think we're in a worldwide synchronized bull market.
All right, Jeff Sott, Capital Wealth Planning Chief Market Strategist. An optimistic note to end there. Thanks, Jeff.
Thanks, Julie.
Some startling projections coming from the Federal Reserve Bank of Philadelphia. 9 U.S. state economies are expected to slide into contraction within 6 months. That marks the most since the end of the financial crisis. Let's dive into this a bit more with the panel and those who are on the precipice. For instance, New Jersey, our neighbor here in New York, they expect New Jersey to contract. Is this something that could contagion perhaps spread across the country?
Well, certainly. And it certainly could affect the national unemployment rate that we follow so closely just from a market point of view. We also saw a survey from Challenger & Gray just talking about an increase in layoffs, job cut announcements for 2019. So I'd wonder if that would continue into 2020, but I also wonder if that's really because of technology or because of some fundamental issue with the economy. I actually think it's the former, right? I think technology is a big threat to jobs in the years ahead, and you're starting to see those effects kind of come to the surface, and I don't think governments are prepared for this.
Well, when you look at these states also, you're seeing, Delaware, Montana, Oklahoma, West Virginia, Kentucky. I also can't help but think of the manufacturing data that we got today, which shows contraction in manufacturing and came in worse than expected last month at around a little over 47. So that's got to be feeding into these projections as well.
Yeah, I'm struck by the huge divide that we're seeing in sentiment between what we're seeing in the markets versus what we're hearing maybe at the state level. I mean, we just ended that conversation with Jeff saying that we're in a synchronized bull market globally, and that's not necessarily what we're finding within the states. I mean, I think that there is a lot of concern beyond the things that we talk about every single day here, which is the geopolitical risk. At the state level, that's not necessarily what's being discussed. And to Scott's point, I think there are a lot more long-term issues that have led to sort of the slowdown that a lot of these states are likely to see, including automation.
And the continued, to your point, decline of the manufacturing sector, but also the rise of the services sector. So maybe some states aren't as equipped to handle those jobs that are sort of in vogue right now.
Maybe so. One positive note, Alaska, no longer expected to post negative growth. Who knows? One other state not on that list is Illinois, and coming up, legalized it. Why recreational cannabis is already booming in Illinois just a couple of days after legalization went into effect. Plus, before we go to break, take a look at airline stocks. As we've been discussing, they are falling as oil is spiking. is just after 11:30 a.m. here in New York City, about 2 hours into the trading day, and we've got stocks dropping amid rising tensions in the Middle East. Last night, President Trump authorized a strike in Iraq against top Iranian military commander Qasem Soleimani following an attack on the U.S. Embassy in Baghdad earlier this week. News of that strike, in addition to having oil, stocks falling, has oil spiking today. It is up by nearly 3% at the moment. Welcome back to On the Move. I'm Julie Hyman.
And I'm Adam Shapiro. Last night, Iranian commander Qasem Soleimani was killed in that drone strike at Baghdad International Airport. Now, the strike was authorized by President Trump. Iranian leaders vow forceful revenge against the United States. Earlier this year, editor-in-chief Andy Serwer had the chance to sit down with former National Security Advisor to President Obama, Susan Rice. And Andy, I don't know if she's reached out since that original interview, but I imagine she's going to have quite a bit to say at some point about what's happening.
Yeah, and she perhaps anticipated these problems with Iran. We were certainly having problems with Iran when I spoke to her several months ago at that point. And it's interesting, and maybe not surprising you guys, that the response in Washington, D.C. is falling along partisan lines. So John Bolton, former head of the NSA, came out this morning tweeting support for the president and saying we got rid of a bad guy, whereas Samantha Power, a former ambassador to the United Nations, saying this is a mistake. And Susan Rice, when I spoke to her, as you say, Adam, suggested that there could be problems if the president pursued policies like these. Take a listen to what she had to say.
I think the Trump administration has a perception, whether they're dealing with Iran or China or any of these ancient cultures that have a history and a pride and a philosophy of their position in the world, which may not accord to our view of their position in the world, but that they're not going to just back down because we say boo. And, you know, too often we see the president backing down after escalating and raising expectations.
So really right now we're, in a sense, in a waiting game because Iran is going to
back down this time.
Well, that's right. He didn't back down this time, but I think the bigger point here is what's going to happen next, right? And so we don't know, and I think it's fair to say Iran will retaliate, and then we'll see what President Trump does.
Or we just had Hussein Ibish on, and he pointed out that this was a real message to Iran because there had been such restraint after they attacked the Saudi Aramco facility, after they've attacked how many tankers this year, or last year rather, in the Straits. And this was a clear message, okay, we will retaliate. So what he was saying is that the Iranians will think twice, perhaps, about retaliating?
Well, I mean, that's what President Trump hopes, right? And we don't know. It could be, you know, the Iranians will say, wow, that was terrible. We're never going to do anything again. Maybe a little unlikely.
Unlikely, I think. But I think it's also important to kind of look beyond sort of your standard military attack, right? I mean, Julie, you talked about a potential cyber attack. We know the Iranians have been ramping up their capabilities over the last 10 years or so. This is not going to take, I don't think, sort of the typical sort of war game scenario. I think it's going to go well beyond that, or maybe a lot more, because if it's military on military, I mean, Iran knows that they cannot match what the U.S. has.
And Akiko, you're right to say cyber because the Iranians have showed willingness to pursue those types of strategies before, and they have some expertise there. There's also attacking civilians as well. So you hope none of this comes to pass, but unfortunately there is a likelihood that something along those lines will occur. And you know, what that means for not just the markets, obviously, but bigger picture, society and the world is unclear.
And Iran's nuclear ambitions, I wonder what all this means for that. Do they exacerbate their path towards a nuclear weapon now that we don't have the Iran deal anymore?
Right.
That's right.
Right. Andy, thank you. And we're going to continue all of this discussion now, because another possible repercussion, as we've been discussing, is some sort of significant cyber attack potentially on the U.S. itself or U.S.-related targets. Joining us now from Washington, D.C. to discuss is Tom Warwick. He's a non-resident senior fellow at the Atlantic Council and formerly a Homeland Security official. Tom, what do you think are the prospects here of reprisals from Iran? Do you think that it is most likely that we'll see some sort of cyber attack, or do you think that there will be a more military response to this?
So the Iranian Supreme Leader, Ali Khamenei, has already promised reprisals for the death of Major General Soleimani, who headed up the Quds Force. So it's clear that the Iranians are planning to retaliate in some way. One of the things that obviously concerns those of us who follow the homeland is whether that attack would occur here. And if it does, cyber is one of the means that Iran would be most likely to try to reach out to. The irony is the United States has been carrying out a campaign of sanctions and cyber attacks against Iran, and Iran has been trying to find ways of retaliating in kind. So you're absolutely right that this could definitely step up cyber attacks against the United States.
Back during the Iraq War, there was the discussion about Iran wanting more influence in Iraq. They appear to have some influence in Iraq. If we leave Iraq, as the president has said, if the U.S. pulls the remaining soldiers out of Iraq, don't the Iranians win, so to speak, what they've always wanted, despite what's just happened in the last 24 hours?
You have actually put your finger on exactly the most important question right now, because one issue is whether a year from now we're going to look back on the death of Soleimani and whether it's made the United States and its allies in the region more secure or less secure. And so in many respects, a lot of that is going to be determined by whether the president decides to pull U.S. diplomats and military out of Iraq and honor the promise that he made to his base to try to pull U.S. forces back from Middle East conflicts, or whether instead he's going to adhere to his promises to the country that he will try to reduce Iran's influence and its ability to carry out attacks against the United States, including cyber means, against Israel, against our allies in the region. All of these kinds of attacks have been going on in different levels for years, and largely because of this back and forth campaign between the United States and Iran using cyber as a weapon on both sides.
And Tom, when you talk about Iran's cyber capabilities, I mean, how sophisticated are they when you compare it to the likes of China or Russia? And how do you think an attack would be carried out by Iran would look differently from some of these other countries?
So Iran's cyber capabilities have improved enormously in recent years. Back about 10 years ago, when there was an effort to try to disable Iran's nuclear program, it took 3 years for Iran to carry out what are called industrial control system attacks, and even those at that point were at a primitive level. Several years later, when somebody erased a bunch of hard drives at the National Iranian Oil Company, it took the Iranians about 6 months before they launched a dangerous wiper virus that did the same thing to Saudi Arabia's oil companies' computers. Now what we're seeing in the last year and a half is that Iran's response time has gotten down to hours. In other words, it's quite possible, as we sit here right now, that Iranian cyber attacks may be launched against American targets, whether they be banks, oil companies, academic institutions. But it's certainly clear that Iran has the capability to launch attacks on very short notice through cyber means.
Well, Tom, just quickly, could you elaborate on a point you made earlier about how this could make us less safe, the killing of Soleimani, what that would mean for us? Because I think we can all agree he was a bad guy.
Yes. He had the blood on his hands of hundreds of American soldiers and civilians going back more than a decade. This is one of the most dangerous military and terrorist agents anywhere in the world. And his efforts have been directed entirely at spreading the Iranian model in other countries in the region where there are military forces that are not under the control of their responsible governments. And this kind of campaign is one of the things that's destabilized the entire Middle East. So the challenge is going to be when someone like this passes from the scene, what's the political follow-up? In other words, this is certainly a military success. The question is whether there will be a political strategy by the Trump administration to take advantage of this and achieve more increased security in Iraq and the region. Right now, we don't know whether the United States will end up pulling its forces out of Iraq. That would certainly give Soleimani a posthumous victory. or whether the United States and more importantly our European allies are going to realize that we all have a stake in a more stable Middle East, and that the only way to do that is by continuing to work with our partners in the region to try to fill the vacuum that Soleimani's death has obviously created.
As you say, to be determined. Tom Warwick is Atlantic Council non-resident senior fellow. Thank you for your time.
You're most welcome.
Coming up, smokers need not apply. Why some are crying foul over U-Haul's new hiring policy. And before we go to break, take a look at some of the biggest losers in the Dow today.
Let's take a look at some big stocks on the move in midday trading. A couple that don't have anything to do with what's going on in Iran and Iraq right now. Frozen potatoes. Lamb Weston is the biggest gainer in the S&P 500 today. It is a maker of frozen potatoes, French fries, and other vegetables. Came in with its earnings per share beating estimates by 11 cents. Sales up 12%, volume up 10%, and the stock is up by about 11% right now. On the flip side, we've got the biotechnology company Incyte, whose shares are down sharply. One of its experimental drugs failed to meet the primary endpoint in a phase 3 trial. Analysts kind of split on what this means. It does have other products that are on the market right now, particularly in dermatology. So some analysts are saying this isn't that much of a disaster, but obviously the stock is also speaking loudly as it is down so sharply today. We'll be right back.
Recreational marijuana is now legal in Illinois. People lined up to buy on day one, which was New Year's Day. Illinois raked in $3.2 million on that first day of legal marijuana sales. Ben Kovler, CEO of Green Thumb Industries, a national cannabis packaged goods company and retailer, joins us now from Chicago. So another one now makes it legal, but we still don't have legalization at the federal level. So what kind of constraints does this put on your business to grow? And when do we get that restraint removed?
Great. Thanks for having me. Operating a cannabis business in the United States is an interesting thing because, as you mentioned, it's federally illegal. So we're able to operate under state laws, tightly regulated product and tightly regulated access. What we saw happen here recently shows that there's a huge amount of demand for the product in the United States.
Ben, there's so much demand that I was seeing a lot of reports on the first day of sales in Illinois that there were a lot of shortages, that various dispensaries were running out of product. I don't know if that happened at Green Thumb specifically. So tell me, did it? And what are you guys doing in terms of supply chain to meet that demand that is happening in Illinois and elsewhere?
Yeah, let's take a step back for a second. We think the Illinois market size is going to be $2 to $3 billion. We've been operating for 4 years or so as a medical market, running a couple $100 million a year. So you can't simply flip a switch and add a lot of supply into the market. And to the first question, being federally illegal means the product cannot transport across state lines. So building the supply chain for a $2 to $3 billion market, which really was just legalized in June of 2019, and the industry had 6 months to prepare. So we were not out of product. People are not out of total product, but there's less variety than people want. So certain form factors like flower or pre-rolls may be pretty tight, but there's plenty of edibles and other kinds of vape and cartridges and things for plenty of consumers.
We've obviously been tracking a lot of the cannabis stocks closely. Certainly 2019 was not a good year. And it seems like a lot of what we've seen is sort of this exuberance, that the potential around this sector has largely started to quiet because of the issue that Adam mentioned, which is no regulation on the federal level. How are you approaching sort of the growth prospects of your company as you look to see what actually shapes out on the federal level? And how close are we to getting actual regulation there?
Yeah, I think one of the important things for people to realize is the difference between U.S. operators, where the access to capital is different and we're listed in Canada, and the Canadian operators that are actually listed in the U.S., the New York Stock Exchange and the NASDAQ. The business prospects for our two businesses in the U.S. and Canada are very different. And so I think the story of 2019 was the beginnings of seeing those differences come to life. The opportunity in the U.S. is massive. We think it's a $50 to $80 billion industry in the United States. And stepping back, that's bigger than wine and bigger than hard liquor, okay? And just slightly smaller than beer. So we think it's just the beginning of people realizing what this demand looks like in the United States as we grow into that. And as regulations come out, operators are able to operate, we're able to have access to banking, and things are looking pretty good in the United States.
Looking good, but how much longer will it take, and how long can you hold out? I was looking at your stock chart. Over 2 years, you're up, but for the last year, it was kind of rough for you, and you were down compared to where you were around this time last year. So going forward, what's the run for you?
Yeah, actually, the stock was up over 20% last year. Things look really good in the United States. We have access to capital, we're able to build out, and we have a kind of a 10x kind of opportunity here in Illinois. We're also the largest operator in Pennsylvania, New Jersey, New York, Connecticut, Massachusetts, Florida. So the opportunity for growth in the U.S. is great. Green Thumb has tripled our revenue every year since we've been in existence, and we continue to have strong growth prospects. I think the capital markets move around, but the idea of a $50 billion industry being born in the United States for consumers across many kinds of demographics. We had lines around the block in Illinois, and it's old and young. It's rich and poor, it's black and white, it's male, it's female. And people around the country are interested in this product.
Ben Kovler, CEO of Green Thumb Industries, all the best to you.
Thank you. Thanks for having me.
Well, U-Haul says it's going to stop hiring people who use nicotine in some states where the company operates. Companies are allowed to consider tobacco use when making hiring decisions, depending on where they are, depending on state regulations. The U-Haul policy will not affect current employees who may smoke or use tobacco products. Yahoo Finance's Alexis Keenan joins us now. So, Alexis, walk us through the legality of this. As I mentioned, it's state by state.
It is. And so these nicotine users who are seeking perhaps employment with U-Haul, they're going to want to think twice if they are applying for work in a state that does not have legal protections for discrimination from employment based on nicotine use. The company that employs 30,000 employees across Canada and the U.S. said that the new policy is intended to establish one of the healthiest corporate cultures in the U.S. and Canada. The company's chief of staff in a press release went on to say that nicotine products are addictive and pose a variety of serious health risks, and added that the policy is a reasonable step in fostering a culture of wellness at U-Haul. Now let's take a look at the states where employers can legally deny employment to nicotine users. This is an issue that is left up to the states at this point because the federal government does not consider smokers a protected class. In dark blue, you can see on the map there are 21 states where nicotine users are not protected. That includes U-Haul's home state of Arizona. Also, the majority of states, there are 29 states, including Washington, D.C. They do have smoker protection laws against discrimination from employment. There are exceptions, however, for on-the-job risks from like safety risks that are created by smoking, also for jobs that require a higher level of physical fitness, also some carve-outs for some smaller employers. Also, though, there are outspoken critics, of course, as you can guess, of this policy. One particularly has been for a long time the ACLU. They describe the policy as, quote, a lifestyle discrimination, and they say it's not really fair to single out smokers when you have other high-risk activities that employees engage in after work, including things like motorcycle riding and also alcohol use. So a lot of controversy there, and at this point, we did ask for additional information from U-Haul, and they said that they're not taking interviews on this issue right now.
Alexis Keenan in the newsroom. Thank you. Coming up, firefighters warn those wildfires burning out of control in Australia will get worse this weekend when temperatures top 100 degrees. Plus, Apple celebrates a milestone today. Firefighters in Australia warn the raging wildfires burning out of control will grow worse this weekend. They've already destroyed 1,000 homes and forced thousands of people to evacuate. The Australian Navy began rescuing people trapped in a seaside town in Victoria after fires cut off land-based escape routes. Several hundred Delta Airlines employees, most of them flight attendants, are suing Land's End, claiming the uniforms it made are making some of them ill. The uniforms first appeared in 2016. Lawyers for the employees say the garments pose a risk of, and this is a quote, future serious health problems because of an allergic and/or sensitization response. Former Secretary of State Hillary Clinton has been named Chancellor of Queen's University in Belfast. She's the first woman to accept the post. Clinton calls it a great privilege. It's a mostly ceremonial position. The Chancellor often presides at graduation ceremonies. And finally, it was on this day in history, back in 1977, that Apple Computer was incorporated in Cupertino, California by Steve Jobs, Steve Wozniak, and Mike Markula Jr. The company today has a market cap around $1.3 trillion. We'll be right back.
It's time for Word on the Street, where we check in with our panelists and find out what stories they are watching. Scott, oil.
Yes.
We've been talking a lot about that today and the spike that we're seeing.
And isn't it amazing how modest of a spike? I mean, oil's been up for quite some time now, the past several weeks, on the OPEC production cuts that were deepened for 2020. We had a bunch of data showing decreasing supply of U.S. crude inventories, and now we've got this big geopolitical event, and oil's only up 2%.
And it's been losing, it was up more earlier in the day.
Exactly, and it kind of reminds us about what happened in September when we saw those Saudi Arabia airstrikes. Oil had a 2-day pop, then immediately plummeted. And by the way, the 2019 high for crude was back in April at $66 a barrel. There really wasn't anything notable to push oil higher at that point. So it's just incredible how these geopolitical events really don't have the reaction that they had in oil prices, say, 10 years ago.
Something else that's hard to ignore right now are those wildfires in Australia, and you're watching those.
Yeah, it's heartbreaking to see some of those images, right? And looking at the numbers right now, we're talking nearly 20 deaths, more than 1,000 homes destroyed, and it's about to get worse this weekend. 100-degree weather expected. And if you look at the number, I think it's hard to look at the scale of what's happening. So 14.6 million acres burned so far. That is larger than the size of Belgium and Haiti combined. And the reason I raise this is because it seems like all around the world we are seeing these fires get much more fierce, the temperature is raising. And I do wonder, in the discussion of climate change, if we want to bring it back to the markets, how many companies that are publicly listed are actually calculating the cost of climate change? And I think as these events start to escalate, investors are increasingly going to be asking, you know, what is that risk that we should price in?
You know, there are, if you try to buy property in places like South Florida, there are some developments which now tell you how many feet above sea level the development is located because of rising oceans. So it's not just large companies that are paying, well, should be paying attention to this.
It's individuals.
Individuals, if you're going to go, you know, a lot of people want to retire to Florida.
Yeah, and you know, we're talking about Australia, but of course, you know, here in the U.S., we saw the wildfires in California, and obviously climate change is not just wildfires, flooding, hurricanes. I think that's only going to escalate.
All right, Akiko, thank you very much. And Scott, a special thank you to you. It's your last day here with us here at Yahoo Finance. We want to wish you all the best.
Thank you.
And it's been great working with you.
It's been great working with everyone here. Thank you. Thank you so much.
Yeah, but you're not done yet. You got to get down to the stock exchange.
NYSE.
Stay tuned.
Coming up next.
And coming up, heightened tensions in Iran. We're going to bring you the latest developments following the U.S. killing of a top Iranian general. Plus, before we go to break, let's take a look at aerospace and defense stocks. They have been going higher today on these increased tensions. It's just past noon here in New York City. 2.5 hours into the trading day, stocks are sliding right now, although up off the lows of the session amid rising tensions in the Middle East. Last night, President Trump authorized a strike in Iraq against top Iranian military commander Qasem Soleimani following an attack on the U.S. Embassy in Baghdad earlier this week. News of that strike has oil prices surging as well, although just like stocks, which have come up off the lows, oil has come down off the highs. Welcome to On the Move. I'm Julie Hyman.
And I'm Adam Shapiro. We're going to keep talking about Iran. Iranian commander Qasem Soleimani was killed in that drone strike at Baghdad International Airport last night. It was authorized by President Trump. Leaders in Iran are vowing, and this is a quote, forceful revenge against the United States. Oil prices, they have been higher on this news, but again, are off of the lows. We have team coverage to bring you all of the details about this. Ines Frey is on the floor of the New York Stock Exchange, and Jess Smith is in Washington. Let's start first with Jessica. Anything new since we last spoke with you? Any word from the president other than the tweets?
No word from the president other than these tweets that we saw this morning. We are waiting to hear from him tonight at 5 p.m. He'll be speaking at an event for evangelicals, but there is no briefing on the schedule at this point. You did mention those tweets. President Trump tweeted that General Qasem Soleimani has killed or badly wounded thousands of Americans over an extended period of time and was plotting to kill many more, but got caught. He was directly and indirectly responsible for the death of millions of people, including the recent large number of protesters killed in Iran itself. He went on to say he should have been taken out many years ago. Secretary of State Mike Pompeo says that Soleimani was planning an imminent attack. He said that in an interview this morning, but would not provide details about that planned attack. He talked to Fox News about what comes next.
I hope that the Iranian leadership will see that, they'll see American resolve, and that their decision will be to de-escalate, to take actions consistent with what normal nations do. And in the event that they do not, in the event they go the other direction, I know that President Trump and the entire United States government is prepared to respond appropriately.
Pompeo said in an interview that the U.S. is expecting a wide range of responses, possible responses from Iran, and many in Congress are concerned about this retaliation. As you mentioned, Iran has promised harsh revenge in light of this airstrike. One of the senators that is concerned about this is Senator Chris Murphy of Connecticut. He said in a statement, no matter how good it may feel that Qasem Soleimani is no longer alive, he will likely end up being more dangerous to the United States, our troops, and our allies as a martyr than a living, breathing military adversary. There will be reprisals, and Iran will likely target American troops and even our own political and military leaders. Now, New York City Mayor Bill de Blasio was just giving an update about safety risk in New York in light of this airstrike. He did say that there are no specific credible threats in New York, but he says Iran has been known to have an interest in well-known locations in the U.S. like New York, and he says that the U.S. and Iran are in what he calls a de facto state of war at this point. Of course, we'll keep you updated on anything that we hear from the Pentagon or from the White House throughout the day. Adam and Julie.
Jess, thanks very much. Let's talk more about the market reaction now as we see oil prices surging. Inez is on the floor of the New York Stock Exchange with the details on that and on stocks. Inez?
Julie, oil prices are higher, but they are off their highs of the session today. We're looking at WTI that's up more than 2%, sitting above $62 a barrel. It had been above $63 a barrel about an hour ago. And just looking at Brent is up more than 2.5%. It had been up more than 3.5% about an hour ago. Also, some of the energy stocks are off their highs of the session. We're looking at Hess that's up around 2%, Occidental Petroleum up more than 1.5%, and Apache up more than 1%. We're also watching the airlines. Those are off their lows of the session. This is because the airlines are getting hit, of course, because of the higher oil prices for airlines. Typically, fuel costs can be the second highest expense for the airlines behind labor. So we're looking at United that's down around 2%. Also, American Airlines is under pressure. Delta, Southwest, JetBlue all down more than 1%. And one other note on oil, I was talking to an energy trader here this morning who was telling me that traders are not taking into account the possibility of a full-blown confrontation with Iran. He said if they thought that there would be some sort of prolonged confrontation, then you would see oil prices much higher than what you've seen them today. Julie, Adam.
Inez, thank you. We're going to talk about this with the panel. Yahoo Finance's Heidi Chung, as well as Melody Hom. Also joining us is Mike Baker. But right now, take a look. That's Mitch McConnell speaking on the floor of the U.S. Senate. We're going to dip into this at some point if the leader in the Senate has some newsworthy comments that we need to share with you. But we want to go to Mike Baker, who is a former CIA covert operations officer and Diligence co-founder. And Mike, I got to ask you, a lot of us were raised, we were told by our parents, when a bully hits you, sometimes you have to hit back. The Iranians have hit the U.S. and U.S. allies and interests, whether it's shooting, missiles into tankers, not sinking them, or attacking the Saudi Aramco facility. And now we have retaliated. There was great restraint prior to that, but now we've retaliated. And we're not seeing oil prices. I mean, we're nowhere near $70 for West Texas Intermediate. So what should we make of all this?
Well, look, first of all, Chris Murphy and Ilhan Omar and others who are sort of, trying to figure out a way to respond to this in their typical anti-administration fashion, they probably should sit this one out. Look, Soleimani, if anybody wants to sit back and take their time to do some research, has been the architect over the past 20 years of the Iranian regime's intelligence and terrorism by proxy strategies. He's personally, over the past 20 years, planned, approved, authorized, overseen countless attacks and operations that have killed not just hundreds and hundreds of U.S. soldiers, but thousands and thousands of Iraqi military, police, civilians, and a variety of others. So nobody outside of the Iranian regime and Syria, frankly, are mourning his passing. But it's interesting because I think folks on the political left, they're trying to find a balance. They're trying to say, well, yeah, he was a monster. He was terrible, and he's got a huge amount of blood on his hands. But oh my God, we got to worry about the repercussions.
Don't we, Mike? I mean, don't we? I saw. Let me just interrupt you for a moment.
Sure, go ahead.
I saw one tweet that I thought captured it, perhaps that line of thinking well, which said this perhaps was a morally just action without being a strategically wise one necessarily. And we talked to a guest earlier who said, okay, this action is done. Yes, he was a bad guy. But now what? You have to have a political strategy, not just a tactical action. So what's the political strategy that now needs to follow this?
Well, look, I don't think I'm particularly well suited to speak to a political strategy, nor do I actually believe a political strategy is what you concern yourself with when you're talking about strategic concerns, counterterrorism, national security issues, protection of U.S. citizens abroad. Yeah, you've got to worry about politics because that's everybody bangs on in the dysfunctional nation's capital here in the U.S. But the reality here is the military and the administration, they don't take a step like this overnight. This has been thought through over a very long time. Look, Soleimani has been the architect of this for years and years and years. He has been a concern, a potential target for a long time. So this has been gamed out. It's not like we haven't deployed assets in anticipation of possible retaliation or repercussions. And those that want to talk about, I don't think the administration has thought this through, they either have a political agenda in saying that, or they're just naive to how things work.
Well, Mike, you mentioned earlier addressing Syria, and a lot of analysts are kind of grouping that strike that President Trump actually commissioned in October, approving sort of the killing of that Islamic State leader Abu Bakr al-Baghdadi. And there's a very clear difference, right? That was a leader who had already lost his base, lost his support. He was in hiding, whereas we're dealing with someone who was is being perceived as a martyr in some capacity. So don't you feel as though the public sentiment, a lot of the not only military action that could be taken in addition to the cybersecurity concerns that our country faces, but we see people storming the streets really upset about something like this. Don't you expect that will galvanize the entire region and we can face serious repercussions here?
Well, look, I'm not saying that the Iranian regime hasn't, thought about how are they going to retaliate. Of course, the likelihood is yes, they will. In particular, incidents. The Iranian regime is not stupid enough to imagine themselves in a direct military conflict with the U.S. So they'll use their proxies as they have in the past over decades now. But look, the idea that we're equating Soleimani with a national foreign leader is nonsense. He was the head terrorist of a nation that is a state sponsor of terrorism. And he's essentially, think about him as a general stepping onto the battlefield to direct his troops, which in this case, in Baghdad, were the militias, the Iranian stooges. They were gathering to talk about further operations and activities. So I understand the concern, and of course, and again, the administration, the military have fought this through. These things don't happen in a bubble. No matter what people may think of the current administration and their dislike of the current president, the reality is that there is more thought put behind this than just saying, oh, let's punch the button and hit a strike. So yes, we should worry about those. Assets have been deployed. They're being deployed. Our allies are doing the same thing. But it doesn't mean, just because you fear potential repercussions, it doesn't mean that you don't take action, right? I mean, the previous administration, I've seen already a number of people from the previous administration talking about, well, I worked on the Iran account and, I'm really horrified about the potential repercussions. Well, while they were working on the Iran account over the past few years, Soleimani has been operating and running operations that killed U.S. and allied military and civilians. So, look, this justice is a long time coming.
Mike Baker is a former CIA covert operations officer, is also the co-founder of Diligence. Good to have you here on The Move, Mike.
Thank you, Adam.
I want to come back to oil now and the market repercussions. Let's bring in Kingsview Wealth Management Senior Vice President and Portfolio Manager Paul Nolte joining us, I believe, from the CME. Paul, as we look at the move in oil today, we've been noting how muted it is, at least on a relative basis, right? So is this a result of the perception that this is not going to be a protracted conflict that's going to affect supply, a reflection of the supply coming from the U.S., or a combination thereof?
I would say yes. And really, when you do take a look at it, nothing has been disrupted yet. And you're right, the U.S., in our view, has been for a while, the U.S. is at the margin the producer of choice. And part of the reason why we're not seeing energy prices shoot higher is, we still have an awful lot of supply here in the U.S. We're still doing a lot of pumping of oil. We are the largest producer now in the world. So the dynamics of the energy sector have changed dramatically over the last 20 years or so, from an OPEC-centric world to really more of a U.S.-centric world as far as when you take a look at energy, total energy production globally.
So when investors ask you what we should look for next, would it be some kind of step, perhaps, if the Iranians were to once again attack the Saudi facilities? And if they were, would there be another perhaps muted response as opposed to a shoot up in the price over $70, $80 a barrel?
Oh, I think you'll see the price reaction similar to what we saw August, September last year when we had the drone strike, when we actually did see supplies come back a little bit. And you did get a spike in the price of energy, but again, it came back again as the United States came in to fill the void for energy. So again, it's not the major choke point that it has been historically, and look more to U.S. production at this point. And that's part of the reason why you're not getting those dramatic and permanent rises in energy prices.
Paul, it's Heidi here. So many experts out there saying, okay, if an attack like this happened 5 years ago, we would have seen oil shoot above $70 a barrel. But like you mentioned, given that the U.S. is such a big producer of crude at the moment, we're not seeing as big of an impact here in the U.S. But if this continues, if this escalates, a lot of other nations out there are dependent on this region for oil. So what are the implications there going forward?
You're right. If it is protracted, and that's the big unknown at this point. Right now, the betting is that it's going to be very similar to what we saw a year ago, 6 months ago. And if we start to see an escalation and something that is more permanent, then I think you will see upward pressure on energy prices. Right now, the expectation is, again, working off of the most recent incident back in August, that it's not going to be anything protracted. It's going to be relatively short-term in nature. So again, that is a big if, but right now the betting is certainly not that direction.
All right, Paul, thank you. Appreciate it.
Democratic presidential candidates are condemning the airstrike that killed Iranian General Qasem Soleimani, with frontrunner Joe Biden calling the attack, this is a quote, a hugely escalatory move, and releasing a new ad on the news.
We live in the most dangerous moment in a generation. Our world set on edge by an erratic, unstable president. Dictators and tyrants are praised, our allies pushed aside. This is a moment that requires strong, steady, stable leadership. We need someone tested and trusted around the world. This is a moment for Joe Biden.
Joining us is Yahoo Finance's political correspondent, Rick Newman. And this ad, does this, well, it makes a statement that the president was erratic, and yet we just had on a former CIA operator who said there was nothing erratic about this. This was very months, perhaps a long time in the planning.
Yeah, and I think for the Democratic presidential candidates opposing Trump, what's important for them, I think, is what happens next. So just about all of them issued statements, and they all basically began the same way, which was Soleimani was a bad guy, but. And then it got into why this was probably not the best way to go after him or to go after Iran. But look, if Iran doesn't really retaliate in some way that damages U.S. interests in an obvious way to voters here in the United States, then I think Trump can plausibly say, I went after one of the world's premier bad guys, and it was the right thing to do. But what if this blows up into a bigger conflagration? What if Iran downs an airliner? What if there are terrorist attacks outside of Iraq on civilian facilities or civilian areas or something like that? I just think this totally depends on what happens next. And by the way, I think this is going to percolate all through 2020. There's no way this is ever going to be sort of tidied up. This is kind of like tribal warfare at a geopolitical level, and it's just going to go on and on, retaliate. I mean, it's really like a kind of a low-grade war.
In the 2020 field, I mean, just glancing at it, Biden seems far and away to have the most foreign policy experience, right?
Sure.
I mean, is that...
Absolutely. Well, he's the oldest by definition. He's spent most of
but
his
he's
career in
also the
Washington.
one who's been at the highest levels of government.
And he was the chairman of the Senate Foreign Relations Committee as vice president for 8 years. I mean, he probably knows just about every important foreign leader. So Biden is credible when he says we need somebody who's more knowledgeable about world affairs and perhaps even steadier. If you recall, Biden has already put out that one ad, they're laughing at us. Do you remember that? Yes. When Trump was at the summit over in the UK, I believe, and a couple of Macron and Justin Trudeau of Canada were gathered around kind of snickering about Trump. I mean, he's going to be hitting this theme over and over, and I think an interesting part of the Biden campaign strategy is he's spending money on these ads, and he doesn't have a ton of money. He's campaigning against Trump already. He's not campaigning in these ads against Elizabeth Warren or Pete Buttigieg. He's kind of going over their heads and saying, I'm the man with the steady hand you need in the White House to handle risky situations like this.
Well, just looking at the statements, I'm reading a compilation of all of the candidates and coming out very hardly against President Trump's decision. Rick, when Trump was first elected president, a lot of your columns were about Trump inheriting the Obama economy, right? So I think when they're anticipating perhaps stepping into office in 2020 in their dreams, they do not want to inherit a war. So just thinking about, for me personally, I'm reading these statements with a very large grain of salt because I cannot anticipate that this is necessarily their conviction or their core belief, but it's just they have to respond to Trump in an antagonistic way.
Trump also inherited the Obama deal with Iran on nuclear weapons, which he pulled out of. And what we're seeing now goes back to Trump's decision to pull out of that deal. So by the terms of the deal, Iran is now free to start over developing its nuclear program based on wherever it left off. And Trump has now put these economic sanctions. So by blowing up that deal, he has increased hostility between the two sides. And now it's unpatchable. I mean, it's pretty clear to say. So I think what the Democrats are going to say is, let's go back to the nuclear deal that Obama negotiated, because it's much better to have them in a box on nuclear weapons than to have this going on. And I think one of the things you could see very public in Iran in coming weeks or months is that they are in some visible way going to start ramping up their nuclear program again. That is one way they can poke Trump back.
One interesting theme I think we've seen emerge, not necessarily from the candidates, but from the left in the wake of this attack, is parallels to the Iraq War. And that there is a concern that there were elements in the Trump administration that have wanted war with Iran all along. Bolton,
yeah, but he's gone.
Notably. But even still, there are still elements perhaps there who wanted that. And that they have been looking for ways to escalate with Iran ever since he got into office.
Yeah.
And I also wonder if for the Democrats, like a Joe Biden, is the specter of Iraq at some point going to be problematic for him?
Again, I think it totally depends on what happens.
Yeah.
So this strike is a one-time thing. Now, at the same time, it's worth noting that Trump has ordered more U.S. troops to the region. The 82nd Airborne is heading there. That's to secure the U.S. Embassy where these protests have been happening and also to be ready to respond to whatever else. I think we know now that the deployment of those additional troops, which happened earlier this week, they did that with this airstrike in mind, that they were going after Soleimani. We didn't know that at the time. But now they're beefing up the presence. What did Trump say he wanted to do when he was running for president?
Soldiers out.
Get troops out. So we are now hearing this sort of conflicting rhetoric from Mike Pompeo, Secretary of State. We still favor de-escalation. So I think that doesn't fly. We just killed one of your top guys, and now we would like to de-escalate. That's not going to happen. So where does this stand in October of 2020, I think is what's really going to determine whether this is a winner or a loser for Trump. Can he point to something in the Middle East and say he has advanced U.S. interests there, either by a tougher approach or by withdrawing troops, or is it just going to look like chaos? And man, I'll tell you, I mean, the U.S. strategy in Iraq has been in disarray for years. Since Obama, I mean, really since the W. Bush administration and the war, and no plan for what to do after they got rid of Saddam Hussein. So it's a mess. Trump kind of inherited a mess, and the question is he going to leave it worse or better?
Yeah. All right. Thanks, Rick.
Thanks, guys.
Coming up, hitting the brakes, the possible warning signs after ISM Manufacturing hits its lowest level in a decade in December. Plus, take a look at how airline stocks are faring today as we see that pop in oil prices. We've got all those airlines trading lower.
Welcome back to On the Move. I'm Jared Blickery, and stocks are less under pressure than they were an hour ago. Dow is down less than 200 points, about 177, or about 0.2%. The S&P 500 now not even down 0.5%, along with the Nasdaq and the Russell, all tied for about 44 basis points to the downside. Let's take a look at the price action. You can see we gapped down, but we've been slowly trending up, pairing those losses here. And what does that mean for stocks? It means probably the worst might be over, but that precludes any further attacks here. I say this because the VIX has spiked up to 16, actually 15.5 here. Can't see it because of the granularity, but it did spike up to an area we're looking for resistance, and it has come down, so we might have seen the bottom here. Have to see where the market closes today. 10-year T-note yield under a lot of pressure. It's down 7 basis points. That's putting pressure on financial stocks. And if we take a look at the NASDAQ 100 heat map, we can see Alphabet and Facebook have now turned into the green. We still have Apple and Microsoft under a little bit of pressure. Amazon's down nearly 1%, but we have Tesla up nearly 4% and JD.com up 1.8%. We're going to be back in a minute.
Manufacturing clocked its worst month in more than a decade in December. The Institute for Supply Management's manufacturing index fell to its lowest level since June of 2009. That was despite signs of progress last month in the trade war between China and the United States. Simeon Hyman, head of investment strategy at ProShares, joins us now to talk more about this. And Simeon, you say that recessions follow periods where the economy is overheated, and you actually talk about capacity utilization. So where do we stand in all of this, and is that a reliable metric to forecast the future?
Yeah, I know it's kind of a geeky metric to reference. And look, it is a manufacturing metric. But we have essentially never had a recession without capacity utilization going higher than 80%, going back to 80. And its kind of normal operating range is about 75 to 85, and we're at 77 right now.
But hasn't the economy shifted pretty significantly in terms of what it relies on? In other words, we're such a service-based economy now. How do we know that that is still a good metric to look at? And we should, by the way, mention capacity utilization is basically the percent at which the capacity at which factories are running.
That's right. That's right. And that's why I said it is absolutely a manufacturing measure. And you're asking the right question. But the sort of retort to that is, okay, fine. So we know that unemployment was very low. We know the consumer's strong. So you might say, okay, is that where the overheating is going to come from? But where's the wage pressure? Where's the inflation? It's not coming from there either. So, you know, I've been doing a sort of a tale of the tape of Clinton and Trump impeachment. And if you go back to the Clinton impeachment, you had capacity utilization at, I think, 82 or 83, and you had GDP growth at 4.5%. And right after that, the Fed started hiking. And of course, you had, by the way, 5 more quarters after after the beginning of the Clinton impeachment periods. But indeed, you had the bubble burst. But it was from this place of 4.5% GDP growth, 83% capacity utilization, and really the overheating was much more evident.
Yeah. Simeon, you're not necessarily ringing an alarm here saying that we're going to get a recession in 2020, but at the same time, you say valuations are really stretched, especially when we're looking at large cap stocks. So with all of the uncertainty when it comes to geopolitical turmoil in the Middle East, the fact that the trade war hasn't essentially been completely put to rest, right? At this point, where do you see the opportunity this year for investors when they're looking to put fresh money to work?
Yeah, it's always great knowing you're going to do a media appearance and then there's big news in the morning and it throws you into tizzy all morning. But let me give you the sources of a couple of points of upside, because you probably heard lots of downside potentials. Of course, geopolitics, one of them. One which is a little bit of a bouncing ball one that I don't think people are paying attention to is the corporate tax cut. We are now entering the 3rd year of the corporate tax cut. So watch how this happened. In 2018, the corporate tax cut spikes margins and earnings growth goes through the roof. Guess what happens in 2019? Follow your freshman microeconomics. It gets passed on to the consumer, and there's no earnings growth and margins shrink again. In retail speak, we don't have to anniversary those numbers anymore. So that's certainly one source. And the other one, look, I think as we get to the election, don't we all sort of suspect little pieces of good news are going to come from whatever the White House can control as we get closer to the election? It's a suspicion we all kind of have.
Yeah.
I am curious, when we report that ISM number, getting back to capacity utilization, should we dismiss that? Was that a one-off?
No, I don't think you can dismiss it at all, but it's part of this sort of muted recovery we have had since the financial crisis, where manufacturing has not lit fire, but services has done fine, resulting in this 2.5% GDP growth that could go on a lot longer than 4% GDP growth.
So, I want to get your thoughts, though, on the divergence that we've been seeing recently between PMI and ISM. Is that of any concern to you? Do you think the recovery is still intact when we talk about manufacturing?
It's intact enough. You know, let's go back to the consumer, because it is 2/3 of the economy. If we go back to the December reading, consumer confidence is sky high. It actually went up a little bit more to 126.5. We had a 5-month high in home price appreciation. So it's intact enough given how strong the service sector is.
Simeon Hyman, I've got a break here for some breaking news, but thank you for joining us.
Thanks so much.
Good to have you here. There is breaking news right now, in that NBC News is reporting that the United States is going to deploy 3,500 soldiers to the Middle East, to Kuwait and to Iraq, in response to what happened overnight with the shooting or the drone attack on Mr. Soleimani, the general who has been killed. This is in addition to the almost 4,000 soldiers that were announced 2 days ago would be heading to the region. Already 750 of them from the 82nd Airborne are in country in Iraq helping secure the U.S. Embassy. Coming up, streaming wars heat up. Apple makes a big move as it looks to take on the competition. Plus, take a look at how oil companies are actually doing today. That's after rising tension that we've been talking about in the Middle East. We are in New York City a little bit after 12:30 and 3 hours into the trading day. Stocks are trading down. We are off the session lows, though, following the U.S. strike that killed an Iranian military leader in Iraq. Also, gold has been trading higher, and right now gold is pushing up at $1,550 an ounce. Taking on big tech, the big ways lawmakers could target Silicon Valley this year, and Apple makes a move. The company just hired a big Hollywood name, you know it, as it looks to win the streaming wars. We're going to let you know who that is in just a bit. Welcome to On the Move. I'm Adam Shapiro.
And I'm Julie Hyman. Thanks for sticking with us. Well, the children's wear industry is booming. It's set to hit nearly $340 billion by 2024. That's according to global industry analysts. It's not just big name retailers that are trying to get the edge in the market. And we've got a new crop of companies trying to take a bigger slice of the pie. One of them is Rockets of Awesome. It's a direct-to-consumer brand that has wooed celebrity backers and capital from Foot Locker. Joining us for our Women in Money segment, brought to you by USAA, is Rachel Blumenthal. She is the founder and CEO of Rockets of Awesome. Thank you for being here.
Thanks for having me.
So this isn't just a regular retailer, right? It's essentially sort of like boxes for kids, right? Where you send curated items and people then decide whether to keep it or not, or do they keep it? How does it all work?
So Rockets of Awesome is a vertical kids apparel brand, which means that we design and manufacture all of our own product. Boys and girls sizes 2 to 14, and prices are around $16 to $38. And we have many different ways you can shop with us. So you can shop with us online just via e-commerce. You can shop with us via subscription, which is completely personalized. You tell us what your kids like, what they don't like, and we send you 8 items 4 times a year with the change of the season, just for you you. You have the ability to swap, control, and so forth. And then we have a new store on Fifth Avenue in Manhattan on 20th Street.
So help us understand, though, because you talk about it being data-driven as to what you're going to send the kids. So do you build the data profile based on those first shipments, or is there something else? Where do you get the data?
Yeah, so we've been collecting years of data about customers, and we've built very sophisticated algorithms that enable us to personalize. So based on what you tell us about our kids, that impacts what your kids, it impacts what we send you. And then we're cross-referencing it with items that our customers have kept, what they've returned, with similar preferences or dislikes. And with that information, it helps us really tailor. That said, we never want there to be surprises within the home. So we always show families a preview of what we're going to send before we send it. And that is really, really important to the experience, because your daughter might love a dress with polka dots, but you might hate polka dots, or you don't need another dress in your house, right? So we really enable a lot of control within the family, so that when it arrives in the home, it's a really, really fun experience. And it's not one where you say your daughter loves that dress and you're like, no, 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 you can't keep it.
I need reinforced knees. That's
Exactly.
the most important thing in all of the clothing.
Rachel, we just entered a new year and thus a new decade. And over the past decade in retail, we saw the surge in DTC companies, your company being one of them. But now a lot of them are starting to see the value in opening a brick and mortar location. Are you also finding that to be the case? And do you want to expand that footprint as well?
Absolutely. You know, we really had this vision that brick and mortar could be a really important aspect of our business. And we opened up the store on Fifth Avenue as a pop-up to really test it. And I think what you see among D2C brands is that you really have this test and learn kind of thesis. And we opened it for 2 months. It performed really well. So now it will be a permanent location for us. But, you know, I think the beauty of D2C is that, you know, brands and entrepreneurs have the ability to open and present their product to customers easier than ever before. The barriers are lower. That being said, I think there's a lot of noise in the market for the customer. And so if you do have the ability to put your product in front of the customer and let them touch and feel it, there is you know, so much more of a connection with the consumer where they really understand who you are and decide if they want to be a part of your business or not.
And some of those customers who touched and felt your product, who became fans and then investors, are Serena Williams, of course, Kristen Green from Forerunner Ventures, Gwyneth Paltrow. How are you able to really woo, especially these female investors, celebrities, who then pivoted and said, hey, we have to put our money to work and invest in some really exciting companies?
I think more than anything, it's just so important to be differentiated. It's so important to have a really strong point of view of why you exist in the world, your problem trying to solve for the consumer. And it's about building relationships. And I've spent many, many years building relationships with those investors and many others. And I think when they start to have a rapport with you and have a level of trust and see how passionate you are about solving a problem, how much your customers are responding to it, there's an interest and an excitement to be a part of it.
A quick point on that. I know you've spent some time at Yves Saint Laurent in the public relations team. We're thinking about the luxury kind of sector right now. We had some reporting yesterday about Buffett reportedly passing up that offer to buy Tiffany, which LVMH did buy last month. What is your pulse on the sector right now? Do you feel like the DTC companies have sort of eroded this kind of the shiny blue box, the gold standard, if you will, of the luxury industry?
I don't know if they're really impacted in the same way. I think more than anything, what you're seeing in luxury is the necessity to really evolve with the digital experiences. And I think there's some discomfort around it because historically it's been something where they've really tried to protect and they haven't wanted their products or their prices online. And I think what you're going to see in the next 3, 5, 10 years is that there's going to be a massive shift of that changing where it's really accessible to customers digitally.
That makes a lot of sense.
Rachel, thanks for being here. Rachel Blumenthal is founder and CEO of Rockets of Awesome. Appreciate it.
Thank you so much.
Coming up, taking on tech, how lawmakers could create a headache for Silicon Valley this year. Plus, take a look at how defense stocks are doing after the rising tensions in the Middle East today.
We've got some trending tickers for you from YahooFinance.com. Tesla tops the list today. That's after the company came out with its delivery numbers for the fourth quarter. 112,000 vehicles delivered. That is versus the 106,000 that analysts had been estimating. At the same time, this company says it's going to be starting deliveries of its Model 3s in China, the ones that are made there, on January 7th. And it is indeed cutting the price by 16% after getting some subsidies from the Chinese government. So a combination of things sending the shares up 3.6% in today's session. We are also taking a look at a lot of the defense stocks today. Here's Lockheed Martin as just one example of stocks that you guys are watching. Northrop Grumman's on this list as well. As we see these developments in the Middle East, we are seeing the reaction among some of these defense stocks, perhaps on speculation that they will be getting some orders from the U.S. government. These shares up 4.6% today. You see them up 61% over the past year. And then we were just talking about retail. I'm watching L Brands today. Those shares have not done well over the past year, but today they're higher by more than 8%. That is thanks to a call out from Bank of America, which raised the stock to buy from neutral. If you're following today's trending tickers, make sure you're watching the ticker right here at 2 p.m. on Yahoo Finance. Lawmakers and regulators are setting their 2020 New Year's resolutions, one of them to take on big tech. Yahoo Finance's Jessica Smith has the details. Jess?
Well, we've heard from lawmakers over the past year more and more often saying that something needs to be done about big tech. And lawmakers I've talked to say that 2019 was the year the conversation shifted, and they're hoping 2020 will be the year of action. First up could be a federal data privacy law. That's a real possibility this year. We'll also be watching for the findings from the DOJ, FTC, and state attorneys general. All of them are looking into big tech companies. And then you have the House Judiciary Committee's antitrust committee. That group is looking into big tech companies as well, and we expect to hear about its findings in 2020 at some point. And finally, since it is now officially an election year, stopping misinformation on social media is going to be top of mind. You can expect more debates about political ads and the policies around what politicians can and cannot say. And Senator Mark Warner is sounding the alarm about deep fakes, those manipulated videos that, for example, could show a politician saying something or appearing to say something controversial in order to discredit them. Warner also says those videos could cause chaos in the markets. Let's watch.
If you see an image come across your television or across your screen that looks like it's Jay Powell, the head of the Federal Reserve, and he's saying he's going to lower interest rates by X amount, and that's not really Jay Powell, the effect that could have in the markets through a deep fake manipulation is, again, one more reason why we can't continue to have this, wild, wild west, anything goes.
There is bipartisan legislation to crack down on deep fakes. We'll see if it gains any traction in the new year. Congress is back in action next week, so we'll keep you updated as they start working on all of these issues. Adam and Julie.
Looking forward to it, Jess. Thank you. Coming up, strike fallout. Why gold might benefit more than oil from the rising tensions in the Mideast. Plus, take a look at some of the losers on Wall Street today. We have been seeing markets overall suffer from a downdraft. Insight, though, falling after some negative study data.
Firefighters in South Wales, Australia warn the raging wildfires burning out of control will grow worse this weekend. They've already destroyed 1,000 homes and forced thousands of people to evacuate. The Australian Navy began rescuing people who were trapped at a seaside town in Victoria after the fires cut off land-based escape routes. Former Secretary of State Hillary Clinton has been named Chancellor of Queen's University in Belfast. She's the first woman to accept the post. Clinton calls it a great privilege. It's a mostly ceremonial position. The Chancellor often presides at graduation ceremonies. And finally, it was on this day in history, back in 1977, that Apple Computer was incorporated in Cupertino, California by Steve Jobs, Steve Wozniak, and Mike Markula Jr. The company today has a market cap around $1.3 trillion. We'll be right back. Last night, a U.S. airstrike authorized by President Trump killed Iranian General Qasem Soleimani, causing shares of gold and oil to surge today. Now, Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist, is here now to help us understand how we go forward, whether it's gold or oil. And you make a very convincing argument that, look, the oil markets that we knew just 10 years ago are not today's oil markets. You should pay attention to gold. Why?
I'm glad you mentioned 10 years ago, because 10 years ago, the U.S. was a net importer of about half of our crude oil. This year, we're a net exporter. And that's part of the reason we're having tensions with Iran. Our president knows that, and he's willing to push that envelope a little bit. The key thing I thought of this morning is, when I heard the news and last night, is, yeah, crude oil might bounce. We've seen this before. It's bounced and hit resistance, but it's oversupplied. And it's not going to really change that. But gold, on the other hand, is much more in demand. And gold is just within ticks of last year's high. Crude oil's got like another, in terms of, let's say Brent, another maybe $10 to get through last year's high. So to me, it's just on the cusp of breaking out in gold.
And what have we seen in terms of gold movements? I mean, oil, we've gotten used to seeing this sort of spike, and then it comes back down. When gold gets a leg up from this kind of event, does it tend to have a more sustained lifting effect, or does it also come back down?
Well, it depends on what period you look at. The last 5 years until last year haven't been so good for gold, but the minute the Fed started easing, gold's broken out. And it's starting to continue to do that, but it's got good, solid, fundamental and technical reasons to do that. We know where interest rates are going. Volatility in the stock market is not going to go much lower, and the dollar is not going to go much higher. So that's a good support for gold in terms of dollar. But gold is just following the rest of the world. In terms of euro, it's made a new high. Canadian loonie, new high. Indian rupee, new high. You name it. It just ticked on the list. Gold is just a matter of time in terms of dollars, I think, to make
So
new
more
highs.
room to run for gold from here, and how far does it run at this point?
The first level I'm looking at so far initially is 1,600. Now, if gold just follows a normal trajectory for the January effect, it should be up 3 to 4%. It has for the last 5 years, which puts it near 1,600. So I think the key support is now 1,500. That was resistance last year. 1,600 is first resistance, and I'm looking for really to 2013 highs, which was around 1,700. That was the big breakdown year, and gold's in the process, to me, of retracing a bear market. It's nothing new or special yet until it starts a new bull market, which is a matter of time, but defining the times is a harder question.
So I'm reminded of mid-September when oil prices did soar after that Saudi Arabia attack. Iran never fessed up to it, but they are very much the culprits in this case. Do we anticipate that Saudi Arabia will be caught again in the crosshairs as the U.S. and Iran continue escalated tensions?
I guess that's the significant known unknown. I mean, we all know now the tension, the issue is Iran's going to strike back. How they're going to do it, who knows? I suppose the key thing they need is higher oil. They need to export. How they're going to make that happen, I don't know. I look at it as I can't guesstimate that. I can't really estimate that. But we saw what happened last time.
Yep.
It didn't really work. And to try to do that again, they might do that again. But that's why I look at what's the more definitive market to rally, and that's gold.
So for the investors who are going to be going into gold this year, because we've had the Federal Reserve say we don't expect to raise interest rates, what should they be looking for from the Fed? We're going to get the minutes from the last meeting this afternoon, but this year, because eventually they will start to raise rates at some point.
We hope. We hope. Remember last year, December, they were still talking about hiking, and then they switched. I think the key trigger is if the Fed switches to easing, that's a launch pad for gold. So remember what happened last year? Gold was holding 1,400 resistance until the Fed eased. The minute they eased, gold has been looking forward to this since the first hike. So gold, if the Fed starts hiking, that might be a problem, but they need a reason to do that.
That overnight repo market, do you consider that easing? The Fed says it's not. Everyone else says it is.
No,
You
to
don't?
me, I used to be a trader in repo. I used to trade bonds. To me, that's just normal. That's going back to the old days.
I want to ask you also about the companies that produce the stuff, right? So if you're looking for gold prices to potentially go to 1,600, are you watching the gold miners as well to maybe follow? Because we tend to have a little bit of a lag effect there.
They should. They will. They've been beat up for so long, and so hard. It's just a matter of time. But I don't really watch the equities as much. I'm just the raw commodities.
Gotcha.
All right.
Can I ask you a quick question
Please.
about Bitcoin? Because,
Yes.
digital gold, that's what a lot of the bulls say.
Exactly.
With all this uncertainty, do you think they're going to get or Bitcoin will get a better bid from here
Yes.
at these levels?
This was the prime indication today. Gold was up and Bitcoin was up. To me, Bitcoin now, the correlation between gold and Bitcoin is almost the highest ever, 52 weeks, and I expect that to continue. Bitcoin has become digital gold. The rest of the cryptos are meh. There are just too many of them.
All right, Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist. Good to have you here on The Move. Come back again, please. Heidi and Melody, let me start with you, Heidi.
Yeah.
As we look at the end of this hour of trading and we head towards the afternoon, we're seeing some bit of recovery, not only in equities, but also in oil. But wouldn't you want to, protect yourself going into the weekend?
I think a lot of investors out there are sort of holding their breath at this moment. There was some panic selling earlier in today's session when the markets opened lower by 350 points plus. But at this point, I think the main thing is, okay, so what's essentially going to happen from here? The consensus is that there is going to be escalation. Now, the main question is how long will that last and how destabilizing will that actually be? And thus, how will that impact the markets? The reaction that we're getting from crude, I think, is obviously interesting as we've been breaking it down all hour. But it essentially says, well, the U.S. is fine for now. Now, the main question, again, how long will it last and what will happen in the future?
I think one thing I wanted to point out is just that this is an exogenous factor that we haven't seen for most of 2019, right? Where there was a lot of speculation, there was a lot of sentiment, there was a lot of potential China trade war, but there was no definitive action being taken. This is a potential catalyst and impetus for war. So I think the sentiment, to Heidi's point, I expected the markets to be selling off even more steeply today. Who knows at 4 p.m. where the market will end up, but I anticipate that there should be a continued discussion that, it's creating a new kind of dialogue and a new element of narrative.
We're going into the weekend. Got to keep that in mind as well. Heidi, Melody, thank you so much for being here. Appreciate it. As we take one last look at the markets, we see that there is still a sell-off, even if it has abated to some extent. By the way, make sure you join us on The Move this Monday, January 6th, at our new time, 10 a.m. Eastern, right here at Yahoo Finance. We're going to be going 10 to 1 Eastern, so please do join us.
It is 1 p.m. in New York City, and the major indices are pacing for their first down day of 2020 as a major military strike by the U.S. is rattling markets around the globe. On tap for today, President Trump ordering a drone attack, taking out the leader of Iran's elite military force and Major General Qasem Soleimani. How the historic move escalates risk in an already destabilized region, and what a further spike in oil prices could mean for the market. Plus, outside of oil, Tesla smashing the street's expectations for Q4 deliveries, why Elon Musk has more and more reasons to celebrate, and the final numbers for dramatic fundraising among Democrats in the final quarter of the year. We'll have which candidate just surprised the whole pack, more than doubling her last quarter haul. All that and more. This is Wi-Fi PM. Good afternoon, everybody. I'm Zach Guzman, and joining me on Wi-Fi PM today is Yahoo Finance's Julia LaRoche, along with the Morning Brew business editor and podcast host Kinsey Grant, back with us in studio. Guys, a lot to talk about today. A very busy show. Going to start by checking the market action we're seeing right now. And as we noted, pacing for the first down day across the board. The Dow off by about 166 points. The S&P in the red, and the NASDAQ joining them in the red as well, off about 1/3 of 1%. But first, want to highlight oil prices paring back gains after an early surge following the killing of top Iranian General Qasem Soleimani by U.S. airstrike at Baghdad International Airport last night. The attack, authorized by President Trump, is sending shockwaves through the Middle East, with Iran's supreme leader vowing to seek, quote, forceful revenge against the United States. Secretary of State Mike Pompeo speaking on Fox and Friends earlier today. Let's watch.
I think the Iranian leadership understands that President Trump will take action. We've made this clear for months. When I was the CIA director, we made very clear that these responses would be swift and decisive. We've now demonstrated that. I hope that the Iranian leadership will see that. They'll see American resolve, and that their decision will be to de-escalate.
All right, so joining us now for more insight is the Director of Future Iran Initiative at the Atlantic Council, Barbara Slavin, along with retired Lieutenant Colonel Daniel Davis, Senior Fellow and Military Expert at Defense Priorities. And Barbara, I want to get your reaction first here because, let's be clear, I mean, this was a military leader who led Iran's Quds Force, an arm that the U.S. labeled a terrorist organization last April. But just years ago, Soleimani was also aligned with allied forces fighting ISIS in the labyrinth of Middle East alliances. So what happens in your mind from here?
Nothing good. The Iranians will find a way to retaliate against U.S. interests or against U.S. allies in the region. This is a massive escalation on the part of the United States. I'm also very concerned that Iran will now completely bust out of the nuclear deal that President Trump withdrew from in 2018. Expect more on that front. And I think any possibility for diplomacy for U.S.-Iran negotiations is dead for the duration of the Trump administration, certainly if not beyond.
Yeah, you got to expect that to complicate things, at least this action that we're seeing right now. But President Trump was active on Twitter this morning. He was writing about the attack throughout the morning, saying, quote, General Qasem Soleimani has killed or badly wounded thousands of Americans over an extended period of time, and was plotting to kill many more, but got caught. He was directly and indirectly responsible for the death of millions of people. Colonel, I want to get your point here, too. The view out of the White House was that Soleimani was plotting an imminent attack, but the blowback specifically when it comes to how Iran could respond, even here domestically, is obviously a non-zero risk that even Secretary Pompeo admitted. Coming from your background, what are the risks that you think went into acting on something like this, and what are the risks moving forward?
Yeah, that's one of the big questions that I have is the big question that really needs to be asked is then what? We've taken out this terrorist figure here, who was a very popular figure in Iran, not merely a high-ranking, but also deeply popular among just the general populace, which adds to their emotional appeal to this and their desire for revenge. But what happens when they make good on this? Because I can't even imagine a situation where they wouldn't actually make good on that and kill some American somewhere or take some kind of revenge against us. Then what do we do? Because we certainly aren't going to just sit passively by at that point. And then whatever action we would take, you see there's the chance of escalating response, which could then spiral into an all-out war. And that would be catastrophic for everyone, most assuredly us.
I mean, that's the main point I think that we're kind of trying to parse through today, because you're right. It wasn't just Major General Soleimani. It was also Abu Mahdi al-Muhandis, a veteran Iraqi militant who was closely aligned with Iran as well as 5 others killed in this attack, reportedly, at least is what we're getting so far. So, I mean, when we're focusing on that, Barbara, how do you kind of parse out what happens in terms of that response we're expecting from Iran, maybe both in the Middle East, and then what could happen here back at home?
Yeah, well, if this was intended to somehow reduce Iranian influence in the Middle East, it's going to backfire colossally. I think that the U.S. presence in Iraq has now become completely untenable. To carry out these acts on Iraqi soil without the agreement of the Iraqi government is an enormous violation of the agreement that we have with the Iraqis. We were supposed to be there acting against ISIS and training them to act against ISIS, not going after their neighbor. So I would expect that the U.S. will probably have to leave Iraq sometime this year, which means that Iran will be even stronger there. And although Soleimani was certainly a legendary figure among many, he is not irreplaceable. He's already been replaced. And Iran has deep relationships with a variety of militant groups in that part of the world, beginning with Hezbollah in Lebanon, its partner for nearly 4 decades, a number of militias in Iraq, the Assad regime in Syria, and even the Houthi rebels in Yemen, as well as some factions in Afghanistan. Remember, we were trying to pull out of Afghanistan. What I can't wrap my head around is how Donald Trump, who says he wants to get out of the Middle East, doesn't want to be a part of these endless wars, has now got us mired even more deeply in that region.
Barbara, I'm interested to hear your take here that we have reports that former Presidents Bush and Obama both held back on giving this order to execute this drone attack in previous years because they didn't want to enter into a war, to stir things to the point where a war might be possible. What's your view on the change here within the Trump administration versus what we've seen in the past 8 or 12 years?
Well, all the adults...
sorry.
Sorry, Barbara, you can go ahead.
Yeah, all the adults have left the room. Jim Mattis would have opposed this, I think, very clearly. Rex Tillerson, H.R. McMaster, Kelly, people with real deep experience would have opposed it. But Donald Trump has his second and third string around him now, and they couldn't stop him from taking this step.
Yeah, and Colonel Davis, I mean, when we talk about this militarily, right, obviously we know that forces there have been reduced since, just years past when we think about the stability of the region as well. But if you are a serviceman or a woman over there and you're thinking about how this is shifting as we're seeing this play out, what do you think are options on the table right now, both on the Allied side and then how Iran might kind of respond here as things play out? Again, it's a very complicated situation over there. So how do you even begin to kind of formulate what could happen?
Well, you really got to begin at the bottom line, and that is, what is the mission that our troops are having there? And that's the reason why I've been advocating strenuously for well over a year now that our troops there and in Syria need to completely withdraw, because there is no security threat to the United States that those troops there are protecting us from, but they absorb enormous strategic risk. And this is exactly the kind of situation that I have feared would happen, which really began on the 27th of December when an American contractor and several troops were killed in a rocket attack that we attributed to Kataib Hezbollah, which was one of the PMF groups there, the Shia militia groups. And then we retaliated by killing 25 of them, and then they stormed the embassy. And then we've added another level to it. And all this has resulted in is now it's put an even bigger target on the backs of all the American military and now even diplomatic and civilian personnel over there. And so even though it's a lot messier now, it's going to be harder, I still advocate that we withdraw our troops militarily from there just to protect our interest and our troops.
All right. I mean, clearly, when we heard from the president earlier last year, clearly his viewpoints have shifted, and we're talking about trying to change the standpoint of the U.S. over there and remove himself from an already very unstable situation. But we'll see how this plays out. Barbara Slavin and Lieutenant Colonel Daniel Davis, thank you so much for joining us. Appreciate it. Coming up, Democrats, though, quick to pounce on President Trump's historic military action, what the leading 2020 hopefuls on the other side of the aisle are saying, and which candidate delivered a surprisingly strong fourth quarter. We're talking about fundraising to best the entire field when Wi-Fi PM returns. All right, we're continuing coverage of President Trump's historic decision to execute an airstrike against General Qasem Soleimani and what that death could have when it comes to serious implications in the 2020 election. Yahoo Finance's Rick Newman joins us now to discuss that and how it could shape things. Almost every leading candidate came out with a statement almost immediately after news of this strike hit the wires. I mean, it sounded like everyone unilaterally was saying that this was already going to destabilize what was a destable region. But it didn't sound like they were disagreeing with the idea behind why President Trump acted.
Absolutely right. So there was a preamble to every one of these statements which said, well, Soleimani was a bad guy, and we realized that we had to deal with him somehow, but Trump is pursuing this in a reckless manner, needs to be careful, or some version of that. And Joe Biden now has an ad out where he's basically saying Trump is reckless and erratic. And that follows up on this theme that Biden has been developing. Remember the ad Biden ran earlier? They're laughing at us when he showed the foreign leaders laughing at Trump at that gathering in the United Kingdom. So I don't know how this is going to resonate with voters, though. I think it really depends on what happens here. So if nothing bad happens in Iraq or in the Middle East with regard to the U.S. presence there throughout 2020, then I think Trump can plausibly say this was a win. I mean, I took this guy who's basically Iran's head of terrorism, I took him off the map. But I think it's unlikely that nothing bad is going to happen. So there will be some kind of reprisals. And I think this totally depends on what happens next. And this is not going to be a one and done. This is going to percolate all through 2020.
I feel like he already had that when they had the strike against the ISIS leader al-Baghdadi. That was already there, and he had that celebration before. But then we're also talking.
Let me just point out a big difference. Al-Baghdadi did not belong to a nation.
No, for sure. That's what I'm saying. It's
Soleimani
a lot
does
less
belong
to
to a nation. So that's a huge. Yeah, you're right. Totally.
So, and when we're talking about that, it's also the implications are a little bit larger too. But it wasn't just Joe Biden who was responding to it. We also heard from Senator Elizabeth Warren as well, tweeting Soleimani was a murderer responsible for the deaths of thousands, including hundreds of Americans. Very similar to what we heard from Trump. But this reckless move escalates the situation with Iran and increases the likelihood of more deaths and new Middle East conflict. Our priority must be to avoid another costly war. Senator Bernie Sanders echoed much of that sentiment on Twitter as well. But Rick, I mean, when we talk about this, you can start pairing things that President Trump has done when we talk about the Kurds and the way that our national standing was kind of thrown in the dirt there. At least that's what Democrats were saying.
Yeah.
And start connecting these dots to where I think on the national security front, there could be a big push to actually take Trump down a notch here.
Well, Trump is an isolationist. So this move to assassinate Soleimani is inconsistent with what he has said he wants to do in the Middle East. He wants to get U.S. troops out of the Middle East, and that was part of that mistake, I think, that you just referred to with regard to the Kurds, where he just pulled out of Syria, gave the territory to Russia, which wanted it, and got nothing in return. I mean, he just said, here, we're going to give you something you want. Here's a present for free. Take this territory. I mean, it's not, again, it wasn't so bad that he decided to get out of the territory. He got nothing for it. Mm-hmm. And so are we going to see the same kind of, is this another similar impulsive move where Trump says, I'm just going to do this right now. I have the capability to do this. I'm going to push the button, but I'm not thinking it through. Does he have a strategy for what happens next? I can tell you for sure, the Pentagon has war-gamed out all the possible scenarios. What are all the permutations of things Iran could do in response? And that's just not just military activity right in the region in Iraq. It's probably cyber activity, some kind of cyber threat, cyber warfare. For sure, there could be terrorist acts outside that region. Mm-hmm. You probably can't pick every possible terrorist target and develop a war plan for that, but you can sure do the planning. The question is, Trump and his strategy people at the White House, have they thought this through? Do they have a plan?
Yeah. And I mean,
I don't know.
And as we're seeing this play out, I mean, there's a lot of question marks around, not just national security as we're seeing this play out, but on the whole debate stage, a lot of the Democrats have been saying we need to get out of there and we need to avoid another costly war.
Yeah. Rick was bringing up the important point, though, of how this resonates with voters. And it's very clear that what's transpired is incredibly risky. So you have to wonder, as you were pointing out, what are they thinking inside the White House? What is the strategy? And is there any sort of upside? Because it sounds like this could potentially play out on the election stage in 2020.
There is there is potential upside. So I think so let's just think about how this happened. So Soleimani was in plain sight at the Baghdad airport. He was making no effort to hide. He knows, the Americans know, he's the master planner for terrorist attacks all throughout the Middle East. And he was walking around as if he felt completely free and safe. He assumed, and by the way, there's U.S. air presence all over the country. So he assumed he was safe and that the Americans wouldn't do anything about him. They probably thought Trump is a paper tiger. He threatens a lot, but he never does anything. And by the way, after the Iranians shot those missiles at the Saudi oil facilities, nobody did anything. There was no response to that, just tough talk. Oh, Iran better not do this again. We're locked and loaded type of talk from Trump. Well, now Trump has shown he's actually willing to pull the trigger.
Yep.
So that could completely change the thinking in Tehran that, wow, he actually will come after us. And by the way, there's no way Tehran can afford to get in a conventional war with the United States. It will just get creamed and wiped out, and it'll lose half its military. So they're not going to do that. So what are they going to do is the question. I mean, they're a weak opponent, but they're not powerless, and they can hurt us in certain ways that we may not be able to anticipate.
I think a lot of people are hoping that they don't do anything that extreme. But nonetheless, I mean, a ratcheting up of the high-pressure campaign we've been seeing out of the Trump administration. But shifting away from that and focusing a little bit more on the fundraising numbers that we were talking about yesterday, we got some interesting updates when it comes to the top Democratic candidates. Senator Elizabeth Warren pulled in $21.2 million, which was a little bit of a downstep from Q3, about 14% of that decline. Former Vice President, I should say, Joe Biden raised $22.7 million, and Senator Amy Klobuchar took in $11.4 million, and that was really the standout, an increase more than double what she pulled in Q3. A lot of people pointing out that her performance in the last debate may have helped that. Could have also helped the numbers that we saw from Andrew Yang as well. Is that enough to help Amy Klobuchar?
Yeah, so I've got the whole tally here. So among the top 6 Democrats, I added up to about $133 million in one quarter. Trump is bragging about having raised $46 million in the quarter. Well, the 6 Democrats combined raised 3 times as much as he did, which tells you, I mean, there's a lot of money in this race. So those 6 candidates are going to be able to stay in it for a while. They will, I mean, through the early voting states of Iowa, New Hampshire, and Nevada, and so on, into Super Tuesday. I think when you get into the details, Warren's decline in fundraising is consistent with her decline in the polls, and the bloom is off the rose a little bit with her. She's not quite the front runner she was. Bernie Sanders, amazing staying power, and Klobuchar and Buttigieg, kind of the Midwestern favorites there. They've got enough money to stay in it. And Biden, he's still there. He hasn't flamed out yet.
That's the theme. Importantly, Biden's still there.
Yeah, and importantly, I mean, Klobuchar is on the debate stage for the next debate. She's already qualified, so she's going to be there. I mean, is $11 million too little, too late at this point? I guess is the question.
No.
I wouldn't say. I actually think, Rick, you highlighted a really important point. Just overall for the 6 candidates, how much is being brought in probably tells you a lot just about the voter sentiment and the willingness to support. Yeah, 6 different candidates, but when they narrow it down eventually to that one candidate, it sounds like there's a lot of momentum.
Yeah, and by the way, this is a lot of money we're talking about, but this is not super PACs.
Yep.
But the individual grassroots.
These are donations that are to the campaigns, which are limited to $2,800 per person. You cannot go more than that. So that much money, $133 million for 6 candidates, with a maximum of $2,800, means there's a lot of breadth to these donations. Even though Klobuchar is number 6 with about $11 million, she needs to get through the early voting states, and if she does well, then her fundraising will go up because she will seem like a more viable candidate. So those first 4 or 5 or 6 states are going to be really important because they're going to tell us who has momentum, more money will flow to them, and we could see a couple of dropouts.
I mean, yeah, you can't count anything out. We just saw a dropout yesterday. We'll see what happens.
I think Yang, for as much as intensely popular as he is with some people, I think he's the sort of guy I would expect to drop out first out of these 6.
It's gonna be close. I mean, he's got to make the debate.
Why would you want to drop out? Like, I want to understand the whole idea behind dropping out. Just what is the?
Mostly you drop out when you run out of money.
Okay.
Or when it begins to seem hopeless. But if you've got money, you can stay in. But these campaigns start to eat up a ton of money once you're now. I mean, you got to think about advertising and having ground staff everywhere in Iowa, all 99 counties, if I got that right.
Yeah, for sure.
And then New Hampshire, and then all the states that come after that. So
very costly.
If you don't do well in one of the early voting states, you're just not going to attract any fundraising after that, and that's when you call it quits.
Yes, but they do have momentum at their back, and we'll see what happens on that debate stage coming up in January. But Rick Newman, thank you so much for breaking all that down. Just after the break, Tesla adding to its incredible rally with Q4 delivery numbers shattering the street's expectations. More reasons for Elon Musk to celebrate. Wi-Fi PM is back in 2. Welcome back to Wi-Fi PM. We are checking the market action right now in red across the board as the Dow is off about 172 points. The NASDAQ, as you can see there, increasing its losses throughout the day, off close to about 0.5%. We'll see where things go throughout the show. But Tesla is hitting another milestone today. The electric automaker surpassed its 2019 delivery goal, pushing out 112,000 vehicles out in the fourth quarter, and racking up a total of more than 367,000 deliveries for the full year. And guys, this is 50% more cars delivered by Tesla compared to 2018. So a lot of Tesla haters out there are having to drink some humble Kool-Aid today.
Yeah, short sellers getting their faces ripped off.
And we've been seeing that.
Yeah.
It continues today.
If anything, this probably bodes well for the Q4 earnings that will come out shortly, because we're getting into earnings season in just, like 2 weeks now, or a couple weeks. We'll be in the thick of it. So, yeah, I mean, obviously investors are like, look, the stock's, oh my gosh, yeah, it's up $4.43, up $13 a share. So, yeah.
I mean, Kinsey, when we talk about it, it's been one of those stocks that it did wrap up 2019 very strongly. You could make the case that a lot of that was just short covering there, and it was a big kind of thing that we saw to end the year. It's obviously a highly shorted stock. A lot of people very vocal about it. But, I mean, it's clear now that we're getting the delivery numbers, it's much more than that.
Yeah, I mean, these delivery numbers by, no means are bad numbers. These are good numbers. Tesla beat expectations. But at the same time, I saw a tweet today that someone tweeted earlier in the year, Tesla delivered no cars in 2011, and they'll deliver 500,000 cars in 2018, which they did not do. So this is another expectation that Tesla did not meet. I will go out on the record and say that I think Tesla stock is probably priced a little higher than it should be right now. I think I have a lot of people who would agree with me on that. Obviously this is a company that has the capacity to change the world, has the capacity to change the way that we travel from place to place, which is obviously important and hugely impactful on the market in a broader sense. But right now, I think that Tesla is riding hype, and good for Tesla's stakeholders right now. But I just don't know how long this kind of hype cycle can continue for Tesla, if it will continue to beat some expectations while at the same time falling short of others.
Yeah, it's just one of those stocks that I don't think the battle between the bulls and the bears will ever end, especially if you follow this playing out on Twitter. And I think there are also still a lot of issues that have not been fully addressed when you look at the company. I mean, look at the Solar City, what happened there with the panels, especially going back to the Walmart litigation, that still hasn't fully played out. And then every now and then on social media, you'll see a terrifying video of something going wrong with autopilot. You'll see a Tesla catching on fire. You're seeing more car companies entering the EV space. You can argue Tesla really, pioneered that and set the tone and the trend, if you will, but still unanswered questions as well going forward.
I think, for the numbers that we're looking at too, because they beat their own guide. We're talking about the guide for at least 360,000 vehicles delivered for the full year. They beat that. We'll just give them credit where credit's due right there. They beat it.
I don't want to sound like a huge bear on Tesla. I just think that there have been higher expectations. Yes, they beat their own goal. They beat the street's goal for Q4. But at the same time, Tesla does have some shortcomings, and I think we'd be remiss not to bring them up, and obviously we are. But I think the big question here for me is how much time Tesla needs to prove itself. We keep talking about how this just needs to shake out a little more. We just need to see where the company is going, what leadership is going to look like, and what their strategy is going to be. But at what point do we say, all right, I've been watching this for 3 years now. When are we going to have an answer?
Yeah, and as we highlighted last week, right now it's valued pretty richly when we look at EVs combined, larger.
Or just the car companies
larger than Ford and GM combined. So yes, a lot of money built into this name here for sure.
I got to say this though, because I remember the first time I saw Tesla, I was like, ooh, what's that? And now I see them, I'm like, meh.
Well, maybe that's why they built the Cybertruck, to just kind of try and impress you all over again.
Maybe, I don't know.
It's just that attention, right?
That's what it's doing so far with Elon Musk whipping it around and running over traffic cones out in California.
It needs some mirrors, though.
It does need some
mirrors.
It's not safe. All right, well, we've got to take a quick break, but we're back with the market's biggest movers on Wi-Fi PM right after this. Welcome back to Wi-Fi PM. We are continuing to monitor the market action we've been seeing play out today as, again, global markets have been rattled by the execution of an attack ordered by President Donald Trump in the Middle East on General Soleimani that we saw play out earlier this morning, killing him. And we've seen the market's reaction this morning continuing throughout the day. The Dow off by about 166 points. We're looking at some of the names, though, that are managing to buck the overall trend, with Home Depot, Pfizer, United Technology, Nike, and McDonald's all in the green. Right now, a sector breakdown, we're looking at real estate as some of the big winners today. Utilities and consumer staples, the only three sectors right now able to avoid the overall downtrend here. Those are the only three sectors in the green. Want to get more details, though, so we'll head down to the New York Stock Exchange with Scott Gamm. Scott? Hey there, Zach. Well, yes, the geopolitical tensions we're seeing in the Middle East hitting stocks today, really the first major down day since early December. But look, it was just as recently as yesterday when you had all three major indices close at record highs. So this market is well equipped to handle a modest downturn like the one today. Worst performing Dow stocks right now are names like Dow Inc., Caterpillar, and 3M. Now you do have all 30 Dow stocks in the red, but what's striking is how little Apple is down right now. It's only down about 0.10%. It's still above $300 a share. Remember, that was a threshold it had crossed yesterday. Yesterday, Apple hit another record high. Today, pulling back slightly from that record level. But it shows you that even with geopolitical tensions, investors are still sticking with Apple. And we know that Apple is a very powerful stock within the Dow because the Dow is a price-weighted index. Also, take a look at oil prices, which I'm looking at my screen right now, are up over $62 a barrel, approaching $63 a barrel. But even oil prices have pared some of their earlier gains. We know oil tends to rise during geopolitical tensions, Zach.
Yeah, we're going to be digging into that later on in the show. But Scott Gam, thank you so much. We'll check back in with you at the end of Wi-Fi PM today. But the shakeout in the oil market following President Trump's move to take out a top Iranian military commander is what we'll be focusing on next, how it's impacting the global market as crude prices leap when Wi-Fi PM returns. Good afternoon and welcome to Wi-Fi PM. I'm Zach Guzman, and joining me today is Yahoo Finance's Julia LaRoche, along with the Morning Brew business editor and podcast host Kinsey Grant, back with us in studio. Guys, good to see you again. We're checking the market action right now and continuing to see the overall market pacing for its first down day in 2020, with the Dow off 168 points and the NASDAQ, as you can see, they're off by about 0.5%. But we're also watching the price of oil after top Iranian General Qasem Soleimani was killed by U.S. airstrike at Baghdad International Airport last night. And Canary LLC CEO and author of The Switch, Dan Eberhardt, joins us now for more on where oil could go from here. Dan, when we break it down, obviously the Strait of Hormuz becomes very strategically important here because about a quarter of all oil is passed through that passageway here. So how important is that specifically, and where the price of oil could go from here?
Well, it's vitally important, and I think that it really affects how the sentiment of how people feel with regards to what supply is out there and any supply constraints that can happen. And I think that area, with the attacks in September, show that there's a lot of vulnerability there, and that could potentially, impact, where the price of oil goes and what happens to supply, and also the sentiment in the market for how much supply there is.
It's interesting. I mean, you talk about that September attack on the Saudi oil refinery facility. Oil prices spiked about, 15 to 18%, and then pretty much came back down to earth after a 2-week period. So are you expecting kind of a similar thing to play out? We're already seeing the spike we saw this morning kind of pare back the gains.
Yeah, no, I think the spike will ultimately be short-lived because I think there's just so much supply. You've got the U.S. now becoming a net exporter, and that's a big thing for the markets. And then you've also got, there's something like 3 million barrels a day that are off the market due to sanctions. And there's about 2 million barrels a day off the market with supply OPEC plus cutbacks, mostly Saudi Arabia and a little bit UAE and Kuwait that's off the market. So there's really an awful lot of supply, and I mean, we need to see what the Iranian response is. If it's a full-scale war, that could definitely change the calculations. But I think if it's something minor, there's really an awful lot of supply out there that can soak up
any kind of short-term problems when we talk about supply.
Yeah.
So a lot of the reports we were seeing earlier this morning suggest that the Iranian retaliation will be more so focused on something like infrastructure in the oil market instead of hitting U.S. military personnel. What are your thoughts on this? Would this meaningfully impact the market? And how long would you expect that to last?
Yeah. So I look for them. I mean, I'm no military strategist, but I think that they're going to try to do something where they attack a proxy. So they attack Saudi Arabia or something like that, not the U.S. directly. I think that's not where Iran wants to go. So I would look for them to do something against infrastructure, particularly oil and gas infrastructure in Saudi Arabia. But I don't think it will have a very material impact in the medium term. I think it could cause a short-term trading blip for the day or possibly for the week. But I think that ultimately, once the analysts and the investors, look at the geopolitical and look at the worldwide supply that's out there, I think that they'll step back. It's also important to note the Asian markets, particularly China and also Japan, have been really preparing for something like this for quite a while. China's really added to its inventory stocks dramatically in the last 12 months. And so I think that's one of the major buyers, and they're prepared, with their own strategic petroleum reserve like the U.S. now to absorb a supply shock like this. So I think there's an awful lot of preparation for something like this to happen.
So when we talk about from a country-to-country perspective of being either a net exporter or a net importer, how important is that for a country's well-being in terms of its oil reserves if something like this were to happen, if we were to see that infrastructure hit?
Sure. So most countries are really lopsided one way or the other. They either import oil or they export oil. The U.S. is really rare in that it's both a big country and a country that really produces and consumes a giant amount of oil. But for the U.S. to become a net exporter, I think really gives us a lot of strategic room in terms of foreign policy. Without U.S. shale, we wouldn't have been able to do the deal with Iran under the Obama administration, or to push back on Saudi Arabia with the Khashoggi killing or whatever, things like that we want to do in the Middle East. So I think the U.S. being an exporter gives us the foreign policy space to push back. There's no, oil and the oil embargo in the 70s and all of that, those kind of measures wouldn't really affect us the same today at all. U.S. shale is ready, prepared, and we can more or less stand on our own. I mean, the refineries want more heavy crude, and we supply more light and sweet crude with the shale. But more or less, we're self-sufficient or nearly there in the U.S.
Yeah, it's come a long way since. I mean, you just think back about the fossil fuel dependence that was kind of highlighted back in the Bush administration and how far we've come from then. But I just want to highlight a couple more things, though, too, because obviously this impacts everybody. The price of oil could impact anything from your airline ticket to kind of any goods being produced. So it's important.
Plastics, rubber.
And really, it does matter. So, I mean, when we look at it, it seems kind of marginal, the idea that, okay, if the Strait of Hormuz, which, Iran has excessively controlled, if that counts for about a quarter of all the oil passing through the region, there is the chance that you could see Saudi Arabia build out shipping from the Red Sea. Some estimates pointing that would be about a 5 million barrel per day kind of route, could be producing up to 7 million barrels. So, I mean, I don't know how marginal that little change might help change the fact if they do choke off flow through the Strait of Hormuz. Is that anything to nearly offset it or not important?
I mean, I think those are good ideas, but I think those are the kind of things that take years, not months or weeks. And so I don't think that's going to really affect the situation in the short term. I think we really just got to wait and see what the Iranian response is. But also, I would just urge investors to look at the global supply, look at the U.S. supply, and I really think we can absorb a lot of these short-term hits, or what Iran would be able to accomplish would be taking supply offline short-term, and that really, historically in this market, is, I think, going to lead to just the balloon. There may be a short-term spike, but the air will be let out of the balloon in the medium term.
And even more focus on energy here at home as we see the shale boom continue to be built out.
Yeah, U.S. production continues to rise even though the rig count's falling, and that's just a sign of how much more efficient we're getting with U.S. shale and how much more, every year that goes by, we're taking market share from OPEC.
Yeah.
OPEC becomes less important, and U.S. shale is picking up market share. And I think a lot of investors fail to see that it's the price of the commodity is very important, but it also matters the market share for these U.S. producers in the Permian and in the Bakken. get. And I think we continue to just shave market share points off of OPEC. And I think that's really a missed story that a lot of people don't pay enough attention to.
Yeah, you got to think that today's story would be totally different if that preparation hadn't been there for years and years. But Dan Eberhard, thank you so much for joining us. Appreciate you taking the time.
Thank you for having me.
All right, coming up, back here at home, Illinoisans buying up more than $3 million in weed products on the first day of legal sales. We'll chat with the CEO of one of the state's largest producers for more on how weed is off to a hot start in the Prairie State right after this. Welcome back to Wi-Fi PM. Illinoisans are still celebrating the legalization of recreational marijuana sales across the state, which kicked off on New Year's Day. New data from state officials reveal more than $3.2 million worth of cannabis products were sold in more than 77,000 transactions in just the first 24 hours, which is a good start for the new Illinois market, estimated to become a $2 to $4 billion market at maturity. So joining us for more on the way things are ramping up is the CEO of one of Illinois' major players, Cresco Labs CEO Charlie Bachtell. And Charlie, it's good to see you again. Looks like things went smoothly for you at Sunnyside Dispensaries, where you served more than 3,000 customers on day one. So how have things been since day one, and how are you grading the start overall?
Yeah, good to see you, Zach. You know, it's exciting. You know, this is one of the sixth largest state in the country. The support, the enthusiasm behind the launch of adult use here has been incredible. And you know, as you mentioned, we've several thousand customers through the doors the first 2 days, each of the first 2 days. You know, long waits sometimes is up to 7 hours. And the great thing is, you ask the people that have been in line for 7 hours, was it worth it? They say it's worth every second. So very excited.
Yeah, I mean, it has been exciting to watch, but analysts have been pointing out that Cresco is uniquely positioned to capture the lead in Illinois, as you guys are based there, but plenty of other players are based there too. So despite the hot start, your stock's down about 10% since legalization took effect. So what are investors missing about your guys' opportunity in your mind?
Yeah, I think what you see with the U.S. operators is it's more of a product of the thinly traded CSE than it is the execution of the U.S. operators. As you said, the results coming out of Illinois are phenomenal. So for the market to take a different perception of it is I think the results of other impacts, not necessarily the performance or the execution. You've got, again, one of the largest states in the country. You've got what's recognized as arguably like a Silicon Valley of cannabis. You've got 5 of the 10 largest multi-state operators that are some of the best operators in the space. You've got a well-respected program that was put together by legislators that prioritized social responsibility and tax revenue equally. So you've got the makings for a very, very strong market here with very good operators in it.
Hey, Charlie, it's Julia LaRoche here. We still do not have federal legalization of cannabis, yet you're mentioning the different states that have legalized it. Just from your perspective, how do you see that changing? And because it's not federally legal, how does that impact, future expansion plans? What are you waiting for? Like, what do you think will actually move the needle here?
Yeah, I think, legislation related to banking. I think the SAFE Banking Act is going to be an incredible catalyst for the industry. I think at that point, you've got the support that the banks, the financial institutions are looking for to truly get involved in the space. At this point, it's still very limited to mainly state chartered banks, credit unions, et cetera. We need something. The SAFE Banking Act would be a tremendous boost to the confidence and also the performance of the U.S. operators with that banking support.
Hey, Charlie, Kinsey. So when we had legalization in California, it was essentially like legalizing cannabis in a small country, and everybody was very excited about that. But we did see some sort of blowback with the people were still shopping for cannabis products on the black market, especially in California. Have you noticed any sort of similar situation in Illinois? And if so, what's your plan of attack to kind of win people into the legal market for cannabis as opposed to what they have been doing what they may have been doing for many years on the black market?
Yeah, I think this is one of those instances where you're going to see the different dynamics that exist market to market in the U.S. Illinois is different than California, especially with its relationship with the illicit market. Keep in mind, most of the product that supports the illicit market is produced in California. So Californians have a different relationship with the production side of the illicit market goods. It takes a long time and there's sort of added margin by the time illicit product comes to Illinois. So you've got a lot of people in Illinois that are ready to support a local industry, very excited about the opportunity to come into licensed facilities, licensed stores, to get product that's been produced by licensed and regulated operators, that's been third-party tested, that has certifications on the side of every single product that says exactly what the potency is, that it's free from microbial contamination, that it's free from residual solvents, pesticides, et cetera.
See, but that's kind of the interesting that's the interesting thing too, to me at least. I've lived in California, lived in Illinois. It was interesting. The reaction generally in the news space after Illinois voted to legalize marijuana was kind of significant because it's the Midwest we're talking about. Are you saying that generally the perception for the market in Illinois is so different from the market in California that you might be attracting people who've never used weed before, and that it might be easier then to kind of battle the challenge that we've seen by the black market?
Without a doubt. And I would add on top of that, again, by the time that the illicit product makes its way to Illinois, you're a lot closer in pricing to where regulated cannabis that's been tested, that has to go through the channels of secure cultivation environment growing. The price is going to be a lot more similar to the illicit market product than you would see in other markets where the illicit product is actually grown in state. So without question, I think you're going to see a lot more support from the canna curious, as we refer to them, as well as the pioneer legacy cannabis participants. You're going to see both in Illinois.
All right, very interesting stuff. Some more reasons perhaps to toke up legal weed out in Illinois. But Charlie Bachtell, thank you so much. Appreciate you joining us again. Good to see you.
Thank you, guys. Thanks for having us.
All right, well, next on Wi-Fi PM, Apple TV Plus confirming it's landed. Former HBO CEO Richard Plepler, the man behind HBO's dominance with titles like Game of Thrones, how he could help Apple TV in its streaming battle when Wi-Fi PM returns. Welcome back to Wi-Fi PM. We are seeing the losses in the Dow accelerate from where we opened the show, off now more than 200 points. The S&P 500 in the red as well, and you can see there the NASDAQ keeping pace, off more than 0.5% as we approach 2 p.m. Eastern Time, pacing for the first down day in 2020. Well, Apple is looking to vamp up its streaming selection. The tech giant reportedly signed an exclusive deal with former HBO CEO Richard Plepler to produce movies, TV shows, and documentaries for Apple's streaming platform. And it comes as Apple falls behind in the streaming battles after its original The Morning Show received dismal reviews. Although, guys, you could ask anybody, and the reviews are going to be different depending on who you ask. I've heard some positive ones as well, but I guess generally not good. Is this good for Apple TV? Obviously, they don't have a lot of selections compared to the Netflixes of the world or even the Hulus of the world, Disney Plus. Can you think that he can actually deliver substantial firepower here?
Richard Plepler spent 27 years at HBO, built it into the powerhouse that we all know today. And I got to say, the only reason I subscribed to HBO was for Game of Thrones, because, it was this incredible experience. And I felt left out, but actually it was great coming on later in life, because then I got to binge watch several seasons in a row, which is the best way to do it anyway. I just think to move the needle here, one, we don't know the exact number of subscribers or viewers. I don't think that data has ever been made available from Apple's side. But if they can create some show that captures the imagination, maybe there's something there. He's obviously a very capable executive, but we just don't know. And you were saying, Kinsey, that you have Apple TV Plus.
Yes, I do. And to be totally honest, when I first logged into Apple TV Plus, I was kind of like, wait, but where is everything? Like, you think there will be more on the homepage, that there just is not. But if anybody can kind of bring this star power to Apple TV Plus, it is someone like Richard Plepler. We talk about Game of Thrones and Sex and the City and The Sopranos. These are all shows that kind of became cultural icons under his stewardship at HBO. But the one thing that I think is worth kind of bringing up here is that those shows took a very long time to reach the kind of tipping point to where they became something that you can call GOT and people know what you're talking about. And also that this is Plepler's production company. So it's not like he's stepping in and saying, I'm the new head of Apple TV Plus and everybody answers to me. It is his company who, will be working closely with Apple, of course, exclusively with Apple. But you have to wonder how much day-to-day impact he'll have on actually Apple TV Plus.
I hear the same thing, because it did seem like Apple was just dipping their toe in the water when it came to the streaming game by having just a couple titles, really, when they first started, and it was odd that they only had that small selection. But now, this signals kind of a major hire in saying, all right, we're not just dipping a toe anymore. I would say, at least in my book, it's up to the calf. We're at least at calf level submerged in
water. But they need to go fully waist deep right now, because you think about Netflix as casting an enormously wide net. And Netflix has something for everybody, even if it's terrible, even if it's like The Christmas Prince.
Don't hate on the Christmas Prince.
But they have options for everybody, from House of Cards to all the Vanessa Hudgens Christmas
movies. Cupcake shows.
Yeah, exactly.
So great.
Apple's not playing the game that way.
Yeah.
And you don't know if that's going to be a successful strategy yet.
But you know who's really playing the game is Disney Plus.
That is absolutely true. Disney Plus continuing to do well so far. We'll see what numbers we get later on as the streaming wars continue. But Kinsey Grant, Julia LaRoche, thank you guys so much again. Appreciate it. We are going to go and head to the New York Stock Exchange and talk with Scott Gamm for more market news right after this. All right, let's check in with Scott Gamm on the floor of the New York Stock Exchange as we are seeing losses accelerate. Scott?
All right, Zach, thank you. I am joined now by Peter Tuchman. Okay, sell-off because of an event?
Okay, so I believe this is a modest sell-off in response to a huge global event. Right, I don't think we really know what's going to happen going forward, but the market was down 350 pre-market. So when things happen and headlines like this happen overnight, obviously the market's going to react, not knowing really where the buyers and bodies lie on this end of the spectrum. But we saw the market rebound from down 350, been hovering around down 150. That's a modest sell-off relative to what's going on.
I'd be curious to know what happens in the next 2 hours, just because we're heading into a weekend, and really, anything could happen this weekend.
I think the path of least resistance is probably going to be down from now till the end of the day. The imbalances are not showing us anything in particular directionally, but I would think coming into a weekend, we've got 3 days of mourning in Iran, and then perhaps we're going to see something happen, and I think that's going to cause some anxiety. Obviously, the market, this has implications in the oil market. It has implications all over the world, our relations with the Middle East in general. This is a huge event. And obviously, whatever's going on in Washington on top of it. So granted, there are no tears lost for this gentleman who is actually a terrorist and a murderer. And all that being said, I'm not clear whether we got to get the plans be laid out, and the market will react accordingly.
And look, I mean, if nothing happens this weekend, if no further escalations take place, you could conceivably have more buyers come in on Monday.
You know what? Look, if we look at it historically, headlines and geopolitical events have been more of a buying opportunity over the last year and change than not, right? Every big sell-off, fast and furious, has been a buying opportunity. Granted, this is a little bit different. This is potentially going to lead to a military war, perhaps, we don't know. Right. And sometimes markets like war, sometimes they don't.
Peter, gotta go. Thank you so much. As always, really appreciate it. Back to you, Zach.
All right, coming up, a roller coaster day for oil prices after a U.S. drone strike in Iraq kills a top Iranian commander. We're going to dig deeper into that. A top expert weighs in on future implications next. The ticker starts in 2.
Good afternoon and welcome to the ticker on Yahoo Finance. I'm Shauna Smith. Taking a look at the market action, stocks today are moving lower as tensions escalate in the Middle East. You can see the Dow off 204 points, the S&P off just around 0.5%, as well as the Nasdaq. Now, Iranian General Qasem Soleimani was killed by a U.S. airstrike in Iraq. The attack, authorized by President Trump, is sending shockwaves throughout the Middle East. Yahoo Finance's Jessica Smith joins us from Washington with the latest. Jess.
Well, Shauna, according to multiple reports, the U.S. is now sending 3,000 additional troops to the Middle East in light of this latest escalation. President Trump directed this move last night. He directed the killing of Soleimani, and he said on Twitter this morning that he should have been taken out years ago. Republicans in Congress are largely backing the president. Majority Leader Mitch McConnell spoke on the Senate floor this afternoon. Let's watch.
He and his terrorists posed an ongoing and growing threat to American lives and American interests. Soleimani made it his life's work to take the Iranian revolutionary call for death to America and death to Israel and turn them into action.
While Democrats are not defending Soleimani, they are concerned about the consequences of this move. Iran has vowed to retaliate. In a tweet, Senator Elizabeth Warren said Soleimani was a murderer responsible for the death of thousands, including hundreds of Americans. But this reckless move escalates the situation with Iran and increases the likelihood of more deaths in new Middle East conflict. Our priority must be to avoid another costly war. Senate Minority Leader Chuck Schumer also spoke on the Senate floor, and he says that the president does not have congressional authority to go to war with Iran. So we'll keep you updated on how this continues to play out over the next few days. Shauna.
All right. Thanks so much, Jess. Well, let's take a look at how this all is impacting the price of oil. Taking a look at oil today, they are surging. You can see the oil chart up almost $2 at $63.07 a barrel. Now joining us now for more is Stephen Schork. He's editor of the Schork Report. And Stephen, when you take a look at the reaction that we're seeing in crude, jumping about 3%, but I think it's relatively muted compared to what it could have been. What do you think?
Yes, absolutely. And that's been the ongoing story now for the past year. We have to keep in mind that Iran has spent the better part of 2019 chumming the waters. That is to say, trying to bait the United States into a deepening conflict, whether it was the seizure of oil tankers, the mining of the Strait of Hormuz, the downing of U.S. drones, the drone attack orchestrated by Iran on the Saudi Aramco facility in September. You've always had these provocations, but you didn't have a response up until this point. So to that degree, the calculus has changed. So I think the market is going to its old playbook where we've had these provocations. And as Osama bin Laden taught us back in 2001, unchecked provocations only lead to further and greater provocations. So there was not a response in any of the provocations from last year. So we are certainly starting the new year on a fresh sheet of paper here, and we do have the response. I am a little concerned that the market is kind of relying on what happened back in 2019 when we did not get the response. But clearly, this response by the United States to the embassy siege staged by Iran a few days ago, the ball is back in the Iranians' court, and we're going to wait to return serve. So, yes, we did have a material rise in prices today. To your point, not nearly as great as you would suspect. So I think the market is certainly going to take a wait-and-see attitude. That said, the market is clearly not positioned for this event. When we look at the option flow or the money flow in the option markets, the market is betting on a ceiling in oil prices, non-mixed WTI, upwards of $65 to $66 a barrel. We're still a few dollars below that, but if we see any further hardcore response and then an escalation in this conflict, we could easily break that $65, $66 ceiling. And then without any overhead protection at that point, then the green light is there for bulls for a significant spike in price.
Stephen, from how you see it, you mentioned the potential of the fact that they could maybe seize ships or some tankers. They've done that in the past. There's also talk that they could possibly try and close the Strait of Hormuz. If either of those events happen, I know you were saying that we see upside risk. Crude could break above that $65 to $66 a barrel level, but how high could it go?
Well, it could go considerably higher. Right now, our quantitative models, which take into account the volatility and elasticity of past events, do show by the end of the first half of this year that oil prices, non-mixed WTI, could be well above $75 a barrel, pushing that $80 a barrel range. But we want to keep in mind, though, that for all intents and purposes, the industrial side of the U.S. economy, the factory economy, is in recession here in the United States. It's certainly in recession in Europe, and of course, it's in recession in China. all this being fallout from the ongoing trade rift between Beijing and Washington. So any material spike in oil prices will further exacerbate demand decay for oil, which ultimately, long-term out, will have a deleterious impact on price. That's something that the Iranians nor people in Texas really want to see at this point. So to that end, that what I'm really concerned about, and this is interesting, kind of listening to the commentariat on the television all day, people that normally don't follow the oil markets are really taking a kind of nonchalant stance on this, saying, oh, the United States, we produce 13 million barrels a day. We don't care. We're not worried about these oil prices. You know what? The United States still imports 3 to 4 million barrels of crude oil a day. So it is a significant to that point. So when you juxtapose this nonchalance on some of Wall Street's non-oil people, the fact that option riders are not prepared for this event, if you do get to that point of closing of the Strait of Hormuz or the seizure of tankers, we could be upwards of our model's upper elasticity range in that $70, $75 range.
All right, Stephen Schork, thanks so much for breaking all this down for us. Well, the geopolitical tension that Stephen Schork was just talking about obviously triggering a flight to safety. You can see it in the price of gold today on your screen, with gold up just around 1.5%, moving further above $1,500 an ounce at $1,552. Jared Blickery is standing by at the Wi-Fi Interactive board. And Jared, we're seeing this flight to safety in gold. Stephen was just talking about the fact that we're also seeing the rise in oil prices. From what you're looking at, I know you take a very close look at the charts. What are some of the key levels that you're watching?
Yeah, we can see crude is up 3%. Now, a little bit of historical context. People will remember way back in last September when we had that Saudi Aramco drone strike, crude oil spiked 15%, but from much lower levels. So here's what's happened over the last 6 months in crude, and we can see that there's been this really sharp increase. Over the last few weeks, crude has really caught a bid and been acting bullishly to just about all announcements. Now, $60 in terms of a price level is a support level, and then higher, 66.60 is really the high from last year. So 66.67 is something we're also going to watch. If there is another strike on, say, Saudi Aramco, disabling some of their production facilities, or if, God forbid, the Straits of Hormuz were blocked for any period of time, we would see a much more significant spike. In fact, some analysts have said that if the Strait of Hormuz is closed for any length of time, even short term, we could see oil spike to $150. And here we can see it. It's this very narrow stretch of water by Iran, UAE, Oman. 1/5 of the world's crude goes through there just about every day.
Jared, another or a commodity that's moving today, gold. I mentioned that there at the top, crossing above 1550 right now, trading at 1552. When you take a look at the flight to safety that we're seeing on the street right now, from your perspective, is there still room to run for gold to the upside?
Oh, I'd be remiss if I said no, because gold has really been on a run since the end of the year. And that's predicated on a few different things. The U.S. dollar has been selling off for the most part over the last few weeks and is materially weaker, having broken support. So that supports higher gold prices. In addition, over the last 2 days, we've seen a dramatic compression of the yield curve and lowering of long-term interest rates. That's also supportive of gold. And so when you have all these dynamics together, gold could really rocket up from here. Now, if we take a longer-term look at one of the charts, this is a 1 year in particular, we can see it's testing the levels from August, September. That is a little bit of resistance, but any kind of further development could easily push gold higher.
All right, Jared Blickery, thank you. Well, coming up, what the U.S. should do to avoid an all-out conflict with Iran in the Mideast. A top expert joins us to weigh in next. Investors are on edge after a U.S. airstrike killed Iran's top military leader, intensifying geopolitical tensions. Now Tehran is vowing to avenge the death of General Qasem Soleimani. Joining us now for more on this is Will Taubman, Associate Fellow with the Middle East Program at the Center for Strategic and International Studies. And Will, when you take a look at what this could mean, first of all, let's start off with how important do you think the killing of this Iranian military leader was, just in terms of the potential of what it could mean for the U.S. here going forward?
I think it's a really important move. I mean, we're talking about one of the most prominent figures in the Middle East. This was perhaps the second most important man in Iran. He was single-handedly responsible for Iran's policies outside of Iran, so in the Middle East. So he was the one who was maintaining Iran's proxy networks in Syria, in Iraq, in Lebanon, and even in Yemen. And so to kill him is a really significant escalation, because until now we had seen a series of escalations from Iran, but very little response from the United States. So there was the downing of the drone, there were attacks on oil tankers in the Persian Gulf over the summer. Then there was that huge attack on Saudi Aramco facilities on September the 14th. And none of these attacks really elicited much of a response from the United States. And so it was unclear where President Trump's red lines were and what it would take for him to respond. But what we're seeing is that this attack, this Iranian attack on the Iraqi base in Kirkuk, which killed a US contractor just last week, and then the storming of the US embassy in Baghdad was what it took, and President Trump decided to change his strategy and take out this really very prominent figure.
Well, what do you think the likely response will be from Iran? Do you think there's anything that's off the table at this point?
I think it's really, we're in uncharted territory now, but Iran is not suicidal. Iran knows that it would be unable to match the US in a sort of conventional battle. So I think Iran will do what it can to avoid all-out war with the United States. It's already suffering economically. Although it has a relatively strong military, it's nothing in comparison to that of the US. So I think instead we're likely to see Iran returning to its classic playbook of covert attacks, these sort of gray zone activities which are somewhat difficult to assign blame to Iran, and yet cause significant destruction and significant instability in terms of the region and for international markets as well. So I would expect Iran to ramp up tensions in Iraq. Iraq is already undergoing a period of severe instability after these protests that we've been seeing for the last several months. And I think it's possible that might reach the level of the United States being kicked out of Iraq by Iraqi parliamentarians as they vote. But Iran has a whole number of options in terms of where it could strike. They could choose to go through Hezbollah in Lebanon and raise tensions with Israel. They could strike again at an oil tanker in the Persian Gulf, and clearly having an important impact on global markets. They could use a cyber attack as well.
Well, what about the relationship between Iraq and the U.S.? Because Iraqi leaders have denounced the killing. So now this also puts really in question the relationship between Iraq and the U.S. and its potential to unravel at this point.
It does. I think Iraqi-U.S. relations are probably at the lowest they have been for some time. I thought the statement from the Iraqi Prime Minister was particularly strong. He has called for an extraordinary meeting of Parliament, and I think that it's likely, as I said, that parliamentarians may vote to expel U.S. forces. That would have a huge impact on the United States' ability to continue its operations against ISIS, not only in Iraq, but it would also be difficult for U.S. forces to continue to remain in Syria. As we know, President Trump ordered a reduction in the number of troops in Syria, but with the 600 or so that remain there in the east of the country, it would be difficult for them to remain without having the land access to Iraq. So this could be very significant for U.S.-Iraqi relations.
All right, Will Taubman, thanks so much for joining me today.
Thank you.
We're taking a look at some stocks on the move in the market today. One that's sticking out to us is Tesla. Now the stock is in record territory after reporting a record 112,000 vehicle deliveries in its fourth quarter. Dan Roberts is here with me. And Dan, when you take a look at that stock price, $443 a share, how significant is that number for Tesla?
Lol, it's so high.
It is.
That's what Elon Musk tweeted after it surpassed that infamous 420 mark. The story of Tesla in the last year is remarkable because if you look at the stock chart in the last 12 months, I mean, there was that trough in May and it was down in like the 180s. And now we're at record highs. There were a lot of doubters about Tesla. And right now, Elon Musk is riding high. I mean, at that point in May when the stock was at a low, not only was the stock in that territory, but everything kind of seemed negative. The whole story around Tesla, you know, it had just missed a quarterly delivery number that was expected by the street, so there was a miss on that point. Musk was in court defending himself for the pedo tweet, which he eventually won that lawsuit. And now, I mean, how much changes in 6 months? Because Tesla right now is hitting all its metrics. It's not just the record 112,000 deliveries in the fourth quarter, but also for the year now, the number falls right in the range that Musk had predicted at 367,000. But I would also point to China as a huge win for Tesla right now. I mean, it remains to be seen what they can really do with that factory. But Tesla is saying that it has made 1,000 of those Model 3 sedans in China. And we know the deliveries of those have only just begun. The first 15 were all to Tesla employees, but they delivered a bunch more this week, or are about to, I think. But Musk is hoping that they can ramp up production from that China factory in a big way. And I think that Tesla right now is a good example of an American company that is winning big in China at a time when, obviously, for geopolitical reasons, it's kind of awkward to be doing such big business there.
Dan, how important do you think China is just in terms of having success there and that translating to Tesla moving even higher down the road?
Number one car market in the world. I think that wasn't the case until last year, or maybe 2018. So it's the biggest auto market in the world. Our colleague Rick Newman can tell you more about that. But interestingly, in this story, I think was around in the last 2 weeks, Tesla is doing much better than Chinese-based EV makers. And the reason I bring that up, I think one thing people forget when we talk about Tesla is not the only EV maker out there, you know? It didn't, invent the category. Other car makers are doing it. I just saw an ad for a new electric vehicle from Dodge during college football the other day. So all the other big car makers want in. And what Tesla skeptics, what Tesla bears will tell you is that, well, Tesla may be the flashy, sexy name. Look, we're showing NIO, which is the Chinese EV maker that has not done very well. If you expand the chart out there, that stock has not done very well in the last year at all. But other car makers arguably have far more years of experience with manufacturing cars than Tesla does and than Elon Musk does. And so the bear case for Tesla has been, well, when someone like a Ford comes in, or, the Nissan Leaf was out there, that was a hybrid that came first. When those car makers decide we want to really compete with Tesla more than we have in the past, Tesla's in trouble. Right now, hard to see that,
And what's interesting is that when you take a look at some of those traditional automakers, they were also out with sales numbers. GM, U.S. auto sales dropped 6% in the fourth quarter. Fiat Chrysler down 2%. And I know this is kind of an apples to oranges comparison at this point because a lot of those sales are not in the electric vehicle space. But maybe this speaks to the fact that a lot of these traditional car companies, in order to have that success down the road, need to make that transition maybe a little bit quicker than they were initially anticipating.
Yeah, I mean, Tesla certainly has a head start. One of my favorite spiels to say about any industry we discuss is just because a certain company or startup was first to something doesn't mean it will be the eventual winner in it. There's no guarantee that Uber will win in ride sharing. A company that's more established, a big tech player, could decide to launch a ride sharing app. So that's a similar case with Tesla. But right now, it certainly looks very good. And all the Musk worshippers and flag wavers and bulls are very happy. He's very happy. It's funny to think that here we were, a year and a half ago talking about, he wants to take the company private at $4.20 a share and everything that happened there. I mean, we know he hates all the shorts and wants to stick it to them, and he has done that. Right now, the stock is flying high. I mean, look at the market today. We're seeing, down almost 1%. Tesla has bucked the trend, just flying today. I mean, it was up as much as 4% earlier today. So sitting pretty. Now, that doesn't mean that it'll be all wins in 2020 for Tesla, but certainly I'm sure we'll continue to be talking about it a lot.
Yeah, the stock up over 3%, Dan. Thank you. Moving on to another mover today, and that is Apple. Earlier this morning, Apple crossed above $300 a share, right now trading at $299, while Bank of America and RBC Capital both raising their price targets on Apple to $330 a share. Heidi Chung is with me. And Heidi, some more bullish calls from the street on Apple. Why do you think the stock almost seems like there's nothing stopping it at this point?
Well, Shauna, when we think about Apple, we have to take a step back here and take a look at
at what has happened over the past year, because it has been a wild ride for Apple. If you recall, January 2nd, we had Apple CEO Tim Cook issue some weak guidance when it came to revenue and profit for that quarter, and that really spooked investors at the time. The stock sold off 10% the following day from $150 or so a share to about $142 per share. But look at it now. Like you mentioned, the stock crossing above $300 per share for the first time since 2014, when we had that 7-to-1 stock split back then. But it's been a crazy, crazy wild ride, and there's a lot of bulls on the street, and it doesn't seem like these analysts can sort of keep up with the momentum that we are seeing in Apple. But I do want to break down these two specific calls for you. First one is from RBC, and this analyst is boosting the price target to $330 per share from $295 per share. And then we have Bank of America analyst also bumping up the price target to $330 per share from $290 per share. Now, both of these analysts have a bit of a different viewpoint when we come to why they have bullish calls on Apple. So let's break that down really quickly. Let's start with RBC, because first and foremost, this analyst, Robert Mueller, took a look at the social media data for his research, and he found that interest in the current iPhone 11 and iPhone 11 Pro is extremely high and also growing. And also there's an increased interest when it comes to wearables such as the watch and AirPods. Now, specifically, he alludes to the AirPod Pros, which have only actually been on the market for the past 2 months, but it had a blowout holiday season. Now, there's still a wait list to get your hands on a pair of these, and that wait list is currently about 4 weeks. So that demand, obviously a good sign when we take a look at the holiday quarter. And shifting gears here to Bank of America, the analyst here is saying that take a look at the preliminary data that we are getting about App Store revenue growth. We're projecting about 19% revenue growth from last year. Now, the company will be reporting quarterly results on January 28th, so we will be keeping a close eye on that, Shauna.
Certainly will be less than a month away. Heidi Chung, thank you. Well, straight ahead, the latest Fed minutes coming out just a short time ago. We'll get reaction to them from the floor of the New York Stock Exchange next. Welcome back to The Ticker. The latest Fed minutes coming out just a short time ago. They show that Fed officials thinking that interest rates are likely at appropriate levels for a time absent a material change in the economy. For more, let's go to Scott Gamm on the floor of the New York Stock Exchange. Scott.
Yeah, that's right, Sean. I think the takeaway from the minutes is that the Fed is not really looking to back away from the work it did in 2019. And what was that work? Of course, 3 interest rate cuts. And we know the market likes lower interest rates just because it tends to make stocks a more attractive asset class and attracts more demand for stocks. But really, it's hard for the Fed minutes to kind of move the market today just because you have so many major geopolitical issues that the market is focused on. So no real reaction from the minutes report today. And I think the market widely knew that the Fed was not going to reverse those interest rate cuts from last year anytime soon. When it comes to the broader markets, yes, the Dow is down 200 points right now, really led by some names like Dow Inc., Caterpillar, and 3M. It is amazing how little a stock like Apple is down, just down about 0.4%. Of course, Apple hit a record high yesterday. And we'll be continuing to watch how stocks shape out in the final 90 minutes of the trading session, Shauna.
Scott, it sounds like the traders are a little bit more concerned with somebody's birthday down there on the floor than what's going on in the broader markets. All right, Scott Ginn, thank you.
I'm trying.
Thank you. All right, well, coming up, the U.S. airstrike in Iraq against a top Iranian commander is throwing a major curveball at the markets to start the year. A top analyst tells us if it's changing his outlook for 2020 next. Markets are under pressure following the U.S. airstrike on Iran's top military leader. Taking a look at the market reaction today, you can see the Dow off 216 points, the S&P and the NASDAQ also moving to the downside. Well, joining me now for more on this is Sam Stovall. He's Chief Investment Strategist at CFRA. And Sam, when you take a look at this, the market reaction, the Dow off over 200 points, does this make you rethink some of your playbook for 2020?
Not really. What I did do was I went back to World War II and I looked at all of the military or terrorist-inspired market sell-offs and was reminded that because they don't tend to lead to global recessions, investors do tend to sell out on the short term. We tend to bottom about 3 weeks after the event occurs, but then we get back to break even in a total of about 8 weeks after that. So in general, it represents more of a buying opportunity than a reason to bail.
So at this point, if it is a buying opportunity, what do you favor in this type of environment?
Well, I think certainly those stocks that are doing very well are your defensive areas, companies in the aerospace defense category, but that could end up probably not a short-term blip, but most of the gains in the short term probably have been appreciated already. I would say really you're just saying, I'm going to be getting an opportunity to buy back into some shares that I might have missed out on earlier on. We have overweight recommendations on financials in general, banks in particular. We feel that the technology still has an opportunity to run. And maybe if you did not get out of some of the defensive areas, when I say defensive, I mean like consumer staples, because they are seeing some support today because of the flight to safety, maybe you have another opportunity to lighten up from those areas that typically don't do well in this time of year.
What about some of the oil companies? When you take a look at the reaction in crude today, crude up just over 3%. Is there some opportunity there?
Only if you're a short-term player, in my opinion. Going back to 1990 when Iraq invaded Kuwait and looking at those terrorist activities since then, basically what oil gave
gave back very quickly. So we typically saw about a 10% gain on average from the event occurrence till the bottom of the equity markets. And then on the flip side, oil prices gave back that amount once the market got back to break even. And surprisingly, the energy sector, XLE as the ETF, combined with stocks like ExxonMobil, ended up being down and followed the market more than they did oil prices.
Sam, we had a piece of economic data out this morning, ISM manufacturing coming in at 47.2, so it was a bigger contraction than what the street was expecting. What's your read on this report?
Well, two things. First off, that you then had the market report come out on its manufacturing PMI that disagreed with the ISM number. So in a sense, one was lower, whereas the other one was higher and in expansionary mode. Second is I'm reminded that manufacturing represents about 10% of the U.S. economy, whereas services represents 90%. So I'd be more focused on weakness in the ISM services than I would be on the ISM manufacturing.
Sam, at these levels, do you think the market is overbought at all at this point?
I do. When you look to technicals, when you look to all of the different wonky indicators. Plus, if you simply look at the sum of the PE on forward 12-month earnings with the 10-year note, what you find is that we're trading about 8 to 12% above average. So it would imply that we could see a pullback or correction in either time or price.
And if we do see any sort of pullback or correction, how big of a pullback are you expecting?
I would say no more than what I would call a deep pullback, which is a 8 to 10% decline.
All right, Sam Stovall, thanks so much for joining me today.
My pleasure.
Well, coming up, how exposed is the U.S. economy to an escalation of violence in the Mideast? We've got new details next. Checking in on the closing price of oil, crude having a huge move to the upside, closing up just over 3% at $63.13 a barrel. Now the move spiking after President Trump ordered an airstrike that killed a top Iranian military leader. Well, joining us now for more is Peter Chur. He's head of macro strategy at Academy Securities. And Peter, when you take a look at oil's reaction today, crude closing up over 3%, the Dow off over 200 points. How big of a pullback could we see in the markets because of these escalating tensions in the Mideast?
I don't think we're going to see much of a pullback. I'm actually getting constructive already. I think, obviously it's, dangerous and there's some risk of escalation. At Academy Securities, we work with 13 retired generals and admirals. We spend all day kind of, war playing what could happen next. I think the consensus is really that Iran can't afford to be too aggressive. They might want to be aggressive. I think they're going to have to pull back. We've clearly changed the, name of the game where we're more willing to retaliate. So I think you're going to get a little bit of a status quo back there. I think oil prices being higher will probably be elevated, but I'm a strong believer that higher oil prices are now generally good for the U.S. economy. We've got enough people dependent on oil business here that I'm quite comfortable with that. If anything, the one thing I'm changing a little bit of my global outlook was I was expecting Europe and maybe Asia to outperform the U.S. this year. I think they're much more exposed to higher oil prices, especially if the Brent versus WTI spread increases. So I'm actually thinking the U.S. has better potential.
Yeah, I wanted to ask you about that just in terms of the fact that this could hurt Europe and China and even Japan a little bit more. Why exactly is that?
So we've actually gone to being a net exporter of energy, and we're very productive, and we've got our own WTI. Japan really has to import their energy. China's importing their energy. Europe is importing their energy. And it's also mostly Brent. So they're getting the bulk of their energy from that part of the world. So I think as energy prices there, it's going to impact their economies, their cost of goods faster than it impacts ours. And especially, I do think you're going to see that spread between Brent and WTI. So I think it's going to be more of a drag on their economy, where I think we're just fine. And certain states here are going to do very, very well with higher energy prices.
Peter, when we talk about the potential retaliatory measures that Iran could take, one of the things that's being speculated is that they could cause at least some disruption in the Strait of Hormuz. How likely do you think that is?
In general, we don't think that's very likely. It's an area that's pretty well defined. We believe if they cause a disruption, it can be cleared up very quickly. They are also well aware that that will just cause us to escalate further. So I think they're going to be very careful on that. If anything, we expect maybe some cyber activity. Again, I think the U.S. is pretty well protected against cyber. Saudi Arabia has maybe not spent as much money on cyber defense. So that's the sort of thing that we see Iran liking, because again, they like that plausible deniability. So cyber tends to have that. And I think they might find some weaker areas to exploit, like the Saudis, and stay away from something that's going to be such a global nature that it forces everyone to retaliate.
Peter, I know you're saying that you don't expect any huge disruption in terms of the U.S. market or for the U.S. economy, but when investors are trying to play the market right now, do you advise at all, I guess, positioning a little bit more defensively than maybe they were a couple of weeks ago?
We came into this year thinking that we are pretty, I don't want to say overbought, but we are pretty extended. What I've been liking to do is take some chips off the table, and maybe for every $4 or $5 you're taking off the table, I want to put actually $1 or $2 into energy or some of the high beta stocks. So I actually think once we get through this, and energy is obviously benefiting today, we are going to see global economic growth. We've seen the energy stocks underperform the price of oil for so long. I think that catch-up started in December. I think that's going to continue. So I like the idea of de-risking a little bit, taking some money off the table, keeping in some safer assets, but at the same time shifting just a portion of that to higher beta or risky assets. So a lot of the underperformers, the laggards, and energy. So you're being a little bit aggressive with what chips you're taking off.
Peter, what about trade? We haven't talked about that yet. The potential phase one trade deal is expected to be signed on January 15th. President Trump has already talked about a potential phase two deal. How much of that is already priced into the markets?
I think a decent amount's priced in, which is why, unfortunately, part of my base case is that we will hear some negative news on trade at some time in January. It tends to be how the president likes to negotiate, right? You stir the pot, you cause some confusion, you get everyone all upset that maybe it's not happening. So then whatever happens, you get a bigger victory later on. So I think sometime between the signing of phase one and long before we get into serious discussions of phase two, we probably have a little bit of negative trade news. I think it's going to be more bluster. The market's not going to react too much. But we would need a really, really strong deal, I think, for the market to respond solidly, and I think that's not on the table right now.
All right, Peter Char, thanks so much for joining me today.
Thanks for having me.
Well, coming up, some major turbulence for U.S. airlines in the wake of the airstrike against Iranian General Soleimani. Stay with us, we've got those details next. Welcome back. Let's get to our next group of tickers today. The volatility index is soaring as tensions mount in the Mideast. U.S. airlines are taking a hit as oil prices spike, and L Brands is surging after one major bank says that now may be the time to buy its beaten down stock. Well, let's kick it off with the VIX. Now, the so-called fear gauge index is spiking on increased geopolitical tensions. Jared Blickery is back with me. And Jared, you're taking a look at the VIX right now, moving to the upside, up over 10% today. What does that tell us just in terms of how much fear is in the markets at this point?
It's really relatively subdued. And if we take a look at a price action chart, well, an index action chart of what's happened to the VIX today, before the market opened, it was actually at 16.2. And this coincides with an important level that we've been looking at for a few days, signaling potentially a bottom in stock. So I think a lot of people are going to be seeing this as a buying opportunity. And we'll see why if we go to a 6-month chart here of the VIX. And so now we have this negative trend line that's been in place here. And actually, I was looking at it earlier in last decade, and this provided a very good buy signal for equities when it spiked up to this trend line and reversed, and it's basically done it again today, again going up to about 16.2. If that's correct, then the worst is over for now. But of course, we know there could be and probably will be some kind of retaliation. So what I'm also going to be watching for is a close above this, and if that happens, this could be the beginning of a more protracted sell-off in equities.
And we see that happen. Jared, what do you think the likely reaction will be from the street just in terms of how they're positioning their portfolios?
Well, just to get back to the original position, there's a lot of complacency in the market right now. And in fact, let me pull this up. This is a tweet by the Market Ears, one of the VIX volatility traders that I watch, and it's a little bit hard to see in contrast, but this charts the actual contract spread of VIX futures, and we're not seeing them at a very elevated level either. Another thing we can look at is the VIX of VIX. So hope nobody's heads are spinning here, but VIX also has its own volatility index based on the options, and we can take a look at that chart as well. It has been a little bit elevated recently, and people were looking at this trend up while the regular VIX was just flat as potentially a precursor to something to come, but it's backed off. And so any way you look at the term structure, at the actual derivatives of VIX and the market itself, and VIX is a derivative, all signaling a lot of complacency here that might be overblown. Because again, if we see the market race higher, if we see tensions escalate and the VIX race higher and close above that level, could signal that this is the beginning of a more protracted correction.
All right, Jared Blickery, thank you. Well, we are also watching airlines today. Now the sector is under pressure as Mideast tensions send oil prices surging. Now the news also weighing on the U.S. Global Jets ETF. Dan Roberts is back with me. And Dan, when you see the reaction in the airlines today, obviously this is all about higher oil prices. Why do you think there's so much fear out there?
Well, look, whenever there is a geopolitical issue in regards to oil prices, you do see airline stocks react because higher price of oil is going to mean higher fuel costs for these airlines. Now, today, you are seeing some people say that the reaction is maybe an overreaction already. So if you show some of the airline stocks right now, American Air is down the most, down, I think, more than 4%. Some of the others only about 1%. Look, Boeing barely, which is interesting for its own reasons. Southwest down half of 1%, United about 2%. So all around the same range, but American Air taking the biggest hit. But the reason I think some people are saying this is an overreaction, if you look at the price of oil, it hasn't even skyrocketed as much as you might have thought, given the initial reaction to this political news, the airstrike and the very threatening response from Iran. Now, obviously, this is going to be a big story for the next few days, weeks, months. That is what Iran might do next. But the airline stocks really, usually you don't actually see the price get passed on to consumers for quite a while. So only if oil prices were to really continue to skyrocket, as far as I understand, if we were in like $80 a barrel territory, which we're not, we're showing WTI on the screen, it's to 63, Brent crude about $68 right now, so we haven't even hit 70. Only if you really saw it go way, way, way up would you actually see airlines have to ingest that cost and pass it on to consumers. And of course, the average person watching our shows, that's what they're concerned about is, are airline flights going to become higher for me because of this news about oil prices? Not likely just yet. A lot would have to change.
Well, Dan Roberts, thanks so much. All right, moving on here, we are also watching L Brands. It's a top performer in the S&P 500 today. Now shares are moving to the upside after Bank of America upgraded the stock to buy from neutral, pointing to growth at Bath & Body Works. Heidi Chung is back with me. And Heidi, when you take a look at this call on L Brands, why are they bullish in terms of the company turning things around?
Well, overall, Shauna, we take a look at L Brands and we always constantly cover it in the sense that this company has not been able to change with the times. The way that Victoria's Secret, the way that Pink is sort of marketing their brand is not really in line with 2020, right? So this company has been under a lot of pressure, not just over the past year, but for several years at this point. And the real poster child of the three brands under L Brands has been Bath & Body Works. Honestly, investors have been scratching their heads at how Bath & Body Works has managed to have this sustainable sales growth that it's had for quarters and quarters and quarters. And so when we take a look at what Bank of America is outlining here in its call, first and foremost, the analysts raised the price target by about $4 to $25 a share. The average price target on the street right now is still at $21 per share. And the one-year performance, when we take a look at L Brands, it is down 24% relative, and the S&P rose 35% in the same time period. And the retail ETF, the XRT, that's up 12% in that same time period as well. Now, the analyst saying that Bath & Body Works is best in class and is able to consistently deliver the sales growth. And the analyst said, well, while we always thought that Bath & Body Works would actually suffer from the declining foot traffic that we are seeing in these malls, it actually has really, really robust foot traffic when we take a look at the other tenants in those same malls that are neighboring Bath & Body Works. Now, the analyst also saying there are a couple ways that this company can sort of turn around the image issues that it has at Victoria's Secret, noting, one, we probably need to shake up the management over there at Victoria's Secret as well as L Brands, and also add back swimwear. That would actually help the company make more money because they would see better margins. Now, this company got rid of swimwear altogether back in 2016, and a lot of analysts have been calling for the return of that for quite some time now. So if this company thinks that they want to really get back into the game, in the retail game right here, swimwear might be a good call.
Heidi, over the past 2 years, the stock is down over 60%. We're talking about the fact that a lot of these retailers need to pivot and really mirror what the consumers want in terms of trends, really, and that, in most cases, means expanding their presence online. Is that also a concern here for L Brands going forward?
I think online sales is always going to be a point of concern when we talk about retailers. But first and foremost, what this company needs to do in order to stand up to competition is figure out a way to appeal to a lot more consumers. Because at this point, American Eagle's Aerie brand is actually dominating the intimates and apparel space right now. So it's all about making sure you're not pushing away consumers that could actually be either coming to the store or shopping online.
All right, Heidi Chung, thank you. Well, coming up, mortgage rates are kicking off 2020 far below their 2019 average. How big of a jump will it create in buyer demand? We've got those details. Stay with us. Mortgage rates are on the decline with the 30-year rate at its lowest level in just about a month. Joining me now is Tim Rude, a Citus AMC director and a former executive at Fannie Mae. And Tim, thanks for being with me today. Just tying mortgage rates to today's news of the Iranian strike, do you think that this solidifies lower mortgage rates, at least in the short term?
Hi, Shauna. Happy New Year. Yeah, I do think that's going to certainly help with interest rates. Look, any time you have this sort of global conflict, it actually is a flight to safety. The U.S. Treasury is generally the benefactor of that flight to safety, which is the proxy or the driver for mortgage rates. So, we already thought we were going to have a pretty steady interest rate environment, about 3.75% to 4% all year. Not a whole lot of variability. I think that you're still going to maintain that. If not, you're going to have a downward bias, which is certainly good for the housing market.
Tim, you say that that's good for the housing market. Does that mean that you think housing will be a bright spot in the economy this year?
I do, on a couple of levels. I mean, if you think about it, there's, the housing market, of course, there's an existing home market, which makes up the resales. That's about 90% of the market. And then there's a new home sale market. The new home sales is what really drives ultimately GDP, but the existing home sales where you see all the action. That's where you see all the action around first-time home buyers, because historically, or at least during the housing run-up, you haven't seen builders be able to tackle the entry-level market. It's too expensive. They can't get permits. It's hard to find buildable lots. So a lot of the action is going to be on the existing home market, and you're really seeing millennials come of age. So you have about 5 million millennials that are turning 30 this year. That's still just the ripples in the water. 2 or 3 years from now, you're going to see the real headwinds, or tailwinds rather, for the millennials into the housing market. So there's going to be great demand on the entry-level side. The hard part is going to be like where you can find the inventory.
Well, Tim, one trend that caught our attention, the refinance volume in 2019 jumped 100% from just 2018. And one of the trends within refinancing is cash out refinance. Why do you think we're seeing this become more popular?
It's interesting. I'll admit, I was at Fannie Mae when this was first going on, the housing run-up. And my first reaction when I saw that was kind of shock and horror, because we haven't seen cash out refinances really take off during this housing recovery. If you kind of juxtapose 2007 to 2019, they're very different markets. That whole market was built up on speculation, fraud, lies, subprime. This market is built up on fully documented, heavily credit scrutinized loans, and very prime mortgages. I think the average FICO now is about 70 points higher. So I really took it as people cleaning up their balance sheet. Look, you've got household debt at all-time highs. That means you're paying interest rate on credit cards. I think the average family that has a credit card debt is actually almost close to $20,000. Average auto loans, $30,000. Those are high interest loans. So it makes a lot of sense to take cash out at the tail end of a cycle like this, where you've got equity, and to consolidate that under one low interest rate. So I wasn't totally troubled, but I will admit it gave me a little sweat on the upper lip when I first saw it.
Tim, what do you think will be the popular markets? You mentioned the fact that a lot of millennials will come off the sidelines or start to buy homes this year, especially the entry point homes. Where do you think the most popular areas will be?
Well, it seems to be that the coastal cities, the expensive coastal cities, are kind of losing a lot of population. The millennials we thought would be parked in these cities. They would be drawn to the walkable amenities of those cities, and the conveniences have been pushed out because of the affordability issues. They're becoming of age. They want to start households. They want to buy homes. And they're being driven inland, but they're not going to the traditional inland cities. They're going to the tertiary cities, where you see things that are going to be, one, affordable, that are desirable from a commute standpoint, from a weather standpoint, and they've got strong macro and microeconomic locally. So if you think about this, that would be the Tucsons versus the Phoenixes, the Colorado Springs versus the Denvers, the Memphis versus the Nashvilles, that sort of thing. That's what we see kind of happening right now.
All right, Tim Rude, thanks so much.
Yeah, thank you. Okay.
Well, coming up, defense stocks are leaping as tensions spike between the U.S. and Iran. How much more room do they potentially have to run? We've got those details. Don't go away. It's time for our last take of the day, and it's defense stocks. They are on the rise as unrest in the Middle East boosts demand for these. We have Dan Roberts, Jared Lickery, and Heidi Chung back with me. And Jared, let me start with you. We have Lockheed Martin on the screen. That stock up almost 4%. What do you make of that surge to the upside?
Well, it's what I would expect. These companies are already getting a ton of money, as they have been for several years now. Donald Trump is no fiscal conservative, and I'm looking at Northrop, it's up over 5%. Lockheed Martin is at a record high, it's up 3%. I would expect this to continue. Boeing would probably be at a record high too, were it not for the 737 MAX disasters.
Dan, one thing that could also affect these stocks is the 2020 presidential election. Any thoughts there?
Yeah, I think it could, but I think people are a little bit kind of overreacting to see these names up so big, mostly just because of the strike on Iran. A lot of experts out there this morning are saying, you know, look, the idea that there might be some kind of war is really hasty. Obviously, everyone is concerned about what Iran's response will be, but we had some people earlier on our live show this morning at 10 a.m. saying that, you know, there's really nothing that Iran could do in terms of war against the U.S. right now. So if the names are going up for that reason, it's a little bit of an overreaction.
And Heidi, real quick, do you think the move to the upside in some of these defense names, at least, is sustainable?
Honestly, Shauna, it all matters about what's happening next. For now, it seems like a knee-jerk buying situation when we look at the surge that we are seeing in the aerospace and defense stocks. So it's all about the next steps. I think consensus right now says escalation, but just how long and how bad will it be?
All right, Heidi, Dan, and Jared, thanks so much for being with me. We'll keep it right here on Yahoo Finance. The Dow is off 176 points. The final round is all over it next. I'm Jen Rogers, and this is the final round. Stocks dropping here and around the globe after the U.S. confirms it killed Iran's top military general in an airstrike last night, sending oil, gold, and treasuries higher. With me now, of course, my co-host Miles Udland and Yahoo Finance's editor-at-large and the co-host of The First Trade, Brian Sozzi, to break down today's big news. And you saw some of the market reaction there. For the very latest on this developing story, let's go straight to Yahoo Finance's Jessica Smith, live in Washington, D.C. Jess.
Well, according to multiple reports, the U.S. is sending about 3,000 additional troops to the Middle East in light of this situation. And the reaction we're seeing in Congress is largely split along party lines. Republicans seem to be backing the president on this move, while Democratic lawmakers are questioning the decision-making process and why they were not involved. Senate Majority Leader Mitch McConnell and Minority Leader Chuck Schumer spoke on the Senate floor about the situation earlier today. Let's watch.
For too long, this evil man operated without constraint, and countless innocents have suffered for it. Now his terrorist leadership has been ended.
It is my view that the president does not have the authority for a war with Iran. If he plans a large increase in troops and potential hostility over a longer time, the administration will require congressional approval and the approval of the American people.
Democrats are not defending Soleimani here. They are saying that he was evil, that no one should shed a tear over his death, is what Schumer said on the Senate floor. But many are worried about the consequences of this move because Iran has vowed to retaliate. McConnell says that congressional staff are being briefed today, and he is working to arrange a classified briefing for all senators later next week. So, of course, we'll keep you updated as the story develops. Jen and Miles.
So, Jess, we're heading into a weekend here. Are we sort of in a holding pattern, given that we're waiting for this, the quote-unquote forceful revenge? I mean, should we be expecting anything more, any news out of the Pentagon this weekend, or is it wait and see?
I think at this point, it's kind of a wait and see mode. We're waiting to see if we learn anything after Senate staff is briefed. We'll be looking for any word from the president. He's going to speak at an event at 5 o'clock this afternoon, so maybe we'll hear more details from him there. But yes, I think we are kind of in a wait and see mode here to see what happens on the Iranian side of things and to see if we get any more information from the U.S. side.
Jessica Smith in D.C. with the very latest. Now for more on the market impact of the U.S. airstrike that killed Iranian General Soleimani, we have Mohamed El-Erian, Allianz's chief economic advisor, joining us on the phone. So, Mohamed, this morning I heard you a couple places kind of talking about the idea that investors would likely fade the moves that we were seeing right after the action. Now during the day, we've gotten more news, U.S. troops heading to the region. Do you still think that investors will be fading the moves?
And they have. The market losses are less than what they were initially, and that reflects the deep conditioning that investors have had. It's not to say that there hasn't been an escalation of tensions. There has been, and we are likely to get some sort of retaliation. But markets believe two things very strongly. One, that this will not be a full-scale war. And secondly, that the Fed is on the sideline and will intervene if there's too much market volatility.
Mohamed, Miles Ludland here. I want to ask you, actually switching gears just a little bit, something I know you were paying attention to, kind of that manufacturing data that we got earlier today out of the U.S. and just, we've got the Iran strike, we've got mixed data coming out. There's been a real narrative over the last couple of weeks formed about the strength of the turnaround we would see in the U.S. and global economy into 2020. Do you think that those stories are kind of put at risk by what we've seen so far today?
So I think there's three takeaways from that number and that speak to your more general question. One is manufacturing is suffering, whether it is in Europe, China, or the U.S. It's a global phenomenon, and the U.S. is not immune. Two is that will complicate the recovery and the nice narrative that we've heard about the global economy. I think what we're going to see is will turn out to be just a cyclical uptick in Europe, not anything more sustainable. But three, importantly, the U.S. is in a better place. Why? Because its manufacturing sector is relatively small and the consumer remains strong. So I see it as a confirmation of a global story, but not as fundamentally changing the outlook for the U.S.
Mohamed, Brian Sazi here. Do you feel as though we are in a short-term valuation bubble? I look at the small caps, very aggressive valuations on them now, aggressive valuations on the S&P 500. Is it justified? And if not, what pops that valuation bubble?
So it's justified because of favorable market technicals that are fueled by enormous liquidity. There's been an over $600 billion expansion in the Fed's balance sheet in the last 4 months. That's a very big number. They don't call it QE, but in terms of its impact on asset prices, it has a QE impact. Add to that the ECB, and it's very hard not to be constructive short term. However, the medium-term uncertainties are increasing. Today is another example of that. So the key challenge for the investors, not just to be exposed to the market, it is to keep a claim on the upside while increasingly protecting against the downside. That is what they should be doing right now.
So we have, the U.S. is bracing for some sort of retaliation from Iran. We have the U.S. Multiple reports about moving troops in there. So the story certainly doesn't seem to be over. For an investor, what do you do here? I know you've said that you have been basically increasing your downside protection. Does this change anything? Do you increase it more? What should investors be thinking here?
No, you continue to do it gradually because you can't ignore the favorable short-term technicals fueled by liquidity. So it's about taking an opportunity to go up in quality, emphasizing balance sheet strength and cash flow generation. It's about not fading the U.S. too early. You're going to hear lots of people, the same people who have been saying it for the last couple of years, swap out of the U.S. in favor of emerging markets or international exposures. Not yet. The time will come for that. But the time is not now because the U.S. has a lot more robustness and agility than others. And then finally, it is to be very conscious that this incredible period of liquidity have made people take too much liquidity risk. I don't think there's enough appreciation of inherently illiquid asset classes. So have those as your three guiding principles and use market openings to continue to reposition over time.
And then, Mohammed, just quickly, I guess the question that I'm kind of thinking about longer term here is, does today's reaction to this news indicate to you a market that continues to remain strong, kind of the way we saw 2019 finish out, or does it indicate a market that is perhaps a little skittish and investors, we hear so often, looking for excuses to lighten up perhaps because we have seen such a relentless rally around the world over the last 6 months?
If I had told you a few weeks ago that the U.S. would have this sort of airstrike and would take out someone that has the standing and reputation in Iran that Soleimani had, I think both of us would have said the initial pullback is going to be bigger than what it's been. And what has actually transpired tells you that investors have been conditioned over and over again to buy the dip. They've been conditioned not to extrapolate geopolitical or political shocks. And you know what? That has served them extremely well. You've made a ton of money by following that strategy. So you need a major escalation to get people out of this condition. Otherwise, it's going to prevail. And you know what? It has made people money. My worry, and I keep on saying that, is don't ignore the mounting medium-term uncertainty. So yes, keep a claim on the upside, but do it in a selective manner that also acknowledges that we are facing more and more uncertainties that are going to play out in the next 2 years.
Always good to get your thoughts. Allianz Chief Economic Advisor Mohammed El-Erian, thank you so much.
Thank you.
All right, joining us now to discuss more developments on Iran and the oil market is Dan Dicker, founder of the Energy Word Advisory Service at dandicker.com. So Dan, let's just kind of start with your reaction to the move we've seen in oil over the last 24 hours. Is this the kind of move you would have expected given this news, or is it a more muted reaction from the oil market? I guess, especially considering we've seen such a big rally over the last month or so.
Well, Miles, it's both. I couldn't agree with Mohammed more in that there's been such a sang-froid that's been kind of baked into the oil market, as there has been, in all of the markets, as Mr. El-Erian just pointed out. And that kind of, that ability to deal with geopolitical risk and sort of brush it off has become endemic inside of the oil markets. I can remember, in my first couple of years down trading oil in the early 80s, there was a bombing of a very small refinery, Iranian refinery, by some rebels inside the country, which caused the oil markets to lock limit up several days in a row And concurrently now, something like this, which is an enormous geopolitical addition of risk into the marketplace, is really seen as, kind of a lightweight move, another, whatever, $1.50 or what have you. It's a very muted reaction. But this has been the pattern of the oil markets that gets more and more muted as we've moved forward from the Iraqi war, from 2007 and 8 and further on. All of this has, all of these geopolitical events have been taking less and less importance, at least according to the markets, according to traders.
So for somebody that doesn't pay a lot of attention to oil, but knows that the U.S. has become an exporter, that now we are a big producer, and you see these headlines and you think, well, why does it matter? So why does what's happening right now in the geopolitical uncertainty matter to the United States when we just keep hearing about how much energy we're able to produce?
Well, Jen, that's the top line. The top line is, yes, there's a lot of production coming from the United States, but, the United States is still a very big cog in a very large global wheel of, the economy of oil. And in fact, no matter what happens anywhere in the world, if it does affect the oil price, it will ultimately affect the oil price, whether that oil that we're burning is now predominantly coming from North America, not just the United States, but Canada, Mexico, et cetera, and not Middle East sources. I mean, you are part of the global economy in oil, and anything that happens wherever you see it is going to affect oil prices and ultimately, the economy at large.
Dan, explain to me why I'm looking at Aramco on the Yahoo Finance platform. It has a nice bid up. Why hasn't there been profit taking there off this type of news? I get that the oil prices are up, but isn't it riskier to put money to work in Aramco today as compared to yesterday?
Brian, the Aramco is not the one you should be looking at. I mean, that was a, in many ways a fake IPO, a very small float done on a local market with a lot of local investors, and basically 1.5% of the total market. That was this was supposed to be a big event. Turned out to be a very small one. They got the valuation they wanted in sort of some of the fakey kind of bankways that we've seen, kind of extended valuations in the past, in some of our markets. So Aramco's not the place to look, but the places to look are in the U.S. players in terms of how this is affecting oil stocks. Aramco, even though there is more in the end, there might be a little more geopolitical risk in the area. Ultimately, the price of that IPO is the same as for the price of any other oil company. It's about the asset in the ground. And if you see oil prices go up, that's, the stock's going to be worth more. So we're looking at some of the oil companies here in the United States, and we've seen, these kind of muted responses. Oil companies have been, in fact, making up some solid gains over the last several weeks of 2019. This is, of course, added to an extension of that. But, considering, again, the $1.50 or so, the muted reaction onto the oil price, all we're really seeing is an extension of that throughout kind of the sector. Several of the majors are down today,
we're going to jump right now. President Trump is speaking. Thank you so much, Dan Dicker. Here's President Trump in Florida.
Strike that killed the #1 terrorist anywhere in the world, Qasem Soleimani. Soleimani was plotting imminent and sinister attacks on American diplomats and military personnel, but we caught him in the act and terminated him. Under my leadership, America's policy is unambiguous to terrorists who harm or intend to harm any American. We will find you. We will eliminate you. We will always protect our diplomats, service members, all Americans, and our allies. For years, the Islamic Revolutionary Guard Corps and its ruthless Quds Force, under Soleimani's leadership, has targeted, injured, and murdered hundreds of American civilians and servicemen. The recent attacks on U.S. targets in Iraq, including rocket strikes that killed an American and injured 4 American servicemen very badly, as well as a violent assault on our embassy in Baghdad, were carried out at the direction of Soleimani. Soleimani made the death of innocent people his sick passion, contributing to terrorist plots as far away as New Delhi and London, Today, we remember and honor the victims of Soleimani's many atrocities, and we take comfort in knowing that his reign of terror is over. Soleimani has been perpetrating acts of terror to destabilize the Middle East for the last 20 years. What the United States did yesterday should have been done long ago. A lot of lives would have been saved. Just recently, Soleimani led the brutal repression of protesters in Iran, where more than 1,000 innocent civilians were tortured and killed by their own government. We took action last night to stop a war. We did not take action to start a war. I have deep respect for the Iranian people. They are a remarkable people with an incredible heritage and unlimited potential. We do not seek regime change. However, the Iranian regime's aggression in the region, including the use of proxy fighters to destabilize its neighbors, must end, and it must end now. The future belongs to the people of Iran, those who seek peaceful coexistence and cooperation, not the terrorist warlords who plunder their nation to finance bloodshed abroad. The United States has the best military by far anywhere in the world. We have the best intelligence in the world. If Americans anywhere are threatened, we have all of those targets already fully identified, and I am ready and prepared to take whatever action is necessary. And that in particular refers to Iran. Under my leadership, we have destroyed the ISIS territorial caliphate. And recently, American Special Operations Forces killed the terrorist leader known as al-Baghdadi. The world is a safer place without these monsters. America will always pursue the interests of good people, great souls, while seeking peace, harmony, and friendship with all of the nations of the world. Thank you. God bless you. God bless our great military, and God bless the United States of America. Thank you very much. Thank you.
President Trump walking away there after delivering comments on the airstrikes that killed Iranian General Soleimani. The president saying here that he does not seek regime change, did not do this to start a war, but that Soleimani plotted imminent attacks on U.S. diplomats here, saying that Iran's use of proxy fighters to destabilize neighbors must end now. The president also saying that he has deep respect for the Iranian people. He again saying that he did not do this to start a war, but instead to stop a war here. He said that the recent attacks on U.S. targets in Iraq and also the assault on the U.S. embassy in Baghdad were carried out at Soleimani's direction, and that he had also, the U.S. military had killed Soleimani at President Trump's direction. Again, these comments coming from the president. He's speaking in Florida at Mar-a-Lago.
So the Dow come back a little bit.
Did you? I was just going to say, did you watch any market action here?
Not much, but I think forceful tone nonetheless, probably preventing a bigger pullback, a bigger move for higher in the Dow.
And not seeking regime change. So I guess if he is serious about not starting a war, that would sort of be the main thing you'd be after there. So, you know, time will tell.
As we've heard from Jessica Smith, though, in Washington, we're just in a wait and see. Iran has come out and said that they are going to seek a forceful revenge. So it's sort of, there's another move to be made here. It does seem like a lot of calls have been being made in the Middle East, trying to de-escalate this situation. And we do have the president, as you know, coming out and saying he's not seeking regime change here as well. Will that be enough to de-escalate?
Another layer of uncertainty. Just when we relieved a little bit of uncertainty, we have a new fresh layer now.
Coming up, we're going to have more on this developing story. We've got Deutsche Bank's Torsten Slok joining us. We're going to talk about oil and this policy uncertainty. Right now, let's take a look at where European markets closed today. For more on the market's reaction to the killing of Iran's top security and intelligence commander, let's bring in Torsten Slok, Deutsche Bank Securities chief economist. So, Torsten, we just heard from the president down at Florida and Mar-a-Lago. How do you factor in oil and the policy uncertainty given this attack and the fact that Iran has said they're going to, avenge Soleimani's death, and we have U.S. troops heading to the region?
So the difficult thing is, of course, to quantify this risk. But the Fed's model of the U.S. economy would say that if oil prices go up by $10, then U.S. GDP goes down by 0.1. In other words, today's move is relatively small at $1, $2, $3. So in that sense, this is not going to change much to the consensus view of where the economy is going. It's much more the bigger unquantifiable issue in terms of if there is anything that escalates, of course, to a much worse situation, then we would have a whole different spreadsheet out thinking about what the consequences would be.
We were talking to Mohamed El-Erian earlier, and he was saying that investors have been conditioned to, buy the dip, however you want to say it, right? Fed has your back, don't worry about all these risks. And I think we have a chart from you that shows kind of the way the VIX has behaved relative to policy uncertainty, because we all know and we all can agree that policy uncertainty, the light blue line here, has been quite elevated, but it just doesn't really seem to have the kind of juice in terms of moving financial markets that it certainly did. I mean, you look at that chart 20 years ago, it looks like a pretty sensible relationship there.
Exactly. The chart shows very, very interestingly that there used to be a very close correlation between policy uncertainty. Policy uncertainty is a very sort of arm-wavy concept, but it basically means something that can create policy changes. And as you can see in the figure, that there was a very tight correlation up until after the financial crisis and the Fed began providing much more liquidity, doing QE. And more recently, we had a lot, of course, also, as Mohamed El-Erian also mentioned, a lot of liquidity being added with repos and the Fed buying T-bills. And that has basically decoupled this relationship between markets, and in this case, the purple line, VIX, are just no longer worrying about even something as serious as this, which is somewhat stunning on its own, because this is something that is a fairly serious event and could have the potential to escalate to something more important. And still, markets are shrugging it off just with a small bleep here and really not paying much attention to this.
Well, it's interesting because I guess we're coming up on 5 years now since Mohamed's book, Only Game in Town, came out, basically warning that we shouldn't only care about central banks. And yet, in 5 years, it feels as if not only has nothing changed, but maybe the reliance or the signal that investors take from central banks is even more kind of tightly wound than it was a few years back.
Absolutely, because in 2018, you basically saw the Fed raising rates and stocks really did very poorly. You also saw credit markets, IG, high yield, did very poorly. There were really very few risk assets that did very well in 2018 when the Fed was tightening. Then at the beginning of 2019, the Fed started easing. And what happened? You basically had one of the best years for the stock market in a long, long time. Credit spreads have done very well. IG, high yield, mortgages, loans. Everything was trading incredibly well last year. And it coincided with exactly the thesis that the Fed was just basically having everyone's back and making sure that markets got a lot of support because of all these operations that they've been doing. Also, the ECB, a lot of QE also been very helpful. But a dovish central bank, dovish Fed, dovish ECB has turned out to be dominating almost everything else in fundamentals, even geopolitical risks as we're seeing today.
From a pure economic standpoint, what you're seeing in the U.S. economy, does it justify where the market, how fast it has come?
See, as Miles mentioned earlier, the ISM today is somewhat intriguing because what we spent a lot of time talking about last year was the trade war and how that was weighing, in particular on capex on the manufacturing sector. The manufacturing sector makes up 10% of GDP and 10% of employment. So in some sense, the remaining part, 90%, which is services, is of course the most important. But what has been most striking is that the manufacturing sector in the data today actually continues to not do very well. And still, the S&P 500 just basically says, well, that doesn't really matter that much. This is just something that will go away. This is something that will improve eventually. And we just haven't really seen that improvement. So we're a little bit worried still that some of these issues about uncertainty weighing on manufacturing, that could be first trade war uncertainty, now election uncertainty and geopolitical uncertainty, that if this doesn't go away, it could begin to drag down the economy more broadly.
When's that turning point? When do investors say, hey, you know what, we should care about this ISM data?
So the answer to that is that once companies begin to see a turnaround in capex spending, in actual hard dollar spending, there's a lot of sentiment surveys. Some of them are still going down, some are rebounding a little bit. The CFO survey from Duke is basically still looking a little bit to the upside. Others are looking more to the downside. But the short answer to your question is, when companies begin to open the drawers and say, now we want to do CapEx planning, and now we do a lot of spending, then we do believe that we will see a turnaround. And we have just not seen that yet. I think that's also why the minutes that came out here at 2 p.m. also hinted at there's still more downside risks, because this uncertainty, including now also geopolitical uncertainty, is still hanging as a cloud over the outlook. It's no longer just trade uncertainty and election uncertainty. We added a third cloud from geopolitical uncertainty that is beginning to ask some questions about, is the economic outlook really so strong?
I was going to ask you about the minutes just because we've been paying so much attention to the news of the day. Maybe people didn't go through them as closely as they usually do. So what else stood out to you? I mean, a lot of talk about inflation in there. Is there a bigger takeaway that we need to be paying attention to?
Yeah, the Fed is at the moment going through a transition towards potentially changing to average inflation targeting. And the reason why that's important is that if you have a target of 2%, then anything above that will be a problem, because then you need to do something to try to get it down. If you have a target of average 2%, then you're opening the door to saying maybe we can allow ourselves to be over for a while. That means that the Fed today continue the signaling of saying maybe we should keep rates low for a little bit longer to make sure that inflation on average is 2%. So maybe even if we overshoot eventually, then we're not going to have a problem. So the short answer to your question is that there's a pretty clear communication, more and more coming from the Fed, saying that maybe we can keep rates lower for longer because inflation has just not been a problem for the last 10 years. And even if it does become a problem, we are now telling you that that is not really anything that we're going to worry much about, and therefore maybe we can keep rates lower for longer, which of course is very bullish for equities and for the stock market more
But
generally.
thinking about rates and the rate path for the Fed, I mean, we've seen the market react so positively to actually their actions in the repo market. I mean, are we learning something here about which channel of policy transmission is more important for the Fed? Could we see a scenario in the future where the Fed says we're not going to cut rates, but we're going to do QE to fight off a recession instead of kind of going the ECB route of just going negative, negative, negative?
Yeah, and as your conversation with Mohamed Arian before, the conclusion is that a very important reason why stocks have done so well is because of liquidity. With the repo problems here in September, a lot more liquidity was added in November and December in particular, and there you saw stocks go up quite dramatically. So therefore now we have the 1st of January and 31st of December behind us. So now you begin to worry a little bit about, well, maybe now we're seeing less liquidity, and therefore maybe we will begin to see a little bit less upward push on equities, simply because the Fed is going to slow a little bit down a lot of the support that they provided in the last few months, because the repo problem turned out to be basically a Y2K problem and no longer as dramatic looking ahead.
And then I guess related to that, certainly you've had a lot of clients ask you about the repo market and what all is going on. I mean, the Fed has tried to communicate that it's not QE, but I don't really come across anybody who believes that it's not some form of QE, no matter what Jay Powell says.
I know if you do an embarrassingly simple chart of saying how much did the Fed balance sheet grow and how much did the S&P 500 grow, you could see that for every 1% increase in the Fed balance sheet, you've seen a 1% increase in the S&P 500, basically since October when the Fed began to grow the balance sheet. So would that continue? Well, if the Fed is now about to slow down at least the increase in the balance sheet, then that also means that at least from that should be less support to equities. But the long answer to your question is QE was intended to buy 10-year government bonds. So the difference today is that now the Fed is not buying 10-year government bonds, they're buying 4-week T-bills. Yeah. So you do ask the question, well, why would that have an impact on the economy? Because someone needs to sell you the 4-week T-bill and therefore get some cash in return, and they look at the cash and say, what should we do? And if they do anything going out further the credit spectrum, risk in terms of buying equities or IG, or even buying just duration in treasuries, that will also have some supportive effects. So there are a lot of domino bricks that get affected when the Fed is providing liquidity, no matter where on the yield curve it is happening. So therefore, it is really a version of QE or QE4 because it does provide some liquidity boost, which ultimately, money is fungible, could end up in more risky assets.
Thanks for breaking it all down for us, and Happy New Year. Torsten Slok, Deutsche Bank Securities Chief Economist.
All right, coming up here in the final round, we will have more. Plus, we'll break down big moves in the debt markets with PIMCO's Sonali Peer. That's coming up right after the break. But first, take a look at some of today's trending tickers here on Yahoo Finance. around here on Yahoo Finance. Miles Little with you in New York. I am joined, as always, and once again, by my co-hosts, Jen Rogers, and joined by Yahoo Finance editor-at-large Brian Sozzi on this Friday. We got 27 minutes to go in the trading session. Let's take a look where we stand right now. All three majors are lower, off the lows of the session, but we were down about 40 basis points, kind of at the best levels of the session, kind of losing some ground here as we head towards the closing bell. For more on today's market action, let's go to Scott Gamm. He is live on the floor of the New York Stock Exchange. Scott.
Well, Miles, the attack in Baghdad, of course, hitting the stock market pretty hard. This is the first down day for the market, the first noticeable down day really since early December, but we're also seeing some particular weakness out of the airline stocks, largely because oil prices are spiking today. We've got West Texas Intermediate crossing $63 a barrel today, which is significant, the highest level since September. Now, of course, oil had a short-term pop in September when we saw those airstrikes in Saudi Arabia, but it was a very short-lived rally in oil prices. They soon dipped much lower. And by the way, oil is still below its 2019 high of $66 a barrel, which was a level we saw back in April. So the point is, even with these geopolitical tensions, you're not seeing that big of a pop in oil prices, but nonetheless, you are seeing pressure in the airline stocks because theoretically, higher oil prices could ding the margins for these airlines, but you'd really have to see a sustained increase in oil prices for there to be that much of an impact on the airlines. The action we're seeing today is largely just knee-jerk, but also when you have geopolitical tensions, investors start to wonder, will people travel as much? Will people still fly? That's always a concern when you have threats of wars and things like that. Now, again, it's kind of too early to draw those conclusions, but in these types of events, investors tend to shoot first and aim later, Miles.
All right, Scott Gamm, we'll talk to you after the closing bell. All right, well, we've talked about the stock market outlook for 2020 quite a bit here on the program, but what about the credit markets? Joining us now to discuss all things credit is Sonali Peer, Executive Vice President and Portfolio Manager over at PIMCO. So, Sonali, let's just start with your overall outlook on the credit market right now. I think we've gotten very excited about everything going up kind of last year. When you look at the landscape for 2020, what do you guys see?
Yeah, so as a result of valuations starting to look very full, as everything has gone up, technicals still, though, are supporting markets. So generically, we're cautious on corporate credit when we talk about the betas. However, we're looking under the hood and finding a lot of opportunity. There's bifurcation in markets. There's different sectors that are falling in and out of favor. And so we're finding a lot of opportunities.
I have to say, of all the notes that I read today, and it's really down day today, I feel yours is very optimistic. You said the rising stars here. How are we having these? You have pockets of opportunities. You talk about seeing more rising stars so late in the cycle. I would have thought that you would have been much more dour. Why are we seeing this, more than 10 years out?
That's a great point, because I think in the last cycle we did see a lot of late cycle behaviors that were pretty aggressive. I think at this stage, given the growth of that BBB market, we're seeing companies actually show discipline. They're reducing share repurchases, executing on asset sales, and really showing that discipline to bring leverage a bit more in line with their rating, and therefore able to weather the storm when we get closer to end cycle.
Is this the type of backdrop where you wade into the junk debt market?
I think this is, again, like we said, we're pretty cautious on generic corporate betas. That said, I think when you do the work with the credit research analyst team that we have here at PIMCO, we're finding pockets of opportunity, less so in, say, the generic, call it CCC part of the market, much more so on sectors that we tend to pay favor, such as like housing and financials, than just, say, reaching for yield and the more junk-related sectors.
Leverage loans is an area that a year and a half ago we all kind of became experts in, and then in 2019 it sort of just went away. Is that still an area? Jay Powell, he was talking about it during his press conferences last year. Is that still an area that concerns you when you look at some of the underwriting behaviors there, and what what creditors have been allowing companies to get away with?
So it is an area of concern, but I think first and foremost it's important to distinguish that it's not a systemic concern. We're not concerned about it leading to a crisis. However, it is an area of concern within credit from the perspective of looser lending standards, as you referenced, more loan-only capital structures, more asset-light sectors getting access to financial markets on a syndicated basis. So from that perspective, we're certainly cautious, but we're not calling for it to disturb broader markets.
And then just from like a broader structural perspective, we've heard so much about direct lending and kind of these big pools of private capital coming in to the corporate credit markets and cutting out traditional kind of market processes. Is that still happening, and is that changing kind of, I guess you could say, the shape of the credit market, however you'd wanted to kind of describe that?
Certainly, and I think it also affects sort of your moral hazards and your potential down the road. But I think we're starting to see some concern around a lot of the private credit, especially as the loan market has banked a lot of smaller and middle market size companies. And if they can't access private credit, then kind of where do they go?
Your favorite sector, real quick, financials.
Yes.
Why?
We've seen financial ratios, credit metrics improve tremendously since the crisis, many of which are actually lower, have less leverage than they did pre-crisis, meaning as a result of regulation, more supply has come on board, and as a result, we find them to be more compelling in terms of valuations versus industrials.
All right, Sonali Peer, Portfolio Manager over at PIMCO. Thanks so much for joining us. Happy New Year. We'll talk to you soon.
Coming up, we dig deeper into the ramifications of the move to take out Iran's top military general. We've got Stratfor's Middle East expert. How severe could Iran's retaliation be against the U.S. and its interests? Right now, take a look at where defense stocks are trading into the bell. Multiple reports indicate that the U.S. is sending around 3,000 soldiers to the Middle East following the U.S. killing of Iranian General Soleimani. Joining us to discuss what this could mean moving forward is Stratfor's Middle East analyst, Emily Hawthorne. So, Emily, from where you sit right now, and you're looking at these reports of the U.S. sending in more troops, we have Iran coming out saying that they are going to have forceful revenge on this. The president, though, says this is not an act of war, and he's not looking for a regime change. So, what is this?
So the U.S. is trying to escalate with Iran in order to push the confrontation between the two countries down a de-escalation pathway. It sounds counterintuitive, and it kind of is, but that is the U.S. strategy at this point. And the big uncertainty is, and has been, frankly, for the past couple of years, with the United States maximum pressure campaign against Iran, the uncertainty is, does Iran react in a way that actually moves down that de-escalation pathway? And certainly in the near term, we don't anticipate that Iran is going to sort of take this sitting down. They are going to retaliate, and they have said very clearly that they're going to retaliate against U.S. forces and assets in the Middle East region in particular.
Emily, I think everyone on Twitter becomes a geopolitical expert as soon as these sorts of things happen. We get very inflammatory things like World War III trending immediately afterwards. Certainly makes your job more difficult in terms of saying what is actually going to happen, what is actually likely here. So I guess just over the next month, what is the most likely outcome that you see as you mentioned, this kind of counterintuitive strategy is being pursued, but it is at least the strategy, as it appears, that the U.S. is kind of going with, and how do you feel like things are going to unfold in the next month?
Yeah, I think that's a great question. We have to watch primarily the place in which this conflict has already heated up. The conflict between the U.S. and Iran has already heated up to a significant degree. Iraq, where this strike on Quds Force commander Qasem Soleimani took place. Iran has many allied militia forces in Iraq. The U.S. has many forces and assets and buildings, companies, commercial targets in Iraq that will be potentially targeted by Iranian and Iran-allied forces in Iraq. So I think primarily we have to look at these sort of proxy theaters in the region that have Iranian forces or Iran-allied forces and that also have U.S. targets. Those are the primary places to watch. This does not mean that we are moving towards a major conflict with Iran. We're not at that point. We really have to watch the back and forth between the U.S. and Iran to see how each side responds to the other moving forward. And right now the ball is in Iran's court to decide how big and what to target. And I really think Iraq is the place to watch first.
What do you think Iran could target here?
I think it's very likely that Iraq is looking at U.S. military targets. The targeting of Qasem Soleimani is equivalent to really if a top-level general in the U.S. was killed at Iranian hands. So this is a really significant loss for Iran. So they are likely looking for some sort of U.S. military target in order to drive home a sort of message to the U.S. and sort of respond to this humiliation for the Iranian side. But I think we should also be looking at potential maritime targets in the Persian Gulf. Iran has been known to attack maritime targets that are allied with the U.S. or with other sort of Persian Gulf actors, Arab Gulf states. We should be looking for Iranian potential attacks on maritime targets as well.
Emily Hawthorne, Stratfor's Middle East and North Africa analyst, thank you so much.
Thank you.
All right, coming up here on the final round is the time to pull away from risky assets and move into safe havens. Direxion's Sylvia Jablonski joins us to talk about gold and defense names. But first, let's take a look at some of the Dow leaders right now with 15 minutes to go in the session. volatility to start the year in the wake of the U.S. airstrike at Baghdad's international airport earlier today. The Dow off as many as 370 points this morning. Does this mean we've got an opportunity for buyers? Maybe. Market saying about halfway or so. Direxion's managing director Sylvia Jablonski joins us now to discuss. So I guess, Sylvia, when you look at the market reaction today, we've seen I wouldn't say it's a really firm reaction from investors to buy the dip, but there certainly kind of hasn't been as much fear as that initial opening would have maybe indicated.
Yeah, right. So we've seen a lot of interesting activity today, actually, and we see activity that's very much short-term and high-paced activity because we have 3 beta funds. So it's always interesting to look at that and think about what investors are doing. So we saw really heavy flows into aerospace and defense, 200% average 20-day volume there. We saw a lot of flows into gold-related funds across the board, Directions and every other ETF company's funds. We saw a whole lot of flow into basically the safe haven assets. And then gas-related, oil and gas-related ETFs took a pop today too. And I think that that's just off of this recent attack news. And I would look at that as a short-term trade, though. That wouldn't be my 2020 outlook. If I had come here before we got this news the other day, I'd be talking all about tech, China, emerging markets, developed markets, places to go. But I think in the short term, there's definitely some opportunity there.
It's interesting. I feel like you're the third guest kind of to say that investors are a little bit conditioned, as Miles said, to buy the dips, but you're also saying people can make these moves just sort of knee-jerk. The textbook reaction is still kind of in play, but how long will this last, even just on the textbook? Let's say we had the attack on the oil facilities a few months ago, using that as a parallel, even though it's not an exact parallel. Would we expect to see defense and oil and some safety trades still having inflows next week?
I think it just depends on what happens, what the retaliation is. If it sort of de-escalates and we go back to business as usual, which looks to be pretty unlikely right now, then I would expect the oil trade not to be the place to look to put your money. Gold, I think, just because we expect market volatility this year, it's probably a smart trade anyway, or it's a trade to consider adding to a portfolio to de-risk a little bit or diversify. The oil thing, I think, would be short term, just because we do have so much supply in the market. We're expecting to have an additional 3 million barrels a month that we don't need. We have sort of billions in overflow of stock for oil. So I do think it's just short term to this. And aerospace and defense, either way, we're supposedly investing in infrastructure and military, so that might play out in the long term. But the buy on the dip stuff, the tech story is still running. All of these beaten up areas like emerging markets that are poised to grow this year are interesting places to look. And, China. So we had a trade war with China, and all of a sudden we have a real war, or a potential for a real war. So I think, the yen shows some strength, and I think that, the undervaluation there and the potential there for 2020 is on investors' minds as well.
What's the play for rising geopolitical risk looking out over the next decade? Certainly this decade has started off with, I think, China, higher geopolitical risk there as well, even with phase 1 off the table. Also Iran, obviously. How do you position for that?
Yeah, so I think you add some defense into some safety haven type of investments into your portfolio. And I think gold is a good one. And I actually think aerospace and defense, because we will be investing in those areas regardless of what happens with this particular story. But, looking around China, even without the trade war, the setup there to me looks pretty compelling, or at least interesting. You have, supportive PBOC injecting liquidity into the markets. You have a growing middle class. They're, poised to be the first largest economy by 2030. They're the second now, 33% of global growth, strong retail community, massive investments in AI, robotics, tech. So China tech, China consumer, there's something there that will play out in the next decade.
All right, Sylvia Jablonski with Direction. Thanks so much for joining us.
Thank you.
Happy New Year to you. Brian Sazi, thanks for joining us as well. Have a great weekend.
Have a great weekend.
Here on Monday.
Coming up, we've got the closing bell on Wall Street just about 8 minutes away. First, so we're going to get technical. Jared Blickery's going to be here. We're checking on gold, oil, and bonds. We're back in 2 minutes.
All right, 5.5 minutes to go in today's session. Jared Blicker joins me now. Jared, let's take a look at the market right now. We are a little bit off the lows of this session, but not quite getting that big bounce that I think I tweeted out earlier today. We'd have a green close. Not going to happen here. Not a ton of upward momentum on the market today.
Yeah, stocks go up, maybe not this afternoon. We got the Dow down 215 points, about 0.75%. S&P 500 down a little bit yet less. And here's an intraday price action. Gap down, not a lot. I mean, I think the most we've been down today was shy of 1 percentage point in the S&P 500. Haven't even had a 1% down day in that market since October 8th. So that's nearly 3 months. This is really nothing in the grand scheme of things, but then we had that negative ISM print, at least showing contraction, had some more rumors throughout the day. So being down 0.6% is really not that bad right now.
All right, let's take a look at the VIX right now. We talked about this a lot last week. We saw sort of a mini sell-off, and I think you said, sort of jokingly, but also seriously, if you blinked and you kind of missed that bottom, that might have been it. Yeah. What are you seeing in today's VIX candle that suggests whether this market could get going or whether that trend channel you've been looking at it is kind of holding here?
Yes, that's great. I think this is the key to understanding what is next for equities. Right now, it's kind of all clear. The other day, we were looking at this spot right here, those two candles. So this is in relation to this downward sloping trend line that we've been watching for some time now, all the way back to this spike in early December, which was a nice by itself. Today, we finally got a spike up to the line, came off of it. Looks like we have a temporary bottom in equities. Now, the caveat is this is a consolidation, and if we get a close at some day in the future, someday next week above this, I think that's going to signal that there are some longer-term implications for these geopolitical risks that we're facing today.
And then just look a little bit at the 10-year, because obviously where treasuries go, stocks have tended to follow to some extent at various points throughout the year. Yeah. About a 10 basis point move here on the 10-year today.
Yeah, that's huge. And also the yield curve has contracted by about 10 basis points from the high yesterday. So 36 basis points in the 2s, 10s, all the way down to 28 in the 2s, 10s. Again, this is another consolidation we're watching right here. And we are at the very bottom of this consolidation, the lower end of this trend channel here. So, if yields are going to break through this, I think it would be at the same time as the VIX breaks upward. That would signal that there's more to worry about. If we head up, the next resistance level is right here around 95, 96. That's 1.95, 1.96.
All right, Jared Blicker, we'll see you at the desk in just a minute. Coming up here on the final round, we'll have the closing bell on Wall Street, plus a former CIA analyst and member of the National Security Council, Ken Pollack, will weigh in as the White House goes all in on Iran. We're back with that right after this.
Welcome back to the final round on Yahoo Finance. I'm Jen Rogers with Miles Udlin and Jared Blickery, and we're just about 30 seconds away from markets closing here. We're weakening up here a little bit on the tape, but again, we had kind of expected a pretty big reaction following the airstrikes, killing Iranian commander Soleimani. Looking at the closing bell there, live pictures of the New York Stock Exchange and the NASDAQ market site. We're going to end here with two sectors in the green, real estate and probably utilities. On the downside, we have materials off more than 1%, consumer discretionary, XLY, off just about 0.9%. If you go into the S&P 500, a lot of energy names here are the biggest performers, but above them, L Brands, doing pretty well, and Lamb Weston Holdings, a frozen potato company, is the number one performer in the S&P today. So we've been talking about potatoes, up almost 12%. Other than that, though, your winners are going to be
big potato guy.
I love potatoes.
Baked,
Love them.
mashed.
Baked, mashed, fried. Hess Corporation, Occidental Petroleum. We got a lot of energy names here that are higher. Also, Lockheed Martin and Northrop Grumman. Northrop up more than 5%, and Lockheed Martin up some 3.5%.
Yeah, Lockheed's, that's a record high. And Northrop is right by a record high. So I said earlier, the defense names have really done well since President Trump has been in office because he's not a fiscal conservative. He spends a lot of money on defense. And while that's great for these companies, not necessarily for the way some people perceive the fiscal situation of the United States, like Chairman Powell, it's out there. But what a week. I mean, we changed decades and we're ending this way.
Yeah.
It's crazy. The NASDAQ is for the week, it's up 16 basis points. Other indices just down nominally. I think if you would have taken a look back at the beginning of the week or last Friday or whatever week this is right now, didn't really see this coming.
Boeing shares up just a little bit today. That stock not too far away, Jared, from kind of its make or break level we've talked about a lot.
320.
332 on the close today, about $12 above a very important level for that stock.
Yeah, but the big winners in sectors are energy and industrials this week, as you would imagine, because just about everything else was selling off today. To the downside, materials, cyclicals getting smashed. The 10-year T-note being down 9 basis points and the yield curve really contracting by a significant amount today alone. It really puts a hurt on that cyclical and value trade. But as I pointed out when I was at the touchscreen, we're at a potential reversal point, not only in the VIX, but also in rates. So got to check out what happens next week.
You're everywhere. Let's get the very latest on the U.S. airstrike that killed Iranian General Qasem Soleimani. It has sharply divided Congress. President Trump just spoke this afternoon, a short time ago, to reporters about the strike. And Yahoo Finance's Jessica Smith is live in Washington, D.C. with the very latest on this developing story. Jess.
Yeah, President Trump did just speak to reporters a little bit ago, and he said that Soleimani's reign of terror is over. He said that there were active plots, imminent attacks, he said, on U.S. diplomats and military personnel. They were acting to stop that. He says that the U.S. acted not to start a war, but to stop one. Let's watch.
I have deep respect for the Iranian people. They are a remarkable people with an incredible heritage and unlimited potential. We do not seek regime change. However, the Iranian regime's aggression in the region, including the use of proxy fighters to destabilize its neighbors, must end, and it must end now.
According to multiple reports, the U.S. is sending about 3,000 additional troops to the Middle East in light of this situation, and it has really divided Congress along party lines. Most Republicans seem to be backing the president, praising this move, while Democratic lawmakers are questioning the decision-making process. They are wondering why they were not involved, and they're worried about the consequences of this move. Iran has vowed to retaliate. Now, lawmakers are pushing for a briefing from the administration. Majority Leader Mitch McConnell said on the Senate floor that he is working to get a classified briefing for senators together sometime next week. Jen and Miles.
Jessica Smith in D.C. with the very latest. And for more on today's market action in response to the strike, let's go to Scott Gam on the floor of the New York Stock Exchange. Scott.
Hey, Jen. Yes, the first noticeable down day, not just of 2020, but really since early December, right? The market has just been on a tear. But of course, here we are with stocks down almost 1%, the Dow down 240 points. Not many gainers today in the Dow. In fact, just United Technologies. That was the only positive close for the Dow today, the only positive closing component. Walgreens was largely unchanged. Boeing and Nike were two Dow components that were down by the least amount. When it comes to the laggards in the Dow, the worst performing Dow stocks, those were Dow Inc., Cisco, Caterpillar, and JP Morgan. Now, it's interesting, Apple, also a Dow component, was down, rather significantly today, down about 0.8%. The analysts at RBC raised their price target, though, on the stock to $335 from $295. They say that the current version of the iPhone is getting more mentions on social media than past versions, so people are talking about the iPhone more. Now, yesterday, Apple's stock closed above $300 a share. It was a record high. Now, if you're RBC yesterday and your price target's at $295 and the stock goes to over $300, you kind of have to raise your price target. But just given all the geopolitical tensions, the momentum from RBC was not enough to lift the stock, right? Just because the broader market got hit. Right now, Apple shares are trading just under $300 at about $298 a share. Jen.
Scott Gannon, we'll check in with you later in the show.
All right, overnight, President Trump ordered a drone strike that killed Iranian General Soleimani, and multiple reports indicate the U.S. is sending around 3,000 soldiers to the Middle East following this strike. Joining us now to discuss is Ken Pollack, former Persian Gulf military analyst at the CIA and a resident scholar at AEI. So, Ken, I think everyone right now, at least on the U.S. side, is wondering what the Iranian response will be. In your estimation, what are the options here? What kind of should the U.S. be bracing for in that part of the world?
Sure. And I think the truth is that the Iranians are probably wondering what they're going to do. I doubt that they've actually come to a decision. As meaningful as you guys reported that the Iranians have announced that they plan to retaliate. But what was really important about what they said was that they're going to do so at a time and place of their choosing, right? That's very important. One of the things that we were all wondering was, were they just going to kind of spasm in anger at the American strike and just lob a volley of missiles at American bases inside of Iraq? That doesn't seem like it's necessarily going to happen. Still could, but seems less likely after the Iranian statements. Certainly, Iran's allies and proxies in Iraq might do various things, either at Tehran's behest or, frankly, on their own initiative. We could see attacks on the U.S. Embassy. We could see them rocketing or launching mortars against U.S. facilities in Iraq. All that is absolutely possible, both in the near and longer term. But I think the bigger issues are, how does the regime respond at the time and place of its own choosing? Right? The regime is not stupid. What we've seen is they understand America's military capabilities. They have great respect for America's military capabilities. And so what they try to do is they try to hit us asymmetrically. They are, frankly, much better than we are at terrorism. They're very good at insurgency, right? They're developing a cyber capability. When I heard that the regime said that they were going to respond in a time and place of their own choosing, that's what started to go off in my mind, was at some point in the weeks or months ahead, they're going to hit us. And they will hit us in a way that they believe will be painful for us, will play to their advantages and our disadvantages. And worth keeping in mind, we just killed one of the most important men in Iran, arguably the second most important man in Iran. Right? The Iranians might look at that and say, you kill one of our senior leaders, we're going to kill one of your senior leaders. That would certainly be something that I think that they're thinking about. And it's the kind of thing that we can't be sure of, but we need to be prepared for.
So you've written that Tehran does not seem to want a war with the U.S. We heard from President Trump a short time ago speaking in Florida saying that he does not want to start a war. He said this is to end a war. What did you think of the president's comments? He also directly said he wasn't looking for regime change here. Do you think he's trying to de-escalate with the comments he's making this afternoon?
I think he is, but this is one of the problems that we have with President Trump when it comes to diplomacy, is that there's a term, he endlessly mirror images, right? He speaks to foreign leaders as he would expect to be spoken to in a language that makes sense to him. The problem is, Foreign leaders have no clue what he's talking about. They don't see things the way that he does. They do not think the way that he does. So the idea that you're going to kill Qasem Soleimani, as I said, one of the most important leaders in Iran, maybe even the second most important leader in Iran, and then claim that this is de-escalatory, that this is trying to avoid a war, no way. There's no Iranian leader who's going to look at it that way. The question in their minds is, ultimately, what is Trump trying to do? And I think that Trump's rhetoric and what he's said over the past 6 or 8 months in response to the different Iranian attacks in the Persian Gulf, all of that has convinced the Iranians that he doesn't want a war with them, which of course is very, very dangerous. They recognize Trump as very unpredictable. I mean, this strike, talk about unpredictable. The Iranians know that both Bush and Obama had opportunities to do things like this, and they passed it up. Trump does it. That makes him very unpredictable. They're wary of that unpredictability, but they also seem to believe that Trump means it when he says he doesn't want a war. That makes him look weak to them. And so that, I think, both of those things are going to be very important elements of their thinking about how to respond, both Trump's unpredictability and his desire to avoid a war with them.
Hi, Jared Blickery here. Just kind of handicapping the potential retaliatory responses. You mentioned cyber attacks. I'm just wondering what kind of potential assets are we looking at here? Could it be electricity grids, infrastructure, or would it be corporations and commonly used devices, mobile apps? What exactly are you thinking there?
It could be anything. Right? I mean, they could turn off the power in a major city. They could go after a major company or industry. We don't know. I certainly don't. You certainly don't. Maybe the folks at the National Security Agency do know, but we certainly don't have any idea of where the Iranians have been able to penetrate our cyber systems. Right? Where have they already staked out positions? What kind of malware have they got available to them? How might they go about using it? They also might mount what we call kinetic attacks against any of these different facilities. Right? They could go again after Gulf oil facilities. We shouldn't rule any of that out, especially because that has the benefit of further driving a wedge between the U.S. and our allies in the Arab world, something that's very beneficial to Iran. So again, as we think about the Iranians looking at this and saying, we're looking to hit the Americans at a time and place of our choosing. We want to do it in a way that plays to our advantages, not to America's advantages. You have to start asking this question of where are our weaknesses? Where has Iran found success in hitting us and hitting us hard, right? Terrorism, leadership targets, trying to drive a wedge, as I said, between us and the Arab states by going after Persian Gulf oil exports, conceivably cyber, but there they've had greater success going after our allies, right? Going after Aramco in Saudi Arabia. These are the places where they've typically had success. They may open up a new front. They may have a new capability that we don't understand at this point in time, but so far, those are the areas where they've had demonstrated success, and obviously those are the places that you want to look to first for an Iranian response.
All right, Ken Pollack, really appreciate the time. We'll talk to you soon. Have a happy new year.
Look forward to it. Thanks. You too. Bye-bye.
Coming up, President Trump's strike on Iran's top military leader may be the defining moment of his presidency. Rick Newman weighs in after the break. President Donald Trump is defending a U.S. airstrike that killed Iranian General Qasem Soleimani, telling reporters earlier that the action was meant to stop a war, not start one. Rick Newman joining us now to talk about what Trump's decision, the impact it could have on geopolitics. Right now, we have multiple reports coming out that the U.S. is going to deploy around 3,000 troops to the Middle East. So what are your thoughts on the latest developments here?
I think this is going to color the last year of the Trump presidency and possibly be the most consequential development of the entire Trump presidency. I mean, for all the controversy we've been through, Trump has not really confronted a crisis. And this could evolve into a crisis. I'm not sure it's a crisis just yet, but we clearly had rising hostilities in Iraq before this strike on Soleimani, and this is probably just going to get worse in the Middle East. Trump, of course, said he wanted to get U.S. troops out of the Middle East. He is an isolationist, and he's going in the opposite direction right now. So this is not the final word. What happened with this strike we're talking about today, this is nowhere near the end of the story in the 2020 election cycle. That's from the U.S. perspective. And I think there are going to be many iterations of this story over the next 10 months leading up to the 2020 elections. I have no idea how this is going to look for Trump on the eve of the election in November, but I think it possibly could look quite different than it does right now.
And I guess just kind of thinking about an angle we haven't hit yet, which is sort of where the Democratic candidates fall in this, just in the sense that, as we've talked about a number of times, like foreign policy has really not been a part of that conversation at all. And now we're approaching, actually getting down to brass tacks here. Votes are going to be cast in about 5 weeks here. Yeah. So does that change the shape of the domestic political discussion in a way that really no one had been anticipating just a couple of weeks ago?
I think it totally depends what happens. And I think we should not assume that whatever this Iranian reprisal is going to be, and by the way, I think it's quite possibly going to be more than one event. It could be multiple events. I wouldn't assume it's just going to happen soon. I mean, there could be nothing that happens for months. It's possible Iran could hold off until October and pull an October surprise on Trump right before the U.S. election. But to go back to your question, I think Joe Biden is a legitimate foreign policy authority. I mean, he was chairman of the Senate Foreign Relations Committee. He's been on these topics for 40 years. He knows most world leaders. So I think he has credibility on this. I think a lot of the other Democrats don't really have credibility. And you actually saw Elizabeth Warren today refining her message to make it appear that she's a little less approving of the strike, as if that's the message she needs to give to the far left of the Democratic Party. Right now, I mean, you can make a case that this was a proper response to what may have been a threat that the Pentagon says was a threat. And this guy has American blood on his hands. I mean, the Pentagon says he is responsible for at least 600 U.S. service members dying because they were killed by roadside bombs manufactured by Iran or by Iranian-backed militias in Iraq. So, I mean, he's a legitimate target. But was this the right way to deal with it or not? I just think we're not going to know for weeks or possibly months.
So how does this affect the score for today?
Well, we did a Trumpometer segment yesterday when the big story, without you, Jen, sorry, we had to. The big story of the week at that point was stocks at a new record, and that's overcome by events. Now stocks obviously down. I am giving Trump a week on the Trumpometer this week, and that's mainly because it's not clear this was well thought out. It's not clear there's a strategic plan here, and Trump has shown kind of a lack of strategic acumen before. I mean, for example, withdrawing from Syria without getting anything at all in exchange for the territory he turned over to Russia. His negotiations with North Korea have just basically gone in a circle and ended up back where they started. So is there a strategic plan here or not? I'm concerned there is not. I'm concerned that Trump and his advisors at the White House have not thought through the consequences, which are going to be negative and potentially severely negative. But they could turn the other way. I mean, it's possible that Iran, which has a struggling economy, is hurting from the sanctions that Trump has imposed on them, that maybe they will, in a way, say, we really don't want to rest with this tiger we've awakened, and in a way back down.
Rick Newman, week. Not you, the Trumpometer score. Have a great weekend.
Thanks, guys.
All right, coming up here on the final round, we'll have the sector watch, but first take a look at where retail traded during Friday's session.
Let's take a look right now at the sector winners and losers. Sectors in the green include the technology sector. That one's in the red. Tech down over 1%, weighed down by Broadcom, Qorvo. Also the materials sector down over 1.5%, weighed down by Eastman Chemical, Mosaic, and Lind. Some sectors in the green, well, check out the real estate sector, up over 0.7%, led by Welltower, Duke Realty, and Realty Income. Coming up, what we're watching next week in the markets. It's the look ahead. We're back right after this. And now here's Miles Udland with a look ahead at what will be making headlines next week.
All right, well, the outlooks for 2020 that we heard in 2019 were pretty bland. You know, stocks are going to go up a bit, but investors need to be prepared for more volatility. It's pretty forgettable stuff, and forgettable because it would end up eventually being right just for a reason that no one expected. And so enter Friday's news. On Friday, we got our first sell-off of 2020. The decline followed the death of Iranian military leader Qasem Soleimani. Rising tensions in the Middle East wasn't exactly a popular pick for the cause of volatility in the stock market this year, but here we were, watching markets decline and oil rise after the death of someone that precisely no one in financial markets had been thinking about just a few days ago. Now, some strategists noted Friday that geopolitically motivated sell-offs don't tend to last too long. Others said this will be a game changer for global politics in the new year. And both of these views might be right, but both of them might end up being wrong. But after Friday, I think the only thing investors are left knowing for sure is that we have a new risk to monitor in this market, something we knew would eventually happen anyway, which I guess means investors didn't really learn anything, at least not quite yet. Now, turning to the calendar for next week, the biggest highlight will be Friday's December jobs report. That's expected to show another solid month for the U.S. labor market. Economists expect non-farm payrolls grew by 158,000 in December. The unemployment rate is set to hold steady at 3.5%. Wages should rise 3.1%. That'd be the same as we saw in November. Other notable economic data set for release next week include 2 readings on the service sector of the economy and the weekly report on initial jobless claims. And on the earnings side, Walgreens, Bed Bath & Beyond, Constellation Brands, and Lennar are among the names set to report their quarterly results. Coming up here, we'll have more on the final round, plus our top take on what escalation in the Middle East means for the region and the markets. We are back with that right after this. to the final round here on Yahoo Finance. Miles Ludden with you in New York. I'm joined as always by my co-host Jen Rogers and Yahoo Finance's Jared Blickery on this Friday. Let's take another look at where the market finished. We saw the first sell-off of 2018 after a big rally to start the year. 2020, good Lord.
And we just went along with it.
Oh my God.
I was like, that sounds right to me.
The year is 2020, and the year began 2 days ago. First sell-off of 2020, Dow off 230 points, the S&P off 71 basis points. Yesterday we saw a rally to start the year. Now this, of course, coming after Middle East tensions flare up once again in this market. Yeah. Oil up about 3% on today's session. Saw a little bit of a bid in gold. The VIX had a bit of a pop, though faded some of that as we discussed earlier, Jared. And I guess, we'll get into it a little bit in just a minute here, but an initial reaction on today's market reaction. I mean, in some ways, it felt like it wasn't much considering, what some corners of the news cycle last night were suggesting this event was really about.
Yeah, definitely. It just shows you how much complacency there is inbred in this market, and it's been here for a long time. Not necessarily that it's a bad thing per se, because the worst could be over. I think that's the low case possibility, but you have to respect the price movements, how muted they were, because crude oil was up 5% at its high. Now, when they had the Saudi Aramco strikes a few months ago in September, it was up 15%. Yeah. And then the very next day, it closed down by quite a bit. And after a few weeks, production was up, and it was kind of a non-event. So we'll have to see how this unfolds. But I think what one of the previous guests said is, we don't know how long this is going to take. They might lay low for months. That would be the Iranians before they retaliate. Yes.
So for more on today's market action, let's go to Scott Gayam on the floor of the New York Stock Exchange. Scott, this is the last time we're tossing to you. We're gonna get. I gotta note that and let you have a moment too. I mean, there's today's market action, but you've been down there for us for over a year. Put this in some context for us. The journey that we have all been on with you, Scott Gayam.
Yeah, it just seems like yesterday we were covering the December 2018 sell-off. I think that was really the highlight of my time over the past, year or so covering the markets, at least right here on the floor. And of course, the dramatic rebound in stocks that really happened 1 year ago tomorrow. It was the Friday a year ago, January 4th, when Jerome Powell had that speech in Atlanta, and he finally used the right words that kind of calmed the market. And that's when the market started to undo the damage that was done in late 2018. But it's funny, we really haven't had geopolitical worries so far over the past year, really not since the North Korea issues. And so this is really the first time in well over a year that the market is dealing with a geopolitical issue, right? We've had trade and Fed issues, but not really tensions out of the Middle East that have meaningfully moved the markets until today. And to Jared's point earlier, the market movement was rather modest to the downside. And so I think investors right now are trying to figure out if this is a one-day move or the start of something deeper. And I think that will largely depend on what happens next geopolitically. But clearly there were enough sellers coming out today to push the major indices down. Because remember, yesterday, all the three major indices closed at record highs. It was another day of a trifecta of record closes for stocks. Now, today, we did see some extra selling in the airline stocks, whether it was American Airlines, Delta, United, all those stocks down well over 2% today. And of course, you did have a spike in oil prices. Now, that's never good for the airlines, but you'd have to really see a prolonged period of elevated oil prices for the airlines to take notice. But also, when you have geopolitical tensions, that could raise fears of consumers flying and traveling less. Now, again, that's probably too early to make that judgment, but certainly investors tend to have these knee-jerk reactions, Jen.
Scott, before I let you go, I gotta say, I'll never think of Boeing shares the same way.
That's so funny.
After having spent a year and change hearing you give us a daily update on shares of Boeing. Really the story of Scott Gayam's life, if I had to say it.
Well, let's hope they get it fixed. And look, Boeing is a high-priced stock, and the Dow is a price-weighted index, so I'm sticking to the script.
There you go.
Now that you don't have to, like how you can't pick a favorite child, but now they're not going to be your children anymore. What is your favorite Dow 30 component?
Dow.
Wow.
It's Dow.
Now you're putting me on the spot. Well, look, I've always been fascinated, at least this year, by the movements of Apple and Boeing. And so many days you'd have one up and one down, and it would be this kind of tug of war. And then really in November, it was fascinating to see other Dow components like Disney take on some more leadership. And by the way, in mid-November, Disney was really the reason the Dow rocketed to 28,000, and we wore the hats and we celebrated. It looks like I did not make it long enough to see Dow 29,000 live, but I'll be watching you guys, everywhere. So, Dow 29,000 will likely come.
Every round number, we will bring Scott back for a special appearance.
We'll make sure to
I'll call it.
remember his hats and the milestones. Scott Gayron, we're going to miss you. Fantastic work. We've really enjoyed having you on the final round. Thanks a lot. We'll be watching Boeing and Apple for you now.
Thank you so much, guys. It's been a pleasure. Really appreciate it.
Let's turn to our top takes and let's stick with the markets here. Let's be clear, 2020 for the markets is definitely going to be different than 2019. At least that's what we're thinking after the last 24 hours. While fundamentally things are the same, that's not what we can say about the future of oil markets, likely escalation in the region. We've been talking about that all show. But does the overall story for the market actually change? The economy is still chugging along. The Fed is staying put. And Miles, you asked this as a question earlier. This idea, I think, that the news today overshadowed some actual economic data we had, or the Fed minutes. There's other news in here about what's going on, or does it all just become about geopolitics?
Well, I think the answer is no. It doesn't just become about geopolitics, because the answer has been so loudly, yes, it's all about the Fed for so long now. I mean, 2019 was but one example that we have seen over the last 10, 11 years of how much the Fed really drives where the equity markets go. And I think that a lot of people get very emotional about whether they agree with Fed policy or whether the Fed should be doing this, or shouldn't the market be reacting more forcefully to news like this. But, what's the mantra on this show, right? You just have to know what the market's going to do, right? You don't have to sit there and say, but I'm smarter than the market that should be reacting to this. The market does what it does. And so, yes, today we saw a negative reaction to some pretty, important geopolitical news, but in a vacuum, 80 basis points on the Dow, 70 on the S&P. I mean, that's kind of fine, you're going to have those days. So I don't think the story changes in terms of what the market reacts to, which is always expectations for the economy, right? Doesn't matter what regime we're in, it reacts to expectations for the economy and how the Fed will handle those. So what we saw in 2019, the market started to price in better economic times ahead, and that the Fed would be accommodative through those times. I don't think that this news changes that story.
Yeah, I'll tell you, the interesting line of the day for me, and this is outside of the geopolitical discussion because we've talked about this all day, but Loretta Mester was in an interview with Bloomberg TV, and I only saw the headline, so I don't have the context, but it said something like, the Fed is on track to reduce its balance sheet to levels seen in September, which is basically erasing $405 billion. I don't see that happening. Again, I want to find the context, but are there really people at the Fed who think, oh, we're just going to shrink the balance sheet again with no repercussions? Because I can tell you the stock market, not going to like that.
Do you know anyone that gets emotional about what the Fed's doing?
I do. I do. I'm emotional right now. Can't you see it?
And then the minutes today, suggesting they would end that repo facility sometime in the middle of this month. I kind of would be surprised. I don't know why it's not a standing repo. They should just come out and say it's going to be a standing repo. It's fine, right? If they need to be in the market because of various reasons, they can just say that. But
if they're still, because we're still having daily auctions till at least the middle of the month, if they're still taking, this would be the primary dealers down like 30, 40, $50 billion at a time, that's going to be a huge problem.
You can't just do that.
You can't just,
My take is it's way too early to decide.
Because it's only the third day of the year.
Of the decade.
I need way more time.
Well, plus you've only been in the office since this morning.
Also, we heard from everybody on the retaliation. It doesn't have to be over the weekend. It doesn't have to be Monday.
No.
We have an election that's going to take a long time. We have many issues. It's too early for me.
I thought it was 2018, so.
You're still writing 2018s on your monologues.
Yeah, you did better than I did. All right. Coming up here on today's final round, Menelaus Oz Perlman stops by to talk about his new show and prior work on Wall Street. Also, I believe he's going to play a trick because he talked to these guys and not to me. First, we're going to take a look at where airline stocks traded on this Friday.
Our next guest won 3rd place on America's Got Talent, also won an Emmy for his show, O's Nose, but he's actually began his career on Wall Street. Joining us now is mentalist Oz Pearlman. So,
go figure.
What Wall Street? That's like where all the money is made.
Tell me about
where
it.
Everybody wants to
Money's
go.
in TV, obviously.
Obviously, that's why
Yeah,
we're
that's why
here.
we're on the internet.
Why did you leave Wall Street?
Why did I leave Wall Street? I think that I loved it. It's still a passion, but it wasn't my calling. So I'm in the office. I was actually kind of red tape. I did a lot of stuff that wasn't necessarily trading, but annoying other people that were trading. So the way I would sweeten the deal is perform magic, mind reading stuff for them. It's a great way to get inside clients' heads. And next thing you know, I did a party for the CFO of the company at the time. I did a trick where ones turned into hundreds, and he's like, why don't you start working here? And I go, I do work here. He didn't know. And then he goes, why are you working here still? And it really shook me up. And I said, you know what, maybe this is the time to go for it. And you only get one chance to live, so I went after my dream.
I mean, when did you start doing, would you call yourself a mentalist, a magician? Like, when did you start with this whole thing? And when you were, going through high school and college and actually working, is this always something you found yourself doing on the side? Or did you put it down for a few years before you said, you know what, I can't get this out of my head?
So magic is the foundation of mentalism. Almost every mentalist, it's like being a plastic surgeon, you had to go pre-med first.
So you started with card tricks and all that stuff.
Exactly. My first love, card tricks, coin tricks, sleight of hand. I would fool your eyes with quickness of the hands, or see how you look there? That's misdirection. I didn't tell you to look there, but when you did that, what if I slipped something over here?
Right.
Mm-hmm.
So the key is knowing how to influence people's minds, and at a certain point, magic, when you get to mentalism, you don't need props. I can do a show for 3,000 people with nothing. I will show up and people go, where's the show? I go, I am the show. So I don't really need props anymore. I know the way people think, and that's kind of, the path where I don't need props anymore.
No Gallagher.
What's that?
Gallagher, the guy with the water.
Good reference.
Dramatic.
No watermelon, less messy.
Yeah.
I keep it simple.
I like that. Yeah.
You know what? Great question with card tricks. In the markets, why do people watch you? Because volatility, uncertainty. If you knew what the markets were, there'd be no show. There would be nothing to do with the stock market. You just know what to invest in. So let's give this a shot. Speaking of certainty, how about this? I brought a deck of cards, which is rare.
All right.
Because I don't usually have cards. And
Even though they're your first love.
What's that?
They're your first love.
They are
you
my
said.
first love. Can we get in tight? I wonder if you can see these. I gave them a mix, but don't trust me. Miles, mix them up. No, give them a mix. 52 cards in a deck, 52 weeks in a year. When you're good, put them down for me. Just face down, whatever, so we don't see.
That's fine. I trust the mix.
Don't trust me. Mix as much as you want.
I'm comfortable.
Trust the mentalist.
Now, uncertainty is when you don't know what's going to happen. What I want you to do right now is you're going to lift off a piece. You might do a little, you might do a lot, whatever you want. Lift off a chunk. Go ahead. Don't show anybody what it is. And do this before you do this. I want to make sure they can't see. Can I do
I'll
one
cover
favor?
my eyes.
I'm going to turn this way. Put your hand right on top. And lift off. Make sure lift off a piece straight up. Go and bring it right against your body. There's no way I can see or you could see. Jen, open your eyes. I want to try this differently for you.
All right.
Because this is the known. He knows there's deck cards. He looked through them. He mixed them up. The unknown is, picture this. You have an invisible deck.
Yes.
And put your glass down and imagine, you've spread these out and you look through them and you know what? You're not playing with a full deck.
Oh, no.
Join the club. That's what people say to me. And you realize, and you start looking around and you reach in your pocket and you go, oh my God, I found one. One more card, take it out.
Okay.
And hold it up right there. Fair?
Yes.
And bring it close to your body. Now, what's the day? The New Year started was January 7th day. What's the day? I'm out of my mind. Okay, sorry. It's been a rough couple days. What do we know for sure? The way you can track markets, you can track things. A month from now, what holiday are we going to see a lot of consumer spending?
Valentine's Day.
Bam, there you go. Godiva, what do they sell?
Chocolates.
Going to buy a lot of chocolates. De Beers, what do they sell?
Diamonds.
Right, you're going to see all different things that people are going to buy, and you know in advance what sales are going to do. It's seasonal. So hear me out. What you just did could have been anything. You could literally have any card in your hand. You could have cut to any card. Tell us all, hold it up with pride. What's that card? What invisible card you pull out of your pockets?
I pulled out the 7 of diamonds.
Did I tell you to do that? Did I make you? Is there any way, shape, or form?
No.
Here's the thing. You ready for the weirdest part? Yes, I did. Because what did I just say? I said it was January 7th.
But I
De
already
Beers,
pulled
De
it.
Beers, hold on. De Beers sells.
That's all diamonds.
She has the 7 of diamonds. Show us. You could have cut anywhere at all. Show us what card. Show us right now. Turn it around. What card do you have right there? Right there. Show the camera.
That is very weird.
It
How
could
does
have
that
been
work?
anything. I want you to see
That's
this. I want you to see
amazing.
anything.
Because the thing
Anything.
is-
Jared.
Yes.
Oh my God.
That's amazing.
It gets better.
That's
It
good.
gets
I like
better.
this.
All right.
This is why you watch this shit on YouTube.
You live.
Right. We're allowed to swear.
You live.
It's
Do you live
Friday.
in Manhattan?
Yes.
I just recently moved to Brooklyn. Weirdly enough, I used to live across the street from this studio, right here on 9th
Wow.
Street. It's a beautiful area. I want you to imagine something that we couldn't know. It's impossible to know. If you go in an Uber, you put in your destination, right? You have to. They don't let you go anywhere otherwise. You go outside, you flag down a cab. It's just one of those days you say drive. And you have no idea where this person is going to take you. I mean, literally, right now, look in that camera, you don't know because he doesn't even know. You get in the cab, you say drive. You hand the person some money. You start looking outside, you see neighborhoods, you see things. Visualize this in your mind. I want you to close your eyes and imagine this happening. Close your eyes.
A brand new place.
No, you're missing it. No, you're wrong. Open your eyes. There's no brand new. You're missing it. You don't know where you're going to go.
Okay.
So even saying brand new is wrong.
Right.
Right now, you couldn't know because it's happening in real time. So you're being driven, and close your eyes, and imagine you're going north, you're going east, you're going south. I can't know this because he doesn't even know this. And then you go, and then you turn around, and you kind of lose track, and you stop, open your eyes. And right at this moment, craziest thing in the world happens. You open the door, you go perfect, and you get a deja vu when you get out because you are right there, cross street, your favorite one. Your favorite one in Manhattan. Let me ask you a question. Is there a reason why this cross street popped in your mind when I told you to think about your favorite? Is there a reason?
Yes.
Would they know it?
No.
Okay. See what I did? I watched him. I know where we are. I mentioned it. 9th and Broadway. I said north. I said east. I said south. I said west. I saw him going. And I even told me brand new place. I made him change his mind in the middle.
Mm-hmm.
Close your eyes, please.
All of us?
No, I want everyone else to see Miles.
Okay.
Wake up. I'm going to show the camera just so we can see this.
Yeah.
Those are the two directions he went from here. Open your eyes. This is not where you live, is it?
No.
See, I didn't think so. That would have been too obvious for you. No one's favorite is ever where they live. That's the usual. It's where you never go. Right? It's all about the destination, sometimes the journey. Close your eyes. Can you swear to us, Jared, and just get one shot of what I'm doing? Your eyes are closed. Can we get one shot of this? That before I walked in this room today, you had never met me, never spoken to me before in your life before I got to this studio.
Technically, I met you the last time we were here.
Oh, okay, well, this guy, really, we got some real due diligence here. But before then, had you ever thought of this? Open your eyes. Tell us all, which direction from here, open your eyes, which direction did you envision on a compass that you were going?
Ultimately, the destination
Yes,
is
where
west of here.
West of here.
Yeah.
Just west.
Yeah.
Your favorite cross street.
Well, see, I didn't end up at my favorite cross street.
Oh, well, I think I'm confused. Because that's where the cab driver dropped you off.
Well, yeah, you said he dropped me off there, and it was my favorite spot, but I have yet to realize this is my favorite spot because, well, have I ruined the entire segment now?
I'm not getting paid. You didn't ruin anything for me. But let me ask you, because the mind works in different ways. I change my mind 10 times a day. The grass always greener. You said the ultimate destination. So you went west of here.
Yeah.
Does that mean you were thinking of going somewhere before that?
Yes.
Where was that relative to here?
North.
North what?
Northeast.
What was it? What cross street did you end up at?
72nd and East 2nd Avenue.
72nd and East 2nd Avenue. You asked me to ruin anything? You didn't ruin a thing. You didn't ruin a thing.
Why were you going there?
And wait, we've got to
That's where
give.
my favorite hospital is.
Oh my
That
gosh,
is an
this
unusual
is
choice.
crazy.
But Jen,
Hey, you got it.
How did
what
you
do we
get it?
have?
And you went west? Oh my God.
what's going on in the Middle East right now?
That's
How's
good.
that going to shake out, right?
amazing.
Wait, I'm giving
Can
you
you tell
something.
us?
I don't know. I wish I knew.
Jared will tell him.
Here, roll the dice. Grab those for me, Jen. I kept it red, white, and blue. Patriotic.
Do you want me to tell you what they are?
No, I
Or
can
I'm
see.
gonna-
I can.
Okay.
This was the most amazing moment. How much time do we have? Do we have a couple more
Whatever
seconds?
you want.
We got till 5.
No, Jen, I'm going to turn my head.
Okay.
And you know what? Just roll it in front of me one time and tell us what we got.
Okay, we got 3, 4, 6.
So it's so funny she said that. I like that. If a craps player would have added them up.
Yeah, 13.
Right, but 13, 6, 6, 6, people say a lot. That's 18. There's not a lot of options. But when you make 3 digits like that, well, suddenly you have hundreds of options. So Jen, I want you to roll it again and make sure, Miles, keep it on me that my head is turned the whole time. And Jen, when you do this, there's cameras and things. So I want you to roll it and cover it up immediately with your hands.
Okay.
Roll it and cover it up immediately with your hands. There's no way I could see. Have you done that?
Yeah.
And I want you to make the biggest number or the smallest number out of those 3 digits. It's up to you. It's up to you. Don't tell me. Cover it up. Have you done that? Like
yeah, hold on. Okay.
Don't add them. Just whatever
I know.
3-digit number.
I got it.
You got it?
I got it.
Is it covered? Can I turn my head?
It's covered. It's totally covered.
Psychologically, most people, especially viewers of this show, are people that want alpha, right? They want to get a terrific return. That's why they're watching you. So most of them would automatically, when I said go bigger or smaller, bigger is better. They would have gone bigger. Jen knows that I want to do that. So would she have been a leader or a follower in this situation? Did you end up going with the biggest number?
No.
See, she knew that I wanted her to do that. It's clear cut. I even told you that's what she knew I would want. So your number, is it the smallest or kind of a middle number? Like of the digits you made with it? Was it just the smallest number you could have made?
Mm-hmm.
Look at me.
Yeah. Smallest number.
I know. And here's the weirdest part. The numbers, they build.
Mm-hmm.
First number's small, second number's a little bigger, third number, 1, 4, 6. Is that what you're thinking of?
Yeah.
Show them all. Show them all.
So weird. 1, 4, 6.
Yeah, but the other way.
Yeah.
What's there? 1, 4, 6.
I
Now,
can
Miles,
verify that.
That's
was true.
crazy.
Let's go ahead and do 8 digits. Think of your social security. No, I'm totally kidding. Totally.
Yeah, I got you.
He's like, don't do it. We're on air.
How do you do the hospital? This is so fun. All right, sorry, you're doing a trick. What is he thinking?
That's it. I don't know if I can do much more than that.
Oh, you can't. Oh, I thought.
I'm not going to
Walk on water.
Nice.
Love it.
That's great.
But where to see more? Monday night, you got to watch me. I will be on TV's #1 rated show. I'll be on America's Got Talent Champions. They bring back.
This is like the only show on TV that isn't football that actually gets in the top 100 of ratings.
That is true. I wonder how Monday Night Football does versus it, but it's massive.
How will it
summer,
do?
It's #1. What's that?
How will it do?
How will it do?
Is that the score?
I don't know how it will do, but hopefully I'll do very well. Fingers are crossed. I'm reading the judges' minds.
How hard do you have to work at this all the time? Or do you just you can just coast?
You can coast, but I think it's like anything, the status quo. If you coast, somebody new, young, hungrier is going to come up above you. So I'm constantly trying to reinvent, figure out new stuff. My core competency, because of my background in Wall Street, is corporate events. I do sales meetings, I do kickoffs, I do huge conferences, CEO summits. If you name a large financial institution, it is a 99% certainty I've performed for them. Hedge funds, private equity firms, all the multinational banks. Because I know the business. Like if I wasn't doing this, I might be doing this. So I very much am into the markets, and I love finance.
Do you follow the markets?
Big time.
So what are you looking at right now?
So I'm a boring guy. What's in the O's portfolio right now? So I'm doing something called the CNBC stock draft. I don't want to knock a competitor.
Oh, yeah. No, I've heard of that.
The
Great.
celebrity stock draft, and I was in first place for 8 months. I took a tumble. I still think I'm going back strong. My play was Bitcoin at the time because it's a volatility play, and I think that Bitcoin is an asymmetrical bet. It would be foolish for somebody to not have at least a single-digit percentage of their portfolio in it because nothing else that we know, I don't care if it's Amazon, I don't care any blue chip stock, will never jump by 1,000% in the next few years, and that's a virtual guarantee with Bitcoin. It just is. It's not going anywhere, and we're going to get more and more tied into computers, and there's just no way. Especially with the more things like this happen, fiat becomes a little bit, I don't know, we'll see.
Interesting.
But yeah, in terms of other companies, Amazon's going to keep going strong. I wish I had bought Target. That was something on the tip of my tongue.
That's the Yahoo Finance Company
The ultimate
of the year.
2020 hindsight right there it is. It should have been.
It was our company
88%
of the
jump.
year.
Even Ross.
Yeah,
I buy things at Target all the time. I'm helping their bottom line.
There you go, the old Peter Lynch thing, right?
Yep.
Well, you made our day.
Thank you. You made mine.
This
Yeah,
was
on a
great
down
fun.
day, and Miles is sick, and
I know, I
just
feel
a
better
dreary
now.
January.
Great way to end
I was gonna
2018,
say,
am I right?
I've got 7 minutes till I can take a nap.
This is amazing. Oz Perlman, thank you so much. We'll be rooting for you on Monday and following everything that you do. Jared Blickery, have a great weekend. Visualize where you're going to go.
That's right.
Your ultimate
72nd and
destination.
seconds.
There you go.
right.
And,
The other one was in the 30s, am I right? You did something unusual. It was near
was-
Madison Square Garden.
It was 3rd and 12th Street.
All right, so you got
3rd
the
Avenue and
three.
12th Street.
Oh, that's not that west of here at all. This guy's really mincing. We're on
He's a tough guy to
We're on Broadway. I think it's technically east of
Oh, you
here,
know what?
4th Ave.
My bad. It was 6th Avenue and 12th Street.
Okay.
There you go. Close enough. All right, Oz, Jared, thanks so much. Coming up here, we'll have more on the final round right after a short break.
Let's take a look at where the markets finished for today. And they were down. They were down. We had basically every sector except for two were lower.
That's right, real estate higher.
Yes, real estate. I think utilities was a photo finished at the end, but I think it pulled it out. You can see the Dow was off more than 200 points. NASDAQ, S&P, both lower here as well. Of course, this follows the U.S. strike against Iranian General Qasem Soleimani. We also heard from the president this afternoon. President Trump coming and speaking from Florida at Mar-a-Lago just around 3:20, saying that he's not looking for regime change in Iran, but defending the move and the target as well. And we are all waiting, although all of our guests have said could be a while, for some form of retaliation from Iran, which most of the guests have said will probably be asymmetrical as well.
In the meantime, we can do card tricks and mental games, and I'm still shook from Oz Perlman. Everyone missed it. The trick that he just did in the break.
It's amazing.
Has me really
I don't
to
know
my
how
core.
he did it.
Because the thing is, I knew Jared was gonna do a thing that would cross him up.
Yeah.
I knew that would happen, but then he still got it right anyway. But I'm easy to read, and so he had me over a barrel like that.
He's a mind reader.
I know, but when you especially give it away, you're like, oh my God.
And it was also Scott Gam's
great.
last show.
Oh,
yeah, Scott Gam. So that was fun. It was good to know. He would not have picked Intuitive Surgical. Scott Gam would have picked Boeing.
Well, okay, but the only thing he says, you couldn't pick Apple or Boeing.
Yeah,
That's the only instruction.
You couldn't do that. Well, that's going to do it for us from New York. I'm Jen Rogers with Miles Udland. This is the final round on Yahoo Finance.